Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg Anne-Marie Maneth.
Laura, thank you very much. Coming up on the show, we speak to Clifford Abrahams, the CFO of ABN AMRO, after the Dutch bank beat the street on the net income. What's the score on provisions? We'll discuss. This is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
We would love, at the right time and the right way to have a digital bank license. We would almost certainly do that in partnership with a strong local partner, and we would use the technology and the experience that we've gained from Mox in Hong Kong.
Give you a sense of the real-time action. The 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
It is Daybreak Europe. I'm Anna Skrenny in Dubai. I'm Marie Horden in London HQ. ABN AMRO posting their better-than-expected profits for Q3. Setting aside losses for money to cover potential loans, that got better. That's been plaguing the Dutch lender through the first half of the year. Clifford Abrahams is the CFO for ABN AMRO. He joins Anne-Marie and I now. Clifford, always great to have you with us. The word that stands out for me is caution. So let's apply that to a couple of parts of this narrative. The caution, the loan losses have got better. You use the word cautious. As we go into COVID 2, lockdown 2, can you really call the bottom of this loan loss provisioning cycle as you sit there today? Good morning.
Yes, good morning. Look, we're pleased that impairments have moderated this quarter. We had impairments of little under 300 million euros. That's well down from the 1.8 billion that we incurred in the first half of the year. So we're pleased that impairments are lower. We expect impairments for the second half of the year to be lower than the first half. And indeed, we expect impairments next year to be lower than this year. So whether we're at the bottom or near the bottom, it's hard to say. We're cautious. We see positive developments on vaccines, but the economy remains uncertain. And certainly in our core markets, reliant on government support. We'll know a lot more when that government support starts to phase out through next year.
So it was a good quarter in terms of loan loss provisions, but you're still quite cautious. What about the dividend? Will you pay a dividend for 2019 once, of course, the ECB language comes out and they potentially lift that in December?
Yeah, you're quite right. So the ECB has a recommendation in place. For 2019, we declared a dividend in February, but we didn't pay it and we reserved it. And it's a quite important part of our capital right now. What we've said today is that we'll consider the payment of that dividend at the end of the year, so that's February this year, depending on conditions and prospects at the time. So it's just too early. We're being cautious, you'd expect from a bank. And while we're hopeful that the economy will respond to the developments in vaccines and so on, it really is early days.
Clifford, isn't the truth that none of us really know how we're going to come out of this, vaccine or not. There are parts of the economy that are permanently scarred. So what do you see changing the most in your business post-COVID as you go into 2021, hopefully with the vaccine?
Yeah, in terms of our business, I think in common with many sectors, we've seen COVID accelerating trends, accelerating developments. So in the Netherlands, which is our home market, we've always been ahead on digital developments, and Dutch folk of all ages, like using their apps and digital technology. And we've seen a step change in that adoption. So I do expect more digital banking, more video banking, like we're doing right now. So nearly all our mortgages are conducted via video banking, where people like the face-to-face service, but they get that in their kitchen and they don't need to go to the branch. And what we've seen in the Netherlands, with rates low, house prices, house volumes have continued, and people are quite happy and prepared to make really big decisions through video banking without coming into a branch, and we welcome those developments.
But are you still on track for your a little bit over 5 billion euros in annual cost target for 2020?
Yes, we are, and you can see we're very much on track for that 5.1 billion cost target. That in the digital world that we're working in, it meant quite a bit of disruption at the bigger part of the year, but right now, clearly none of our staff, or very few of our staff, are traveling. We've progressed with our cost-saving programs, so we're pleased to say that we're on track for the 5.1 billion. We're also working towards finalising our strategy for an investor update at the end of November, and at that point we'll give more guidance on how we see costs going forward.
David, given the turbulence of the year, do you think that you can still hit the 10 to 13% return on equity that you had, and the cost-income ratio, I think it's 56 to 58%. Do they still stand? Will they be achieved?
We gave those targets some time ago in a different interest rate environment. And clearly this year we're not going to be hitting those targets given our performance year to date and our outlook for obvious reasons. And we'll plan to give an update on targets at our investor update at the end of November. I think we're pleased to do that. We have a relatively new CEO, and he's keen to set out his vision for the business, despite the uncertain times we're in. We think it's really important that we set out.
Clifford, can I just push you a little bit? I know that you're going to update the market, but just how much are you going to miss these? Is it going to be a sub 10%? Are you going to burst on the cost? Just give the market some indication.
Yeah, look, as I said earlier. Yeah, no, I think, and you see consensus out there, which has us, close to break even this year. So that's close to zero ROE this year, 2020, and the cost-income ratio, clearly higher than that range, reflecting pressures on income. I think that's in common with all banks across the sector. I think the key thing for our investors will be what's the long-term outlook, and we'll update on targets as well as our broader strategy at the end of November. But what I would say is that we need to be realistic about calibrating targets in what we still are in the middle of a pandemic. And we'll be focusing on those things that we can control as a bank, our costs, our digital programs, our target client segments, and so on. We've recently decided to focus here on Europe. You'll be hearing more about that and how we can win in our focus markets. But clearly in an environment where there are many things we can't control, we'll be cautious about targets, and I hope our investors will be realistic about what they expect at the end of the month in that context.
Cautious about targets. Thank you so much for joining us, Clifford Abraham, CFO of ABN AMRO. Madness, we just also have had some breaking news in the past few moments. This comes from Continental. The red sticky is that they seize a new full-year adjusted EBIT margin about 3%. Estimate was for 3.62%. So they have a new outlook for fiscal 2020, it seems like. Didn't give details, though, of expected fourth quarter restructuring.
No, and you just think about the implosion that we saw in some of those big cyclical industries during the COVID crisis, Anne-Marie. But of course, the question is this: as we come out of COVID, are you going to want more cars of your own? Are you going to travel more on your own? And that's got a whole set of complications around that. The whole ride-sharing, car-sharing world is going to be different. Who thought we could get excited about tires? You and I can make anything exciting. Coming up.
Yeah, certainly.
Let's talk about the NASDAQ whale. Absolutely. The NASDAQ whale, Anne-Marie, apparently the person is back because we don't know who the person is. Options in large cap technology are being closed out ahead of their expiration. What does that tell you? Is a big player like SoftBank behind the move? We discuss. This is Bloomberg.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
I'm David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
Good morning. Bullish options in large cap stocks are being closed out before they expire later this month. The options mirror a structure used this summer by the so-called NASDAQ whale. This leads to speculation that SoftBank may be behind the moves. Danny Berger's been tracking this, I think, the entire summer. So, Danny, is it that it is SoftBank closing out their position?
And we certainly can't say for sure. What we do know, though, is SoftBank does still have outstanding positions in their trading unit, according to briefing materials they released just this morning. But look, what we do know for certain is that options on some of the biggest technology stocks like Microsoft and Apple were closed out, and those positions mirror pretty well what was put on in August. And those August positions themselves sound a lot like what SoftBank has described as their own strategy. So you can make some speculation around that, and certainly a lot of people have. These are call spreads. In other words, it's a more conservative way to bet that a stock will go up. I should say these were sold at a loss. These positions were closed out with whoever did it, possibly SoftBank, possibly not, making a loss on these. And you have to think if you're bullish tech, that position hasn't been doing well as of late. These options expire in 9 days. The situation might not be getting any better considering the vaccine hopes have really been crushing momentum and tech names. I should also add Masayoshi Son has come under fire as of late. SoftBank had its earnings yesterday. They had a late night briefing call. People on the call told Bloomberg that Son faced a lot of scrutiny about why he's doing this trade when usually they do long-term tech. His answer, if there is spaghetti, this is the spice. I'm assuming the short-dated options are the spice he's referring to. Anne-Marie Manis.
There's a lot of spice and spaghetti in that hit. I got that at the end. Danny, well done. A lot of alliteration. The fast and furious Danny Berger tracking the whale. Anne-Marie Horden, one fang right does not make a rotation.
Yeah, we're out of time. That does it for Manis and I. Anna's up next with the European Open. U.S. futures higher after fluctuating. European equities lower. This is Bloomberg.
We don't have a sort of fixed order of use of tools, and I think that's appropriate. It would always be dependent upon the state of the world and the state of the economy that we found ourselves in.
We explore the trends, investments, and competition of the European ETF industry. Join us on Bloomberg ETF IQ Europe.
Good morning. Welcome to Bloomberg Markets, the European Open. I'm Anna Edwards, live in London. The cash trade is just less than an hour away. Here are your top headlines. Risk on rotation. A move out of defensive tech names picks up steam, and a Chinese crackdown wipes almost $260 billion from Alibaba and Tencent. Another hurdle cleared. EU negotiators move a step closer to unlocking a €1.8 trillion pandemic package. Meanwhile, Italy considers spending €10 billion a month to support business. And Biden's early warning. The president-elect uses his first call with Boris Johnson to reaffirm his support for the Good Friday Agreement. Lots to talk about this morning then. Good morning, everybody. So just under an hour to go until the start of the European equity trading session. And futures look fairly flat, actually, right now. FTSE futures, DAX futures, Eurostoxx 50 futures, a bit of a mix, as you can see there. In yesterday's session, Europe was up pretty strongly, up by around 1.5% or more than 1.5% on the major markets by the close. So this is the context we come into today's session with. And, of course, a continuation of themes of the previous day, really. Selling out of tech, getting into value, all on the back of the news flow surrounding that Pfizer-BioNTech vaccine. Let's get to US futures. US futures looking a little bit more buoyant, and some of that perhaps to do with what we didn't see in the US session yesterday. Things were not quite as strong across the board. NASDAQ down by more than 1.3%. So US futures actually looking fairly positive. And interesting to see NASDAQ futures in with the pack there. That has not been the case over the last couple of days. So have we seen that rotation playing out in terms of the tech versus value story? Certainly it's still in play in Asia. If we put up the GMM, you'll see where we are on the Asian equity session. And interesting to see the Japanese equity market doing quite well, but that's not the case everywhere. We see other markets moving to the downside, as you can see in China. And part of this is to do with what's going on with tech. A crackdown on monopolistic practice in the tech sector in China. A huge amount of money at stake there. We'll talk about that shortly. We see the US dollar a little bit weaker. The New Zealand dollar moves to the upside, paring back on negative interest rate expectations. No cash treasuries today. It's Veterans Day. Keep that in mind. Oil continues to make gains as if it were a couple of days ago, in fact. But we'll keep an eye on the oil price. 44.29 is where we are on Brent. Now, Alibaba has kicked off Singles Day, the world's biggest shopping spree. That will gauge the strength of China's recovery. But the strong sales have been overshadowed by a technology sell-off in China as Beijing cracks down on the internet industry. Let's get to the markets now with Bloomberg's Markets Live strategist, Mark Cranfield, who joins us from Singapore. Good to speak to you, Mark. I'm looking at some incredible one-day moves in some of the big tech names in China, down by, single-digit percentages, but substantial, but, sizable ones. What is the backstory here? I guess investors obviously didn't see the extent of this coming.
No, I think it's a surprise to some people, particularly outside the region. The Chinese authorities have decided that they want to rein in some of these major players. As you mentioned in the news, Tencent and Alibaba are two of the huge companies which operate in China, and their shares are leading the downside for the major tech companies in China today. Their listings on the Hong Kong market have helped to keep the Hang Seng under a little bit of pressure, even though there's that rotation going on to value stocks that you mentioned about. But the Hong Kong tech index is down more than 5% today, which is pretty remarkable, considering it's a decent day for the Nasdaq. The underlying story really is that some of these major companies have been trying to get into the banking sector through the back door. They've been lending to small and medium-sized companies and individuals as well, without going through the usual procedures that the banking sector needs to. And China have decided that they need to rein that in. They want to be responsible for how lending is done in China, not these internet-based companies. And so that was part of the reason why the Ant IPO was suddenly stopped by the Chinese authorities as well. So it's all related to that. So it's trying to bring full control of the credit sector back under the authorities in China, and the net result is that you're seeing a big set-off in tech stocks because of that.
Yeah, really interesting. I mean, shadow banking had been something that China has been wrestling with for many years, but this in a different sort of shade, a different flavour of shadow banking, if you like, and certainly coming from a different place. Let me ask you the question of the day, Mark. I was looking at the oil price, and it's continuing to rally, even if the rally in risk assets we've seen of late has maybe stalled elsewhere. Oil prices continue to pick up, but we're not back to March levels at all, are we, on oil? I wonder what you're hearing on the Markets Live blog when you ask this question today.
Yeah, I think a lot of people are saying that until you see a much more sustained global economic breakthrough, then it's going to be pretty tough for oil to get anywhere close to where it was earlier in the year. Although Asia is reasonably open, although travel is not, you can't completely travel anywhere you like in Asia, but the economies are doing fairly well. But that's not the case, obviously, in Europe and the United States. So while people are stuck at home, they're under lockdowns, business is restricted, none of these things are favourable for the oil outlook. Plus, there's not a whole lot of agreement among the major countries about how much they should be pumping. So demand is well below the kind of levels OPEC would like. Plus, they're not that united as well. That the whole picture is not really conducive to oil staying strong for very long. There may be sporadic rallies, but it's going to be some time before oil prices really sustain the high levels we saw at the beginning of the year.
European stocks then look fairly flat in terms of the futures this morning, looking for some new momentum. Perhaps that won't come from the seemingly quite big story, the agreement around the European budget that we had in the last 24 hours. What are you looking for next then, Mark, in terms of adding some momentum back into these markets?
Once again, it looks as though we're heading towards the central banks. Christine Lagarde does speak today as it happens, and we just had one of the Spanish central bankers speaking earlier today saying that the ECB needs to address deflation. That's probably another way of saying they'd like to see more easing or more bond buying or something along those lines. So really, when we don't get enough in terms of fiscal policy or when there's lockdowns, it all heads back towards the central bank. So a lot of pressure on the ECB to come up with something. Maybe we'll get some hints about that today, that what they're going to do in December to help out. But also, we're getting a bit of a spike in bond yields as well, which the ECB might not be too keen to see. That was caused by New Zealand holding rates earlier today. Thankfully, treasuries are closed today, so you won't see too much disruption from there. But clearly, there's some uncertainty in the long end of the bond markets that will feed back as well to cause some distress in Europe. So they really will be looking towards Christine Lagarde to try and calm everything down and reassure them that she will do whatever she needs to do to keep everything on track.
Mark, thanks so much. Bloomberg's Markets Live strategist Mark Cranfield joining us there from Singapore. Still 53 minutes to go until the start of the European equity trading day. Let's get a Bloomberg First Word News update. Here's Laura Wright.
Good morning, Anna. Joe Biden uses his first news conference as president-elect to criticise Donald Trump's refusal to concede the election. Biden says he's moving forward regardless of legal challenges from the Republicans and the lack of cooperation from the White House.
I just think it's an embarrassment. Quite frankly, the only thing that, how can I say this tactfully? I think it will not help the president's legacy.
Italy may need to spend as much as 10 billion euros a month in virus aid. Sources tell Bloomberg the lockdown measures are estimated to cost the government about 3% of Italy's GDP if they last until March. Under softer rules, the aid bill would still be at least 6 billion euros a month. The UK is planning sweeping new powers to intervene in foreign takeovers it deems a threat to national security. It includes retroactive action on deals that complete after the bill's publication. That's a controversial provision that critics warn may deter investors. But the UK says it is in line with similar rules in France, Italy and Germany. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Anna.
Laura, thanks very much. Laura Wright here in London. Up next on the programme, risk on rotation. We'll talk about the move out of defensive tech names. If you're waking up in London, this is the sky that greets you. A beautiful morning here on the 11th of the 11th. This is Bloomberg. Welcome back to the European Market Open. 11 minutes past 7 here in London. So let's have a look at the European equity markets and where we expect to open. Futures are fairly mixed, actually, for London right now. Perhaps a little bit more momentum than we saw just half an hour ago. Euro Stoxx 50 futures to the upside, as you see. S&P futures look pretty good, up by 0.6%. And actually, Nasdaq futures also moving to the upside, which is interesting in the context of the divergence we'd seen. The Chinese market under pressure because of some heavy selling in some very big tech names there. There's an added dimension, not just the regular rotation connected with the virus that we're seeing in other parts of the world, perhaps, but the story out of China we talked about a moment ago, we will do again later in the programme. It's about regulation. Let's get a Bloomberg Business Flash, and for that, we go to Laura Wright. Laura.
Thanks, Anna. Italian payments company Nexi is nearing a deal to buy rival Nets. Sources tell Bloomberg the companies have agreed on most details of the all-stock transaction. It would value Nets at about 7.8 billion euros. It may be Nexi's second major purchase in around a month after buying another competitor, Sia. TikTok's owner is asking a US court to intervene to prevent the Trump administration forcing a sale of the video app. ByteDance is asking for more time to finalize a deal before it faces faces a ban. It planned to sell about 20% of a new entity to Oracle and Walmart, but that agreement is now in limbo after Joe Biden won the presidential election. In the gaming sector, Epic has won the dismissal of 2 Apple claims in its ongoing dispute over access to Fortnite on the App Store. The dispute began when Epic circumvented Apple's payment system. Apple then stooped new users downloading Fortnite and countersued, alleging theft. That's been thrown out, but the main fight goes on. That's your Bloomberg Business Flash. Anna.
Thanks very much. Laura Wright here in London. Now, investors have been rotating out of defensive tech names into shares more exposed to economic growth. It's a story we've been covering over the last couple of days. A new dimension, of course, is China. We'll come to that in just a moment. I'm pleased to say we're joined by Nick Nelson from UBS, head of global and European equity strategy. He's with us this morning. Nick, very good to speak to you. And you've been looking at some detail at European sectors and their response to this vaccine news. And it seems as if the gap between stocks that are sensitive to the vaccine and stocks that are not, it has closed quite substantially. So does that mean that we've done a lot of the trade, done a lot of pricing in the vaccine? Is that your assessment? Is there any more that we could do on this?
Well, yes, morning, Anna. It's definitely been, when you look at it, a case where we have seen, if you go back to almost the market low, around about March, beginning of April, we saw a 30 percentage point gap between the stocks that were most sensitive, most positively sensitive to a vaccine, and those who are least sensitive. Now, after the move, including the moves this week, that gap has closed from 30 percentage points to 10 percentage points. So I guess very roughly, we think we're about maybe 2/3 of the way through pricing in a vaccine. So obviously the news from Pfizer this week was clearly very positive, but as we all know, there's still more stages to go. There's more to do in terms of how the vaccine is, well, firstly approved and transported and administered. So we're clearly not out of the woods yet, and I think there's more to go as the vaccine gets fully priced. But yes, this week we took a very big step forward in terms of pricing the vaccine. And in particular, on the day the news broke, we saw value outperform growth by about 9 percentage points on the day in Europe, which is, of course, a massive move.
That's really interesting because it suggests that in the market's mind, 2/3 of the value of the vaccine is all about whether it works, about efficacy, and then they're sort of assuming that the other things take care of themselves, that the distribution and the safety, of course, such a big issue. Does this limit the ability of markets to move on further positive vaccine news then?
Well, look, I think naturally as we go through the next stages, the approval, of course, is the next big move. It's not just Pfizer, of course. We have the Oxford process as well, and several others, 2 or 3 others that are in phase 3 trials. So there's other vaccines that we should be focusing on the progress there. But I think, look, it's not just actually getting the vaccine out there and administering it. I think once there is a working and effective and safe, and as you say, it's obviously very important, safe vaccine, I think it could change the behavior of government. So it could make these large national lockdowns that we're seeing across the UK and large parts of Europe, those could be much less likely, and instead we could have a more targeted vaccine to those that need it, and maybe healthcare workers, and allowing the rest of the economy to operate more normally, let's say. And that, of course, in terms of economic growth and corporate profits, could be a big game changer. And the second point to make is I think consumers may well behave slightly differently if they know that there is a safe and available vaccine out there. It may make them less fearful, less risk averse. They may travel more. They may go out and spend more. They may go out and enjoy leisure and restaurants and so on. So I think that just having the vaccine there, even if you're not vaccinating, the vast billions of population, just once it's there would be helpful.
Yeah, that's some fascinating psychology right there, isn't it, Nick? Let me ask you about what you see in value stocks at this point then, because, of course, a lot of the rotation away from tech and growth into value, into banks and the like, some of that we've seen. But even pre-pandemic, we were talking about whether, and it seems such a long time ago, of course, and almost irrelevant, but even pre-pandemic, we were talking about whether it was time to get into value. So where do we stand on that conversation now?
Yeah, you're right. It's been going for a long time. I mean, more than a decade, actually, if you go all the way back, sort of post the global financial crisis. Values had short periods of outperformance, obviously coming out of the financial crisis in 2009, again in 2016, when we had the Trumpflation trade, remember that? So there has been periods where we have seen it outperform, but in general, it's been pretty brief. And year to date, the underperformance has been stunning. So year to date in Europe, you've seen value underperform growth by 50%. So that 8 or 9% move we've seen this week is really obviously only a fraction of the underperformance we've seen this year, let alone going back previously. So I think in the short term, clearly, given that underperformance, given the stretch in the valuation, and given also investor positioning, most investors have been overweight the growth, tech parts of the market, very underweight the value, the banks and energy, as you refer to. There's a possibility for this to move further in the near term. In the longer term, it's obviously going to depend how effective the vaccine is. And more importantly, do we actually generate inflation? Can we see interest rates rising? Can we see yield curves steepening? And those are the factors that we need for value to outperform sustainably. And I'm not sure we can see that yet. That's more of a 21 issue.
Nick, thanks very much. Stay with us. Nick Nelson, UBS Head of Global and European Equity Strategy. He does stay with us. Now, enthusiasm, we've been talking about the vaccine already. Up next, enthusiasm over the Pfizer vaccine is cooling down, then perhaps concerns about its deep freeze storage requirements spook analysts. We'll also dive into how Chinese tech is responding to the latest regulatory push in Beijing. More on all these stories next. This is Bloomberg.
They have been here for quite a while. They have obtained the SVF license back in 2016. They've also been granted a license for the virtual bank. They will continue to play an important role in Hong Kong.
Welcome back to the European Market Open. 21 minutes past 7 here in London, 21 minutes past 8 in Paris and Berlin. This is what we've got for you in terms of futures. So US futures point higher, including NASDAQ futures, which is interesting in itself. NASDAQ very much in with the pack there rather than going its own way, selling off as we'd seen in the most recent rally in other stocks in response to vaccine news. Euro Stoxx 50 futures point modestly to the upside. Let's talk about what's going on with tech right now. Nick Nelson, UBS Head of Global and European Equity Strategy, is still with us. Nick, let's jump just briefly to China, because a lot of the market moves we've seen overnight, yes, they're picking up on the global trends, but there's an interesting new dynamic on tech. There's another reason to be selling tech, it seems, in China, and that's to do with a regulatory clampdown on tech. What is the lens through which you view that action by the Chinese government?
Sure. Well, look, I think it's part of a broader process where, big tech in some cases becomes super powerful, operating in, markets with, in some cases duopolies and obviously very strong pricing power and massive market shares. And clearly, at some point, that's going to be an issue to regulators, whether it's Chinese regulators, US regulators, or European regulators. And I guess the lens to look at it through maybe is, even before this and before the US elections, we were seeing, processes on Google in terms of, market share on online advertising in the US and investigations into that. And I guess just, big tech is almost a victim of its own success. In some cases, it has, as I say, such large market shares that regulation, I guess, is maybe struggling to keep up with the advances we've seen in these mega cap tech stocks. And you could almost add to that as well the risk or threat of tax. And certainly that's been a case in Europe, talking about revenue taxes potentially on large global tech companies that make money across Europe and UK. And of course, there was attempts to put an OECD tax in that didn't happen in the second half of last year. But it does feel to me like there's a risk, not just in China, but elsewhere, that somewhere along the line we get a little bit more regulation on some of these large cap tech firms, because, as I say, in many cases they have very high market share.
And when we, away from the Chinese story, into the US and European dynamic that we've been covering for a few days, of course, we've seen weakness in tech stocks. NASDAQ futures actually look positive this morning, which is a bit of a change. But where do you stand on tech, given the strong rally we've seen around the work from home trades, then the relatively small sell-off, I suppose, and where are we now as we pause for thought, thinking about where the tech, this most recent tech sell-off heads?
So we're effectively neutral when we look at tech across Europe. So essentially, it feels to us like it's a sector that has over the year done very, very well. I think as we move to a world where we see a gradual rise in interest rates, obviously slightly higher discount rates, that might counter-guess some of the tech stocks. And as you say, if we have an opening up of the economy, we might be looking to more cyclical parts of the sectors like the autos and construction, where we're overweight, rather than necessarily the tech sector. So a fairly neutral stance as we stand right now, and bearing in mind maybe the change in the interest rate backdrop.
Yeah, back to where we started in our conversation, Nick. If we are looking for further good news around vaccinations, whether that's approval of vaccines or efficacy data on other vaccine trials, where would you be looking? Which are the sectors that you think haven't quite closed that gap from 30 to 10 that you talked about as the average? Where are the sectors that you would be looking for to still make some further gains on that kind of news flow?
Sure. When you just look at statistically the most sensitive, it is travel and leisure, it's commodities, the energy sector, the miners, it's the industrials, autos and broader construction. And look, I think all of those will move. And that's what we've seen, of course, this week. It's been a very close relationship with that. But ones that we feel there's also another positive argument behind would be maybe autos, for example, as we see consumers recover, these massive savings ratios we have here in Europe and UK and elsewhere. As they gain more confidence, we'll see some expenditure there. And we're seeing, I think, the European OEMs now producing EVs, having transitioned or transitioning from combustion engines to electric vehicles. And then, of course, all these very large tax breaks, particularly in Germany, around purchases of new electric vehicles for consumers. So that's maybe a part of the market that can continue to do well.
OK. Nick, thanks so much. Thank you for your time this morning. Nick Nelson, UBS Head of Global and European Equity Strategy. Up next, the euphoria around the Pfizer vaccine that we've been discussing has highlighted the need to make sense of fast-moving scientific data. We discussed with the CEO of the science analytics company Airfinity. That's next. This is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Welcome back to the European Market Open. Half an hour until Wednesday's equity trading session. Cash equities, that is. And European stock futures point to the upside, up by 0.1%. US futures also continue to point higher. Let's get your morning call. Danny Berger joins us here in London. Danny, you've been looking at some of the calls coming in this morning. What have you got?
Anna, it really is all about this value rotation. That's the biggest debate on Wall Street right now. The question that Wall Street analysts seem to be debating about is how long lasting is this value bounce? Now, Goldman, Barclays, Auto, all for their part say that this is a long-term rotation. Goldman points to the fact that this vaccine news fuels growth expectations. And when you get higher growth expectations, that itself can sustain a cyclical bounce. Barclays says that, look, you have two of the biggest tail risks for the market gone. That is vaccine progress and the U.S. election, and that is going to help this pro-cyclical rotation. Plenty of strategists, I should say, are on the other side of this, say, look, what we've seen is just a short-term tactical bounce. Those strategists include those from Citi, Bernstein, and UBS. They all have a common thread, and that's that we just don't know what the future holds. There is so much macro uncertainty. UBS says that policy, monetary, and fiscal is going to be the biggest determinant, not necessarily, little snippets of vaccine news. So that's not enough to sustain any sort of value bounce. Bernstein says, hey, don't forget about growth. We have low real yields. That's likely going to be the case for some time, and growth is attractive in that scenario, Anna.
Danny, thanks very much. Danny Berger on the value rotation. Get in touch with the programme and let us know what you think. A lot of this, of course, being driven by the latest, or in the recent conversation, entirely driven by the latest news flow surrounding the vaccine. The COVID crisis is inflicting lasting damage on the global economy, and it's challenging decision makers to find new ways of tracking developments. High-frequency data has become almost indispensable for identifying turning points in a fast-moving event, such as the development of a COVID vaccine. What are the data points, then, that we need to be looking at? Let's bring into the conversation Rasmus Beck-Hansen, the CEO of Airfinity, a science, data and analytics company. Rasmus, really good to speak to you. So following this week's news, what is your time horizon now for vaccination in various parts of the world?
Well, so I think, first of all, it is very exciting news. There's good reason to be excited about this very surprisingly good efficacy data that Pfizer released. If you look, to answer your question, if you look at it globally, this vaccine is targeted the Western world. It is a very special type of DNA vaccine that can't really be distributed globally. So I think when you look at it from a global perspective, you have to say that this is a vaccine for certain parts of the world, but it's not a solution for the entire world.
So you say that because of the temperature it needs to be kept at, and that would just be logistically more difficult in poorer parts of the world. Is that the reasoning?
Yes, that is the main reason. It requires a very high, very low temperature for distribution, which makes it difficult to do to distribute globally. And if you look at the timeline, the other big issue is production, right? So in the Pfizer press release, which I think not many noticed, they've actually reduced their expected production capacity from 100 million to only 50 million. By the end of the year. And, you saw like Spain yesterday coming out and say, we expect just don't stack up. There will be a mismatch for a very long time between the supply of the vaccines and the demand globally. So for this really to end the pandemic, we'll have to see similar progress for a lot of the other vaccines and other types of vaccines, not just the mRNA. But I would also say that the mRNA, I think that the other reason to be quite excited about this news is that it is a potential groundbreaking piece of medical science that could also lead to other types of vaccinations against certain types of cancer. So we might be on the verge of a medical breakthrough, and that might also be part of why you see this rally across the globe.
That sounds really interesting. In terms of the end of this process, once you've worked out how to get the vaccine to the places it needs to get to, Rasmus, what do we know about, or what do we estimate is going to be the take-up of this vaccine? I mean, sitting here in London, sitting in Europe, many people very used to vaccination programs for children, and this is very commonplace. But what kind of take-up will we get, either globally or in Western countries, around this vaccine, do we think?
Yeah, so that is the other big unknown. So unfortunately, we've seen a decline in trust of vaccines by all measures across the globe, both in the West and elsewhere, which is quite concerning because if no matter how good the science is, if people don't want to take the vaccine, it doesn't work. And I think it's because the curtain to how messy and difficult and iterative a process science has been kind of unveiled, right? So we've seen all the uncertainties, and the world has seen that. And there's also, of course, been a lot of political interference in this process. So I think what is absolutely critical we get now is we get a coherent single voice where big pharma, governments, leading scientists come together and with a single voice communicate the benefits and the importance of vaccinations. And I think with this efficacy data, it will be much easier to tell that story.
Yes, indeed. What do you know about, what's the latest information about global distribution? When we get these various types of vaccine, and you've made the point that some of them will be more suited to certain environments and we get a mix. What is the latest assessment of how much that can be spread across the world? I know that certain organisations, such as Gavi, have been looking at how you distribute this in some sort of fair way. On the other side, we've seen a race to be first, to get access, to book slots, to book those vials. What do we know about how well distributed these vaccines are going to be, Rasmus? So
I think that's one of the big geopolitical questions we'll see in the coming months, because we actually don't know the fine print of these deals. So we don't know who gets the vaccines first. Could it be based? Is it on a pro rata basis, based on how big the country is, how much they purchased? Is it maybe also based on the domestic production of these things? Is a certain vaccines that will be distributed to others, certain parts of the country? We really just don't know. And I think if you look at low and middle income countries, those vaccines from a timeline perspective, we don't expect readouts for those vaccines until kind of Q1. So there will be a time lag. Say these mRNA, Pfizer vaccine works, Moderna also works. Then you're beginning to see at least some easing in Europe and the US, and you would have then the low and middle income countries lagging behind. So that's gonna be a major geopolitical question going forward.
And we've been looking at the mutation of this virus. It does seem to be happening, doesn't it? And certainly we've been covering the story around the mink farming in Denmark and the impact of that. What is the time horizon for turning a vaccine we already know works, the one from Pfizer, for example, to a new purpose, getting it suitable for vaccinating against a new mutation of COVID-19?
Well, I think that's fairly feasible. I'm less concerned about the mutations. It's not unusual. You have different strains, and we're likely to see that the vaccine will also work with those. But what I'm more concerned about is that if this is still science by press release we have from Pfizer, so we don't know about critical aspects of this vaccine. We don't know whether it actually reduces mortality. We don't know whether it protects against severe diseases. We don't know the durability of the vaccine, all those, whether it works with vulnerable elderly people, the real critical component in assessing whether this is an end to the pandemic or not. Some of those are just still unknown. We have to wait for the full data. We have only a very, very small snippet of the data. There's reason to be excited because it's tremendous, strong efficacy, 90%, right? But, we have to be cautious because there's a lot of things we still don't know.
Yeah, stopping people from catching it is only part of the task, I suppose. Rasmus, thanks so much for your time. Rasmus Beck-Hansen, Airfinity's CEO. Let's get a Bloomberg First Word News update. For that, here's Laura Wright.
Thanks, Anna. Secretary of State Michael Pompeo says there will be a smooth transition to a second Trump administration. The remark may have been in jest, but adds to the president's unsubstantiated claims of voter fraud. The president praised Pompeo's comments, but one Democratic lawmaker described them as shameful and dangerous. Joe Biden is warning Prime Minister Boris Johnson not to put peace in Northern Ireland at risk in pursuit of Brexit. He used his first official call with the UK leader to reaffirm his support for the Good Friday Agreement. It's the latest sign that Biden won't be the unequivocal backer of Brexit that President Trump has been. Hong Kong has removed 4 opposition leaders due to new rules from Beijing. China has passed a measure requiring politicians in the city to be patriots and not support independence. The remaining opposition members of the Legislative Council earlier pledged to resign en masse if any were disqualified. Italy may need to spend as much as 10 billion euros a month in virus aid. Sources tell Bloomberg the lockdown measures are estimated to cost the government about 3% of Italy's GDP if they last until March. Under softer rules, the aid bill would still be at least 6 billion euros a month. The UK is planning sweeping new powers to intervene in foreign takeovers it deems a threat to national security. It includes retroactive action on deals that complete after the bill's publication. That's a controversial provision that critics warn may deter investors. But the UK says it is in line with similar rules in France, Italy and Germany. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Anna.
Thanks very much, Laura. Laura Wright in London. In fact, we're getting some Chinese response to that. Chinese spokesman saying China hopes the UK will uphold investment by Chinese firms. We'll see where that takes us. Coming up, one step closer, the EU agrees a spending plan, paving the way for the €1.8 trillion aid package to be operational next year. More on that next. This is Bloomberg.
It came in better than expected, not only in terms of job creation, but also a sharp fall in the unemployment rate consistent with higher labor force participation. That's really good news.
Overall, the gain was solid, but even while this is a very robust pace of job gains, it's a lot slower than it has been in the summer months.
Great that we saw the job gains we did, but they still are diminished from what they were, of course, back in April and May. And the scarring, the sort of wounds that were created by COVID are beginning to fester.
I would caution people to look at the top line number because I don't think it tells the entire story. Employment relative to population is still well below where we were pre-crisis, and that's because I think that we're going to have some lasting damage.
Depending on what you look at, jobs creation or the unemployment rate, you have different views as to whether the improvement in the labor force is keeping up or slowing down.
I don't believe the renminbi will be a viable reserve currency quickly, but I do believe it'll happen much faster than anybody expects. The question is, what is the storehold of wealth in the meantime?
Give you a sense of the real-time action. The 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
We're heading in the wrong direction. Over the next 2 quarters, I'm very optimistic that we're gonna grow at very strong rates. But a real downside over the next 2 quarters is, does the resurgence get so bad it forces lockdowns because of overwhelmed healthcare systems throughout the country? That's what we're watching for. Right. That's a real risk.
That was Dallas Fed President, welcome back to the program, everybody, Robert Kaplan, speaking to Bloomberg. And our focus on central bankers continues. We could hear words from Christine Lagarde a little bit later on. This is what we have for you on European equity markets right now. Still 15 or so minutes to go until the start of the equity trading session. So futures fairly flat, actually pairing earlier gains, and that applies to US futures as well. So perhaps the latter in the lead there. S&P futures and NASDAQ futures pairing some of their earlier gains and looking flat to positive right now. Now, the EU has agreed on a long-term spending plan for the bloc. It brings them one step closer to finalising the €1.8 trillion budget and stimulus plan. It's a major step in making sure aid is available in the first half of 2021. Joining us now is Bloomberg's reporter Ben Sills. Ben, very good to speak to you. Give us the significance then of the agreement we've seen here.
Well, this is really the EU's flagship policy for rebooting the economy after the pandemic. They are in the process of ratifying it, and this is a major step forward to making sure that they'll be able to start releasing that €750 billion of aid in the first half of next year.
And so it takes us a lot closer, gets us closer to the actual distribution of these funds, Ben. But what are the chances that it could still face stumbling blocks? I mean, we've had agreement on rule of law, but not everybody is happy. Hungary, for example.
Exactly. We still need to see this ratified by the national parliaments. And as you say, Hungary is the real sticking point there. They're not happy about the conditions that have been baked into this project on rule of law. Hungary's come under fire and is currently the subject of an EU investigation into the judicial situation of status of judicial independence. So there is a risk that Hungary could still veto this. It seems unlikely because the Hungarians are set to get billions and billions of euros in grants from this. So it would be a really kind of perverse decision by Orban if he was to shoot it down. But he still is kind of making ambiguous noises, and that's the big thing we're going to be watching for through the rest of this year.
And we're also getting a sense increasingly of the cost, the bill for fighting the coronavirus and the pandemic in the various individual countries around Europe. Some latest data coming through from Italy, or some latest spending plans. What are we hearing about Italy and the budget there?
Yeah, we had a story last night from our team in Rome that they're now looking at maybe 40 or 50 billion euros of additional spending to pay for the second lockdown in Italy. That, just to put that into context, Italy is already looking at debt to GDP of 160% at the end of this year because of the cost of the first lockdown. The basic cost of the second lockdown, therefore, is going to add another 3 percentage points to Italian GDP. And this is a country that's already largely dependent upon the European Central Bank to keep their finances stable. So any significant further borrowing from Italy just deepens the hole that they need to climb out of and opens up all sorts of questions about how Italy can remain viable as we move beyond the sorts of extraordinary measures that have been implemented at the height of this crisis.
Ben, thanks so much. Bloomberg's Ben Sills there with details of the EU's progress towards its pandemic relief fund. Let's get a Bloomberg Business Flash for you now. Here's Laura Wright.
Thanks, Anna. Alibaba has kicked off the world's biggest shopping spree that will gauge the strength of China's recovery. Its so-called Singles Day was off to a brisk start, topping $56 billion in just half an hour, including an extra buying window earlier this month. The previous record was $38 billion in 24 hours. Italian payments company Nexi is nearing a deal to buy rival Nets. Sources tell Bloomberg the companies have agreed on most details of the all-stock transaction. It would value Nets at about 7.8 billion euros. It may be Nexi's second major purchase in around a month after buying another competitor, Sia. Apple is launching 3 new Macs, kicking off its transition away from Intel. They are the first Mac computers with a main processor designed in-house. The company says the change will enable better battery life and faster graphics. Apple has been shipping its own processors since 2010, first in the iPad, then the iPhone. TikTok's owner is asking a U.S. court to intervene to prevent the Trump administration forcing a sale of the video app. ByteDance is asking for more time to finalize a deal before it faces a ban. It planned to sell about 20% of a new entity to Oracle and Walmart, but that agreement is now in flux after Joe Biden won the presidential election. That's your Bloomberg Business Flash. Anna.
Thanks very much, Laura. Laura Wright here in London. Minutes away from the market open then. Next up, we'll get your stocks to watch, including from the banking sector. ABN AMRO, the Dutch bank, posts stronger than expected profit and keeps bad loan provisions low. We heard a little bit earlier on from management at the bank, just giving some context to the guidance they're shortly going to give to the market. So interesting to get into that conversation next. This is Bloomberg.
So do you get tired of people calling you a jazz legend? Do you feel older when they say that to you?
Yeah, I like the word jazz. I don't like the legend.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan. We did see some pressure on the futures. That is now being reversed.
The outlook for the economy is extraordinarily uncertain and will depend in large part on the success of efforts to keep the virus in check.
They're torturing themselves to explain that they're there, ready, willing, and able.
The Fed has basically done all it can do, with the exception of extreme emergency measures.
Welcome back to the European market open. 9 minutes until the start of cash equities trading. Futures now looking pretty mixed. CAC futures point to the upside. Plenty of economic data from around Europe this week. Lots to focus on. So let's take a look at what we're going to be watching out for. On Thursday, third quarter GDP for the UK. It's expected to show a 15.8% jump after falling almost 20% in the previous 3 months. We already this week had jobs data out for the UK. Also on Thursday, we get a reading on German CPI and euro area industrial production. And finally, on Friday, we'll get French inflation data for October. Minutes away then from the market open. Let's focus in on the stocks we're watching. Danny Berger has a breakdown. And Danny, I think you're going to the banking sector first. What do we know from ABN AMRO?
More European banks reporting, Anna, and more beats. ABN AMRO, a pretty sizable beat, I should say, on their net income numbers, coming in at over 300 million euros. The estimate had been 110 million euros. More cost cutting, less money set aside for loan losses. We spoke with the CFO, who talked about the numbers that they plan to give an update on in November. Take a listen.
About calibrating targets in what we still are in the middle of a pandemic. In an environment where there are many things we can't control, we'll be cautious about targets, and I hope our investors will be realistic about what they expect at the end of the month.
ABN AMRO is called up today with that profit beat, Anna.
Yeah, a little bit of a word of caution, though. Interesting to get that from the management there. What about the tech sector? Where are we heading on tech? Given we've seen it go its own way, of course, in the wake of the news out of Pfizer and BioNTech, but today looks different if you look at US futures.
That's right. There does seem to be a bit of dip buying. I should say the NASDAQ 100 not doing as well as the rest of index futures. Still, it's going to be this interesting push and pull. We, of course, have tech doing pretty poorly in China. That's very specific news there regarding regulation. That won't have a direct effect, of course, on Europe, but this could just give more indications of what the sentiment looks like around technology. So it will be whether that sentiment continues to sour or if indeed people will step in and buy the dip today, Anna.
And what about Continental? We've had numbers out from that business.
That's right. We really learned the extent of the profit squeeze we're going to see from the auto parts supplier. You'll recall their CEO quit just at the end of October. Well, they're saying that their profit margins are going to be about 3%. To give you a reference point, before the pandemic, they said that they would see a margin of 5.5% to 6.5% for the year. So that's quite the downgrade from what we had seen at the beginning of this year. Really, earnings hit from costs with the company trying to really revamp what they're doing, put in a new plan to return to profits. That includes what may be 30,000 jobs either restaffed or completely cut, Anna.
OK, thanks very much, Danny Berger, with the stocks that we are watching. Also, just to make the point, we're going to be talking to the Continental CFO, that is Wolfgang Schäfer. He'll be joining us, and we'll get some further thoughts on that outlook. What is it they can and can't see about the winter ahead? I think that's going to be really interesting for a company that supplies the auto industry. So lots to talk to him about. Coming up, we'll have the market open for you. Futures have been fairly flat, actually, the last time we checked in on them. A little bit earlier on this morning, we had some moves to the upside in European futures, and US futures looks to be pretty buoyant. NASDAQ futures also look fairly buoyant, which made a change. But now we're actually seeing back to where we were a couple of days ago. So NASDAQ futures underperforming, now down by around 0.2%. Euro Stoxx 50 futures have lost a little bit of their momentum, a little bit of their mojo perhaps as well, looking fairly flat. We'll be back to the conversation around value versus growth shortly. We'll talk about that. We'll also try and get some long-term perspective. In the next conversation, we'll be talking to Thushka Maharaj from JP Morgan Asset Management. They've got their long-term capital market assumptions report out. This is a report that we want to talk to them about. It's in its 25th year, I think. We want to understand their 10 to 15-year time horizon around these markets. So we'll get further into that conversation shortly. This is Bloomberg.
The Boston Symphony Orchestra presents BSO at Home. While you stay inside, enjoy a curated collection of archived concerts and behind-the-scenes stories from BSO musicians. BSO Homeschool provides lessons for music lovers of all ages. New performances and messages from musicians are added regularly. Enjoy these selections and much more at bso.org/at-home.
A minute to go until the start of cash equities trading. Good morning, everybody. Here are your headlines. Risk on rotation, a move out of defensive tech names picks up steam, and a Chinese crackdown wipes almost $260 billion from Alibaba and Tencent. Another hurdle cleared. EU negotiators move a step closer to unlocking a €1.8 trillion pandemic package. Meanwhile, Italy considers spending €10 billion a month to support business. And Biden's early warning, the president-elect uses his first call with Boris Johnson to reaffirm his support for the Good Friday Agreement. Good morning then, everybody. Just 15 seconds or so to go until the start of the European equity trading session. European futures have been deteriorating a little as we've built our way up to the start of the European trading session. A lot of that reflects what we're seeing in the US. US futures looking a little more negative than they did. Nasdaq futures now down by 0.2%. So look for that to weigh perhaps on some of these markets. We've seen some real outperformance from the Spanish market on days when we've been getting into risk assets over the last couple of days. So we'll see whether that continues to be the case. And in fact, the IBEX opening to the upside, up by 0.4% or so. The FTSE 100 fairly flat this morning, so we're looking for the CAC and the DAX to open and give us a sense of where we are. We saw a continuation in yesterday's session of that strong performance around the Spanish banking sector and other value plays. That was a bigger global story, of course, but in Spain it seemed to be picking up some significant momentum. We see the CAC opening now in Paris, up by 0.3%. So we're making modest gains, actually, at the start of the European trading session. We'll keep an eye on those fluctuating US futures. So European equity markets opening slightly higher, but this in conjunction with a technology sell-off that's really incredible to witness, really, in China as Beijing cracks down on the internet industry. Let's speak now to Thushka Maharaj, JP Morgan Asset Management Global Multi-Asset Strategist. Thushka, really good to speak to you. So let me ask you broadly about what we've seen this week and your stance on it. I mean, we've seen a big sell-off in tech stocks, a sell-off in growth names, and a move into value. Some say it's here to stay. Others say, hang on, don't make that call just yet. So what is your assessment of what we've seen this week?
Thank you, and good morning to everyone. Yes, I think it is very important to be watching this rotation. We've been talking about it for a while, and while we can see an early cycle phase of the economy supporting a rotation, we also see the secular story in technology still being very much intact. So, we've just come out of our long-term capital market assumptions, which look ahead for the next 10 to 15 years. And in that, the secular story for technology remains very much in place. But as you say, on a cyclical basis, there is an argument to support value and especially cyclical markets. We don't think about it as tech versus other parts of the sectoral composition. We actually think about complements, and so yes, we do like cyclical markets, but we're not necessarily expecting tech to be a loser in this scenario. I think it's market recalibrating given the news flow we've had, but there's still a secular story in technology.
Yes, if it is recalibration, Thushka, and you talk about in cyclicals and cyclicals picking up, how extensive then should we look for that pickup to be, that recalibration?
Yeah, so that's exactly the exercise we're going through at the moment. We've had some positive news flow on the vaccine front, but there's still a lot of open questions, and so we're not expecting market volatility to dissipate on a linear basis. We still have concerns on the virus, especially going in the winter months here in the Northern Hemisphere. So that recalibration will take time. And we don't think it will be a one-way process, especially given the uncertainty on the virus. What I would say that has surprised us on the positive front is the private market access to technology and logistics, for example, and green technology. That has surprised us in its resilience coming out of the COVID crisis back in March, and that's an area where we expect. Where we are still expecting positive performance alongside cyclical markets. Within our multi-asset portfolios, I should end by saying that we do have cyclical exposure to Europe and to markets like Japan, which are geared to the good cycle of the economy and a rebound there, and that remains a positive view that we have today.
Okay, that's interesting then to keep an eye on that in terms of those cyclicals. You've mentioned tech, and you say that the secular trend to tech is still very much intact. We've seen some heavy selling in Chinese technology stocks overnight, and this has to do with a clampdown by regulators in China. That's very specific to China. They're trying to address tech businesses that have become incredibly large and are trying to spread into financial services, and there are some real China specifics there, I suppose. But in terms of tech regulation, is regulatory threat a big issue, especially, and also in the US, given who is going to be president next year? Is tech regulation going to be a big theme for you?
It has been, especially running up into the election. I'd say tech regulation is an important factor to bear in mind given valuations. But, I'd say the earnings cycle we've had in technology has surprised us positively. Yes, we have some headwinds in the short term for technology coming from potential regulation. There's still uncertainty on that regulation. But, yeah, that secular theme, especially in emerging markets and especially in green technology, that secular theme of distinguishing green technology still remains a very strong feature in our thinking. When you talked about the election impact on regulation, I think there are still open questions on how that will be implemented, or even possibly if it will be. And tech stocks are they've rallied pretty strongly given the stay-at-home and the work-from-home environment. So we are seeing recalibration, but essentially, when we think about the long-term drivers for the sector, we're still expecting strong performance. But I'd say crucially, it's how you actually access that strong performance. We are looking more closely at real assets that are levered to the logistics components of technology, that are levered to green technology and environmental technology, and they've actually been very resilient and held up pretty well despite these headwinds from regulation.
Thushka, thanks so much. Thushka Maharaj, JP Morgan Asset Management Global Multi-Asset Strategist. She stays with us. We'll get further thoughts from her shortly. Just want to bring you up to date with what's happening in gilt markets. The UK 30-year gilt yield rises above 1% for the first time since March. So that's a pickup in gilt yields. Of course, we've seen a pickup in global yields in the wake of the vaccine announcement that we got from Pfizer and BioNTech. Also in the wake of the election, to some extent at least, and certainly running into the election with the fiscal stimulus expectations in the US. So global reflation, part of that story. And then you add on to that the UK specifics, of course. You can see that gentle move upwards we've seen in the 30-year yields in recent months. Coming up, planning for the future, we will discuss JP Morgan's long-term capital market assumption report. Thushka mentioned it a couple of times, but we'll get into some of the details. When they look ahead 10 to 15 years, what do they see? This is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here? It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
Welcome back to European Market Open. 10 minutes into a trading session that looks slightly positive for European equity markets, up by 0.5% on Euro Stoxx 600. Technology stocks under pressure once again, and that ties nicely in with a slightly unconvincing futures picture on the Nasdaq. It's been fluctuating quite a lot, I should say, but now entirely flat. We've talked a lot about technology with Thushka Maharaj from JP Morgan, so let's get into a broader conversation about the years ahead. JP Morgan long-term capital market assumptions report is in its 25th year. The research project takes a 10 to 15-year view on more than 200 major asset and strategy classes. So let's get back to Thushka Maharaj, JP Morgan Asset Management's global multi-asset strategist. Thushka, so when you look at things with that long-term lens, what does the global growth story look like, firstly? I mean, how do we recover from the pandemic? What kind of assumptions do you make?
Yeah, as you said, it's our 25th year, and I'm very excited today to talk about it. It is a cross-platform across the whole of JP Morgan Asset Management, and you know we've learned a great deal over the last 3 cycles in terms of how to build our long-term growth assumptions. And the way the LTCMAs work is that we use supply-side factors to build that long-term trend growth, so labor growth, productivity, and capital investment. These are the long-term drivers for us. And this year we went through quite a long stress testing exercise, as you correctly highlight, coming out of this the recession that we experienced, this very sharp recession. We are in unusual times. And I'd say our growth forecasts are largely unchanged, but that masks a lot of stress testing that went on under the surface. Basically, it's too early for us to make any definitive conclusions on the long-term implications of the COVID recession we've been through. One area where we are seeing a modest change is on the inflation front. So our growth forecasts remain largely unchanged. We're expecting U.S. growth about 1.8% in a trend basis. So that's largely unchanged. It's got a modest cyclical bonus. But the place where there is debate and the place where we are watching for changes is on the inflation front. So we are now moving to a more coordinated world in terms of fiscal and monetary policy. And for us, that increases the risk premium we should be attaching to higher inflation outcomes. We didn't change the base case picture for inflation, but it's more the distribution of risks around that. And I know this is quite an important topic for clients, and it's very important for the cyclical or value rotation we were talking about earlier. To see a sustained move towards value, you need to see inflation expectations moving up and realize the inflation also moving higher.
And what do you assess then is the impact of what you call the fiscal decade? I mean, firstly, do you really have conviction that we will end up in that place? Because delivering that kind of fiscal impulse in democratic environments has proved difficult in the past. Do you really think that we are going to see that fiscal decade? How substantial will it be?
Yeah, so as you rightly point out, the politics matter in terms of fiscal spending. But what I would say is that the last 10 years, we saw monetary policy being the main anchor, the main support mechanism for economies. Looking over the next 10 to 15 years, we expect more coordination across fiscal and monetary policy. How likely is that? We think it's actually in train already in Europe. With the European Recovery Fund and the cohesion that we're having on a pan-European basis for fiscal spending, and essentially the appetite to enact austerity is so much lower now than it was 10 years ago. The US is slightly different in the sense that we need to watch what happens post this US election. But I'd say the thesis that we are likely to live with higher indebtedness over the next 10 to 15 years, whether that's on the public side or the private side, it is a theme that runs across the LTCMAs. We're expecting higher indebtedness and higher fiscal spending. What this means for markets, as you say,
We'll have to leave it there for today, but thank you so much for bringing us the report and congratulations on 25 years of it. Thank you very much for bringing us your thoughts today on the broader markets as well. Thushka Maharaj, JP Morgan Asset Management Global Multi-Asset Strategist. I'll actually get another opportunity to speak to Thushka in my conversation with her on Bloomberg Radio at 9 a.m. UK time. Now, I should tell you that Credit Suisse's CEO, Thomas Gottstein, is speaking to Bloomberg's Francine Lacroix as part of our Bloomberg event, The Future of Finance. We've already heard a few lines from him saying that banks have dealt well with the crisis. Let's listen in for a moment.
I'm sure there will be similar statistics in European EU countries, and that's why it is a pressure for the industry. Obviously, as Credit Suisse, we have a more balanced business model. We have private banking, we have recurring revenues, we have transactional revenues. We are less dependent on net interest, but it's still very important for us, and therefore the whole industry has this challenge. And that's one of the reasons, besides the fact that many countries in Europe are overbanked, that's why I think the consolidation will continue.
Significant consolidation? What part do you want Credit Suisse to play in that? And you mentioned overbanking in Europe. If we speak to each other in 10 years, and I hope we'll do many interviews before then, but how many banks will be left in Europe?
Well, that's a bit tough one. But if you look at Switzerland, we went from 2000 to 2020. In 20 years, we went, I think, from 360 to 250 banks. So 110 banks have disappeared. And so that's, about 6 banks per year or so. I think it will probably rather accelerate across Europe and also in Switzerland. There will be continued consolidation, and it's more domestic. I think cross-border consolidation is more difficult to actually execute, but there will also be cross-border consolidation, I'm sure. So I cannot give you an exact number, but what I'm convinced is that consolidation is needed and will happen.
So is everything you do in actually managing the bank?
We'll leave that there. Francine Lacroix, The Future of Finance, conversation with the CEO of Credit Suisse. Interesting conversation to keep an eye on. And, of course, we'll bring you headlines from it. Coming up on this programme, the Green Debate. We discuss climate action and the transatlantic relationship under a Biden presidency. That is next. This is Bloomberg.
I'm David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
Climate change is happening. It needs to be repeated over and over.
126 governments have now committed to net zero, including 3 global giants, China, Japan, and South Korea.
We also must harness the firepower of the financial sector.
The financial community has a critical role to play in driving this transition. And that includes asset managers like BlackRock. The investment industry now has the opportunity to further accelerate this phenomenon and demonstrate that we can be a catalyst for change.
We're going to lay out for our stakeholders how we intend to align with the Paris Accord.
The economic challenges of the climate transition are phenomenal. And then I ask myself, how much does it cost? A lot. But nothing that we cannot afford, because the cause is our survival.
ECB President Christine Lagarde ending that selection there of comments from policymakers, politicians and executives gathered virtually for the Green Horizons Summit in London to discuss climate change. Across the Atlantic, climate change is firmly back on the agenda. President-elect Joe Biden has pledged to spend trillions of dollars to fast-track the transition from fossil fuels, slash emissions and curb climate change. For more on what a Biden presidency means for climate change and relationships on that front with Europe, let's get to our next guest. Joining us now is Cem Özdemir, Bundestag Green Party member, former chair of the German Green Party and founder member of the European Council on Foreign Relations. Cem, very good to speak to you. How high are your expectations of the Biden presidency when it comes to climate?
Well, we lost 4 years in the U.S. under the Trump administration. The U.S. was practically absent from the fight against climate change. Before that, let's have in mind 8 years of the George W. Bush era, where the U.S. as well was more or less absent in the fight against climate change. So we have to hurry up. There is high pressure, high expectations. It's clear Europe has taken the lead in between. But we also know we're not strong enough to do that alone.
What are the specific areas of cooperation that you would like to see the US administration join with Europe in efforting? I know that President-elect Biden has said he'll go back into the Paris Accord, for example, but what else do you want to see?
Well, that's the most important step, to go back to the Paris Accords, and then the next step would be that we have joint goals. If the US is taking the lead again on renewables, on decarbonization of transport, and Europe is joining that together, we already started that, we can make a difference. Imagine that the US, together with Europe, goes to China and says, we might disagree on so many issues like human rights, like Hong Kong and other issues, but on the fight against climate change, we want you to join that fight. We want you together, that we create a force on this planet of those nations who believe there is climate change and we have to do something because we owe this to our children.
We've seen tension, of course, across the Atlantic on a number of fronts over the past 4 years, Chairman. One of those has been around Nord Stream 2. You've criticised Nord Stream 2. President-elect Biden criticised it, years ago. What policy stance would you expect him to take on this particular part of the European energy mix?
Well, the standpoint of my party, of the Green Party, is we want to be energy independent. That includes countries like Russia that are, to us, not reliable partners. Russia has clear intentions to destabilize the European Union, to make us dependent from him. We don't want that. And by the way, this is not a renewable energy source. So therefore, it's clear we would love to stop Nord Stream 2. Together with the US, we completely agree there. The question is whether it's too late when we enter power, hopefully next year.
Right, and what about the sanctions that the US currently has in place in relation to Nord Stream 2? Would you like to see movement there?
Well, let's face it, we were not in one house or even a family with the Trump administration. When Biden-Harris is the next U.S. administration, we're friends, we're family again. Family of those nations that believe in liberal democracies, the rule of law and everything. So therefore, sanctions should not be on the forefront. We should sit together, settle our problems, and then agree together joint. Because let's not forget, there are not that many partners in the world who believe in rule of law and democracy and everything. So therefore, we should target others who think that climate change is not existing or that they should not do anything. We should target those who believe that liberal democracy is something to attack. So the enemy is neither in the US nor it is in Europe. The enemy, if we might use that word, is elsewhere.
Chen, just briefly, do you see opportunity for European business now, given the pivot in policy in the US?
Well, I mean, not all companies obviously are in favor of Nord Stream 2, only those who are directly involved and have a lot of money to earn. So therefore, it's clear this is not about European economy. This is about Mr. Putin, his aspirations. We have good reasons why we're still against that project. But let me remind you again, there is a decision taken by a legal parliament. The process is ongoing. We're in opposition. Okay. We're currently not in the national government. So it's a process of democracy.
Cem, thanks so much for your time. Cem Ozdemir, Bundestag Green Party member. Up next, we'll speak to Continental's CFO, Wolfgang Schäfer, about the company's results and outlook. This is Bloomberg.
So when you went to Baltimore, you went initially to be an anchor woman,
Mm-hmm.
and then it didn't quite work out.
Yeah, I got fired.
Well,
demoted.
You got demoted, but they didn't. They had a contract,
Yeah.
so they didn't say goodbye. Yeah. And then, how did you work out to be on a afternoon show where you actually got to be an interviewer? How did that actually happen?
Well, what happened was this is what I now know with age and perspective, that many times getting demoted is an opportunity for something else to show up, or getting fired. You know, lots of people I've interviewed over the years who have these stories about the best thing that ever happened to you. It puts you in the next best place. I was not a good television reporter. I was too emotional. I was making $22,000 a year, and my best friend Gail, who I met there at the time, she was also working there. She said, "Oh my God, you're 22, making $22,000. Imagine when you're 25." Then you're 30. So I'd be making 60 about now. It'd be good, 62. Once I got demoted, they didn't want to pay out my contract. I was making $25,000 a year. They didn't want to pay me the $25,000.
Right.
So they kept me on and said, "We'll put you on this talk show just to run out your contract."
We would love, at the right time and the right way to have a digital bank license. We would almost certainly do that in partnership with a strong local partner, and we would use the technology and the experience that we've gained from Mox in Hong Kong.
We explore the trends, investments, and competition of the European ETF industry. Join us on Bloomberg ETF IQ Europe.
Welcome back to the European Market Open. 30 minutes then into your trading session here in Europe this Wednesday. Let's look at where we are on the European equity picture, but also in some key sectors we've been tracking this week. Looks like a little bit of a reversal of the last couple of days. Yes, the European equity market is moving to the upside, but one of the key features of the value trade, of course, is the banking sector, and banks actually moving down today. We've had some earnings out of the banking sector, and perhaps that is weighing a little bit. Technology stocks move to the upside, up by 0.2%, though, so not by a great deal. We don't have a great deal of weighting towards technology here in Europe, so that doesn't always set the pace. Nasdaq futures, incidentally, back to positive, up by around 0.3%. Let's get a Bloomberg First Word News update. Here's Laura Wright.
Thanks, Anna. Joe Biden uses his first news conference as president-elect to criticize Donald Trump's refusal to concede the election. Biden says he's moving forward, regardless of legal challenges from the Republicans and the lack of cooperation from the White House.
I just think it's an embarrassment, quite frankly. The only thing that, how can I say this tactfully? I think it will not help the president's legacy.
Italy may need to spend as much as 10 billion euros a month in virus aid. Sources tell Bloomberg the lockdown measures are estimated to cost the government about 3% of Italy's GDP if they last until March. Under softer rules, the aid bill would still be at least 6 billion euros a month. Hong Kong has removed 4 opposition lawmakers due to new rules from Beijing. China has passed a measure requiring politicians in the city to be patriots and not support independence. The remaining opposition members of the Legislative Council earlier pledged to resign en masse if any were disqualified. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Anna.
Thanks very much, Laura Wright, with your business flash. Up next, a tech sell-off in China. We'll look at Beijing's antitrust regulations and their impact on the internet industry. This is Bloomberg.
I'm David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
Welcome back to the European Market Open. 35 minutes then into Wednesday's session. European equity markets make modest gains. Banks retreat. Technology making modest gains this morning. Now, technology very much at the heart of things and what's happening in China in session overnight. Alibaba is leading a sell-off in Chinese tech giants after Beijing's broadest attempt to rein in its most powerful private sector firms. That comes as the company holds its annual Singles Day sales event. Bloomberg's Tom McKenzie spoke exclusively to Alibaba VP Liu Bo.
I think the sale performance is within our estimate, with very decent overall growth, which closely links to consumers' enthusiasm. The growth number comes from the huge enthusiasm of consumers. So the overall growth is within our estimate. I hope at the end of today we will see a good sales number when we recap and share it with you.
How much engagement are we seeing this year with foreign brands? I know you've added something like 2,600 new foreign brands to your categories. How much demand is there?
Chinese consumers are fond of foreign brands. Those from the middle class or people with strong purchasing power from Tier 1 or Tier 2 cities, they already have a big appetite for shopping. In light of the overseas travel restrictions imposed by the pandemic, I think we can see higher enthusiasm for online consumption during this shopping festival.
When do you think we get back to pre-pandemic levels of retail sales in China?
From Alibaba's perspective, we are not only looking at online sales, but paying a lot of attention to offline sales too. The recovery in offline sales has been very good and has exceeded many people's expectations. Offline has not reached pre-pandemic levels, but it has recovered very well. For online sales, we've seen stronger growth this time around in both customer behaviour and brand participation. I think putting everything together, offline sales will recover to a better level in 1 or 2 quarters. But if we only look at online sales, I believe it's already returned to normal.
China has unveiled new anti-monopolistic regulations. Many see this as a key change in the way that the government approaches technology companies, an attempt to rein in the power of companies like Alibaba. What do you think the impact of these new rules will be?
We've just noted this new regulation over the past couple of days. I think we will need to further study the draft. We will see later how we should accommodate this new regulation imposed by the government. I don't think this is a surprise. As you know, the Chinese market is in the process of constantly regulating. China's government would like to regulate markets and engage in more market research in all sectors. Over recent decades, the Chinese government has kept improving its law and regulation. We've been growing during this process.
We've also seen changes in regulations around internet finance, online finance, which of course impacted Ant Group, and the IPO of course was cancelled. There's concerns that it may restrict the ability to offer credit by Ant Group to some of your consumers, and also financial transactions will be seen and have more oversight. What do you think the impact potentially of that is on your business in the e-commerce space?
On the Taobao platform, we've been encouraging our consumers to be rational with their purchases on the basis of meeting their needs.
That was Alibaba VP Liu Bo speaking exclusively to Bloomberg's Tom McKenzie. For more on the tech sector right now, Alex Webb, our Bloomberg Opinion tech columnist, joins us now. Alex, great to speak to you. So we're seeing heavy selling of big tech names over in China in this overnight session. Why are Alibaba and its tech peers a target then of Beijing's tech crackdown? We were hearing earlier on that this had something to do with their attempted move into financial services.
Well, there have been a number of things over the past few years, but we've simply seen the scale of these companies, much as they have in Europe and the US, just grow at an almost untrammeled pace. And there have been whispers out of China that there's some concern about the sort of power that is agglomerating around the individuals who lead them. That people like Jack Ma are becoming celebrities in their own right as businessmen, and that's something that sort of sits a little bit uneasily with the leadership in China. Now, perhaps if you look towards what's happened in this part of the world, where it's increasingly, once companies are of a certain scale, it's very hard to regulate them, and they become as powerful in some instances as the regulators themselves, or at least they have, a huge ability to push back against regulations. So one wonders whether it's an effort to preempt some of that. They are huge companies already, but not in terms of revenue as sizable as the likes of Google, Facebook, Apple, or Amazon.
Yeah, and talking of Amazon, turning to Europe, Alex, around this time yesterday, we got news of the latest legal activity against big tech coming through from Europe. What is the latest on that particular story?
So we knew that the European Commission was investigating the way that Amazon uses data in its marketplace. So if you're a third-party seller, as you call them, selling your product on Amazon Marketplace, Amazon has the ability, at least, to look at that data and see what is doing well, and then potentially think about introducing its own competing products. Now, that investigation advanced, and the Commission unveiled its statement of objections, which brings it one step closer to possibly imposing a fine or behavioral remedies. But to add insult to injury, the Margrethe Vestager, the commissioner in charge of this, extended the probe, added a new probe into whether Amazon, in fact, favors its own products and gives them greater prominence, and therefore it makes it more likely that consumers will buy Amazon-owned brand products than ones provided by third-party sellers.
Thanks very much, Alex. Alex Webb, our Bloomberg Opinion Tech columnist. Thank you very much to Alex for joining us. When we return, we'll talk more about what's going on in the car sector. How much visibility do we have around the pandemic through the winter, even ahead of a vaccine? We'll get into that conversation next. This is Bloomberg.
We don't have a sort of fixed order of use of tools, and I think that's appropriate. It would always be dependent upon the state of the world and the state of the economy that we found ourselves in.
This is a market that
over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Welcome back to the European Market Open. We're 45 minutes into a trading session that looks kind of mixed, but in all, we move to the upside. So Europe Stoxx 600 up 0.5%. Banks retreat. Tech makes gains, so a little bit of a break from the last couple of days. Let's talk about the earnings story. Continental expects a profit margin of only about 3% this year. This may be a reflection of how much pressure earnings are under at the auto parts supplier as it searches also for a new CEO. Joining us now is Wolfgang Schäfer, the CFO of Continental. Very good to speak to you, Wolfgang. What kind of visibility do you have then for the winter months, given the uptick once again in the pandemic?
Well, you know, we were encouraged now enough to give a guidance for 2020, so at least we see some more visibility to be in a position to talk about what we expect for the rest of the year. It is less volatile than we have seen it in the second quarter and obviously in the first quarter. Still, there is volatility in our markets. And our guidance, which we were giving now for the fourth quarter, by the way, 4 to 6% in the world car production below prior year, so still a weaker quarter. But we think pandemic effects on these numbers should not be too big. But again, volatility is there and predictions are still more difficult than they have been a year ago.
What will you wait for before taking a more optimistic stance, Wolfgang? I mean, we've had news this week about a vaccine, for example. What would you need to see to enable you to make more positive estimates for 2021?
Well, obviously, we see consumer demand really kicking in and the demand for cars really kicking in. And this is what at the moment we don't see. And I think all this information about a vaccine coming next year is quite early at the moment to expect effect already on what we can see in the call-offs from our customers for cars and the cars sold. Don't forget, in addition, that we are in a technological transformation area for the car industry, moving from combustion more to electrification, moving towards more autonomously driving cars. We have technology for that, but all this has as well an effect on consumer buying behavior. And these two trends, on the one hand side, the pandemic, on the other hand side, these trends in the automotive industry are there together. It is still true that we don't expect for the next years to come back to the highest level which the automotive industry has seen in 2017. We think this will still take a while, some years, before we finally reach that point again.
You've scheduled an investor day for next month. What are the key topics that you're going to try and address during that investor day? It must be a bit difficult without a new CEO as well.
While the topics which we will address are the topics mainly on the technology change in the automotive industry, and our contribution to that, to show how well we are prepared to deliver high-performance computers in the car, what our role can be in operating systems, what our contribution and our system deliveries can be in autonomous driving. This will be the focus, and out of this, including the rubber group, building the whole group strategy for the years to come. After we did not have an investor day for some years now in this changed environment, it is something which the market rightly expects from us, and this is what we will discuss in this investor day, including our midterm targets.
And in terms of strategy, Wolfgang, we've been reporting here at Bloomberg that you're looking to sell part of your business, the turbocharger business. What is the status of those discussions, and are you looking to sell other units?
You know that we have this Transformation C program running, which is the adaptation of Continental's structure to the future of our business. And we have always said, when we started to announce this Transformation C program, that this will include as well portfolio adjustments where they are necessary to make sure that we are moving in that direction where we want to concentrate us. Example, in powertrain, Vitesco, we want to concentrate on electrification. Yes, and this includes then that the one or other unit might not be in the long run right at Continental. Continental might not be the right owner for that, and there disinvestitures might be coming. I don't want to comment on specific areas, but yes, you can expect some things over the next 12 months to happen.
Wolfgang, are you contingency planning around Brexit? Are you buying warehouse space and adding to stockpiles, for example?
Yeah, we had sufficient time now to prepare for that. I think we are not so much affected, but yes, we deliver tires. We are delivering tires, and we are in the UK market for tires. They are imported. We are provisioning for that. We do as well deliver parts to the car production in the UK. We are partly producing even in the UK. And yes, we are preparing for all these scenarios which might happen at the end of this year.
Do you think you're going to have to produce more in the UK if there is a no deal to enable to supply those UK producers, Wolfgang?
Well, this is obviously a decision which has to be made very much focused on the specific product you are talking about. For some products, even if there would be less favorable trade agreements as we have them now in place, it might still not make sense to do a small unit of a product which has economies of scale to produce this in the UK, still might have to be imported. I think this will be true for most of the products which we are selling in the UK. For the one or other part, it might make sense to move production into the UK. I don't see much of that, though.
What kind of impact do you expect this Brexit process to have on just-in-time manufacture? If we assume there's no deal, where does that leave the just-in-time manufacturing process, of which you are a part, of course, because you, as you say, you supply some of those parts to UK manufacturing?
Well, where it is a real tough just-in-time and just-in-sequence process, we are already having the production in the UK to deliver to the car maker just in time, just in sequence, so basically on an hourly basis. Everything else, we believe, can as well be managed as it is today, partly with supply chains which are not having the latest production point in the US, but have that outside, and then we deliver from there with some buffer in between, obviously, in the UK.
Wolfgang, thanks so much for your time. Good to speak to you. Wolfgang Schäfer, the Continental CFO. Let's get a Bloomberg Business Flash. Here's Laura.
Thank you, Anna. Italian payments company Nexi is nearing a deal to buy rival Nets. Sources tell Bloomberg the companies have agreed on most details of the all-stock transaction. It would value Nets at about 7.8 billion euros. It may be Nexi's second major purchase in around 1 month after buying another competitor, Sia. In the gaming space, Epic has won the dismissal of 2 of Apple's claims in its ongoing dispute over access to Fortnite on the App Store. The dispute began where Epic circumvented Apple's payment system. Apple then stooped new users downloading Fortnite and countersued, alleging theft. That's been thrown out, but the main fight goes on. ABN AMRO is bouncing back from a difficult first half of the year. It's posting stronger than expected profit and setting aside less money to cover bad loans. The Dutch bank is on track to meet its overall cost-cutting targets, but it will miss goals for its cost-to-income ratio as well as for return on equity. That's your Bloomberg Business Flash. Anna.
Thanks very much, Laura Wright here in London. Let's get to the markets now. Joining us now is Heather Burke from our Bloomberg Markets Live team. Heather, interesting to see where banks are going today, where technology is going today. It does seem as if we've got a bit of a reversal of some of the trends over the last couple of days. I see the IBEX underperforms. Maybe that's partly the banking story, as it had been such an outperformer in recent sessions.
Yes, good morning. We're definitely seeing some of an internal rotation in European stocks in the past half hour or so. You've had healthcare very defensive, being one of the biggest performers, best performers, and you've seen tech lagging, and also banks and Spanish stocks. So basically, a lot of the more value players that we've seen really outperforming the past few days on vaccine news, investors seem to be kind of pausing for breath, maybe doing some profit taking and looking at some more defensive sectors.
Yeah, and looking at what's happening to tech stocks today and the break with the last couple of days, I guess, and banks, I suppose it has people asking, you know, whether it really was a rotation into value that we were experiencing earlier on this week. What are you hearing?
value stocks have been on a long underperformance versus growth. This week has, been a boost, investors looking for bargains for battered sectors. But sectors such as banks really face a lot of headwinds going forward. Credit loss provisions and the economic slowdown from the pandemic. So investors, again, might be taking pause this morning and seeing, okay, have some of the rotation that we've seen gotten a bit overheated?
And what about sectors that have maybe been going their own way a little bit this week? I mean, Heather, everything seems to have been correlated at one level, and we did see oil prices get a boost from risk appetite earlier on this week, and that seems to be continuing, even as some of the moves earlier on this week are a little unwound. We see a continuation of moves higher in oil prices. 44.52 is where we trade on Brent, but we're not at all back to March highs, are we? Should we expect to get back there? What are you hearing on the Markets Live blog?
The biggest thing, oil definitely has been a beneficiary this week. The biggest sort of headwind that it needs to look at is pandemic demand. Is the economic slowdown that we've seen as a result of the pandemic, how much is that going to weigh on oil prices going forward? That is the biggest thing that might weigh on them going back to the March prices.
Thanks very much. Thanks, Heather. Heather Burke from our Bloomberg Markets Live team. Thank you very much to Heather for that. Ending that conversation, talking there about oil prices and where we might see oil prices settle. As I say, 44.58, up by just over 2% in today's session for the Brent price. That is it for the European market open. Staying with Bloomberg Television. Surveillance is up next. Surveillance will continue to take you through what we're seeing in these markets this morning. The Stock 600 up by 0.5% or so. FTSE 100 up 0.3%. The CAC and the DAX also modestly in positive territory. Interesting to see the IBEX underperform after such outperformance in recent sessions. The banking sector under pressure today. ABN AMRO down by just over 5%. Nordea down by just under 5%. That is certainly where some of the negativity in today's session is coming from. This is Bloomberg.
It came in better than expected, not only in terms of job creation, but also a sharp fall in the unemployment rate consistent with higher labor force participation. That's really good news.
Overall, the gain was solid, but even while this is a very robust pace of job gains, it's a lot slower than it has been in the summer months.
Great that we saw the job gains we did, but they still are diminished from what they were, of course, back in April and May. And the scarring, the sort of wounds that were created by COVID are beginning to fester.
I would caution people to look at the top line number because I don't think it tells the entire story. Employment relative to population is still well below where we were pre-crisis, and that's because I think that we're going to have some lasting damage.
Depending on what you look at, jobs creation or the unemployment rate, you have different views as to whether the improvement in the labor force is keeping up or slowing down.
the outlook for the economy is extraordinarily uncertain and will depend in large part on the success of efforts to keep the virus in check.
They're torturing themselves to explain that they're there, ready, willing, and able.
The Fed has basically done all it can do, with the exception of extreme emergency measures.
Joe Biden says Trump's refusal to concede is an embarrassment as the White House stalls the transition, while Secretary of State Pompeo even talks of a second Trump administration. Biden's Brexit warning. The president-elect uses his first call with Boris Johnson to reaffirm his support for the Good Friday Agreement. And risk on rotation, a move out of tech picks up steam. Well, a Chinese cracks down on tech wipes almost $260 billion in 2 days. Alibaba and Tencent sink. Well, good morning, everyone. Good afternoon if you're watching from, of course, Asia. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. So let's talk about the rotation. Let's talk about what exactly we've seen in the markets and what's to come as well. Now, if you look at some of the things that are closed today, we don't have cash U.S. Treasuries. This is because it's Veterans Day. Of course, in the UK, we call it Remembrance. If you look at stocks, they're advancing thanks to some of the cyclical industries at the expense of technology shares. Crude oil is rising. It's very clear that tech shares are underperforming, including the Dutch internet provider Prosus. The picture is a little bit brighter, actually, for U.S. shares, and we see some of the futures edging higher along with contracts from the S&P 500. So we'll have plenty more, of course, on the markets. Also coming up, we speak to the former UK Prime Minister, Tony Blair. We'll be talking about the future of the UK-US relations under Biden, the country's handling of the pandemic, and much more. Now let's get straight to the Bloomberg First Word News. Here's Laura Wright. Hi, Laura.
Good morning, Francine. Joe Biden is warning Prime Minister Boris Johnson not to put peace in Northern Ireland at risk in pursuit of Brexit. He used his first official call with the UK leader to reaffirm his support for the Good Friday Agreement. It's the latest sign that Biden won't be the unequivocal backer of Brexit that President Trump has been. The UK is planning sweeping new powers to intervene in foreign takeovers it deems a threat to national security. It includes retroactive action on deals that complete after the bill's publication. That's a controversial provision that critics warn may deter investors, but the UK says it is in line with similar rules seen in France, Italy and Germany. Hong Kong has removed 4 opposition lawmakers due to new rules from Beijing. China has passed a measure requiring politicians in the city to be patriots and not support independence. The remaining opposition members of the Legislative Council earlier pledged to resign en masse if any were disqualified. The hurdles to mass distribution of Pfizer and BioNTech's vaccine are becoming clearer. Shots have to be stored in a deep freeze, transported in refrigerated vehicles and once thawed, used within 5 days. Countries will need to build the production and transportation networks from scratch. That will require massive investment and coordination. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Francine.
Laura, thank you so much. Now let's kick it off with the markets. European stocks continuing their November advance with gains fueled by the rotation into value stocks. Now, U.S. equity futures are edging higher. The dollar is trading relatively flat after recovering from its weakest levels on Monday when it sank to a 2-year low. Now, joining us now is Itai Tukman, global head of FX at Citigroup. Itai, first of all, how much of a rotation is this that will actually last? Is this just the markets being whipsawed and concerns on technology, or is this a move that can stay?
You know, we think this is a more fundamental and secular move. We continue to be quite dollar bearish. And we think that, the long-term trend around overweight dollar assets and low hedge ratios, coupled with a very vigorous 2021 global recovery, should put the dollar very much on the back foot in the months ahead.
What does it mean for some of the emerging markets that are, of course, tied to dollar?
Look, I think that EM has been a very unloved asset class for a number of years. And I keep saying, it's not one construct. So there are winners and losers in the emerging markets. But there's some high quality EM countries and currencies that we quite like. Mexico is a very, very good example of one. We've seen a decent rally in Mex over the last few weeks, but we think that can continue. It's a weak level. There's quite a good real yield in Mexico. It's very well geared to a cyclical recovery, including the oil factors. So we like currencies like Mex.
So, Itai, what exactly is the market looking at for this rotation? Is it, the Biden administration? Are they overlooking some of the concerns that could actually hit us quite hard? Is there too much optimism about a smooth transition? And is there too much optimism that we'll get a vaccine pretty soon?
Look, I think the market's looking past some of these political issues now that we're post-election. And I think, the real question is what happens to the fiscal stimulus. Considering we didn't get a blue wave outcome, it looks unlikely that we get a blue wave outcome. And I think the market is simply implying that the Fed will carry more of the load if necessary. So if we do get pessimism, if we do get a sort of a weaker recovery, the virus situation gets worse, the market's simply perceiving that you'll get more monetary stimulus out of the Fed. And again, that puts the dollar on a weak foot.
Itai, what's the most strange pairing right now that you're looking at that you think is a good bet? Is there something significant out there that, that's being overplayed? And is there something less significant where you can actually make some money?
Sure. I mean, we like currencies like the Aussie dollar, where we think, again, you benefit from cyclical recovery, you benefit from Asia certainly having a much better prognosis, handling the virus situation much better, in Australia and New Zealand doing quite well. And then you have the sort of terminus of monetary easing that I think is now quite likely in both Australia and New Zealand. So Aussie dollar has a lot of these factors going for it. So we're quite bullish on Aussie. The other one that I think we talk about a lot is sterling. And again, there's this sort of binary deal, no deal question looming. But, if you're like me and you really believe that we will get a last minute deal, UK assets, very cheap on a global basis, a lot of investors waiting for certainty to buy into the UK. That could be a sleeper trade that could move quite a lot.
Itai, what do you do with Turkish lira? I need to ask you about it because, frankly, the last week was dominated by U.S. politics and what's going on with Erdogan and the central bank.
So, Turkey has been a very challenging situation, both for investors and domestically. And at the moment, we have a bit of a bright spot with a return to what I would call a more orthodox economic policy, and a new finance minister saying all the right things to the market. But again, the economic situation in Turkey still has, a lot of challenges ahead. So I'm not convinced that it's the moment to be, very long Turkish lira. I'd say on balance, I think the currency can continue to sort of depreciate. But, the near-term risks of some kind of much bigger crisis moment, a bit lower.
Thank you so much, Itai Tukman, there, Global Head of FX at Citigroup. Too short a time, Itai, so you'll have to come back to also talk about pound and euro. Coming up, we speak to the former UK Prime Minister, Tony Blair. We'll be talking about the future of the UK-US relations under Biden. We'll also talk about the country's handling of the pandemic and much more. Tony Blair coming up shortly. This is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here? It's a huge market, it's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
Is the State Department currently preparing to engage with the Biden transition team? And if not, at what point does a delay hamper a smooth transition or pose a risk to national security?
There will be a smooth transition to a second Trump administration.
I just think it's an embarrassment, quite frankly. The only thing that, how can I say this tactfully? I think it will not help the president's legacy.
Well, that was the Secretary of State, Mike Pompeo, and President-elect Joe Biden speaking yesterday. Pompeo's remarks may have been in jest, but adds to Trump's unsubstantiated claims of voter fraud. Now, Donald Trump praised Pompeo's comments, but one Democratic lawmaker described them as shameful and dangerous. Joe Biden, in his first news conference as president-elect, said he was moving forward regardless. Well, joining us now is Tony Blair to talk about the transition, to talk about politics in the U.S. and elsewhere and multilateralism. He is, of course, a former UK Prime Minister, the founder and executive chairman of the Tony Blair Institute of Global Change. So thank you so much for joining us. Mr. Tony Blair, how should global leaders actually deal with this rather unusual transition period in the U.S.?
Well, what they'll do is they'll let the American system take its course, obviously, and they'll not want to interfere in that, but they're going to treat Joe Biden as essentially the next American president, which is why you found the leaders engaging, having telephone calls with them and so on. So they'll probably take the view this thing will sort itself out in the next few weeks, and they will act on the basis they're going to be dealing with the new administration. And what governments around the world, including our own here in the UK, will be doing is working out how they establish the right relationship, what are the issues they're going to cooperate on, and so on.
What does it mean for, does it actually change the standing of the U.S. in the eyes of other leaders going forward? Or is it an episode that will be, dealt with swiftly and then we can put behind us?
I think it's going to be the latter, honestly, because most people are dealing on the basis that, there will be President Biden, and that's the administration they're going to be looking at. So in all the conversations I'm having with different governments, we work with about 25 or 30 different governments around the world. They're just operating on the basis that at some point that will clear itself out of the American system, and they will get on with dealing with the new administration come the end of January.
What does Joe Biden administration actually mean for multilateralism?
I think what it will mean is that there will be a reigniting of multilateralism in a number of different ways. So I think you'll find the transatlantic alliance gets a boost and goes back on the table as a central factor for the US administration. I think you'll find there's a re-engagement around WHO. I think particularly on the climate change agenda, America obviously will be much more forward-leaning. So that's going to be a big change. And then, I think in general terms, there will be people will want to engage with the administration to try and work out, for example, what will their relationship with China be? How do people fit into that? So there'll be people will think there's going to be more stability and predictability. They will believe that there's going to be a renewing of traditional alliances. And then I think for the rest of it, frankly, people will engage and wait and see a bit.
Does it make a big difference, or should it make a big difference to the current Prime Minister of the UK? Is it be more difficult to have, to deal with Brexit and then have a quick deal, a commercial deal with the US?
I don't think so in the end, because even though obviously, Donald Trump was very much in favor of Brexit, and Boris Johnson became prime minister as a result of Brexit. On trade, I think, a trade deal with the US is quite a long negotiation, frankly, whoever was in power in the US. The Northern Ireland situation to engage with the American administration, because the UK government, this is pretty much a consensual issue within UK politics. So, and Britain has got the leadership of the International Negotiating Forum for next December, not this December, the December afterwards. And therefore that's, I think, probably, despite all the past around Brexit, I think there will be a genuine, it's a deep relationship, the US-UK relationship. It's a deep systemic relationship in our military and intelligence, across the board on trade and business. And you have a very big issue, namely the climate agenda, in which this UK government and this new administration will be aligned. And I think the sensible thing for the UK government to do would be very much to focus on that initiative and get also, I think, an opportunity, because the US is the G7 at the moment. The UK takes it over for next year. That's also around issues to do with the global pandemic, for example. I think there's going to be a real opportunity there for the two governments to focus on what are the global things we should be doing in the future to make sure we're better prepared next time. So I think there's, despite what people will say, and despite obviously a certain history, and despite them being from different parts of the political spectrum, I think there's plenty for the UK and US governments to work on if they want to, and they will want to.
Tony Blair, I know your institute and yourself have done a lot of work on COVID-19, and you've just put out something called, light at the end of the tunnel. First of all, are we dealing with track and trace and lockdowns and COVID in the right way in the UK?
Well, look, I've had my criticisms of the government over lockdown and test and trace, and probably, hopefully, will combine the four key elements to getting us out of this in a sustainable way and getting back to something like normal. And that is vaccines, therapeutics, testing at mass, and data. And I think my paper's actually, my institute's publishing a paper, in fact, on vaccines today. If you look at vaccines from around the world now, we've got some very, very promising candidates. I think in the UK, we'll probably be using 5 or 6 different vaccines. You've got the Pfizer one. The other day, AstraZeneca one's in a very in the US, you've got an AstraZeneca one, there'll be more coming through. Those will reduce, particularly for early stage the best data systems we can possibly have to record all this information. But if we focus on
that this vaccine will work and that it will be distributable to enough people.
by, say, 50%, and probably these vaccines will be safety, get the vaccines out as soon as possible, because you're going to save lives and you also allow your economy to start moving again. But it's a big logistical exercise to work out exactly who gets the vaccines first and how you register each person and how you then log the data of that. And frankly, for the next year, both with your knowledge about this disease is still going to be increasing. Safety. But that's the only way you're going to deal with this is we're going to be living with COVID for several years. I mean, that I think is absolutely obvious. And I think part of the problem that we've got into is that our public, certainly in the West, has thought that the policy of governments was to eradicate the virus. It's not possible to eradicate it. You're going to have to live with it. But the challenge in living with it is that it's significantly more serious than the ordinary flu, even if it's not the bubonic plague, as it were. So the question is, what is
부정행위 없는 우리 회사 온라인 시험. 이제 시험 감독은 모니터.
The Boston Symphony Orchestra presents BSO at Home. While you stay inside, enjoy a curated collection of archived concerts and behind-the-scenes stories from BSO musicians. BSO Homeschool provides lessons for music lovers of all ages. New performances and messages from musicians are added regularly. Enjoy these selections and much more at bso.org/at-home.
其实它本质上就是线下。
Offline sales will recover to a better level in 1 or 2 quarters. But if we only look at online sales, I believe it's already returned to normal.
Well, that was Alibaba's vice president speaking at the annual Singles Day, beginning with a bang, sales blowing past last year's record. However, Chinese crackdown on tech giants. The risk-on sentiment that buffeted sovereign bonds fell in Europe, and Treasury futures also slipping. Now, coming up, it's our weekly show, ETF IQ Europe. That's coming up next, and this is Bloomberg.
Consistent with higher labor force participation. That's really good news.
Overall, the gain was solid, but even while this is a very robust pace of job gains, it's a lot slower than it has been in the summer months.
Great that we saw the job gains we did, but they still are diminished from what they were, of course, back in April and May. And the scarring, the sort of wounds that were created by COVID are beginning to fester.
I would caution people to look at the top line number because I don't think it tells the entire story. Employment relative to population is still well below where we were pre-crisis, and that's because I think that we're going to have some lasting damage.
Depending on what you look at, jobs creation or the unemployment rate, you have different views as to whether the improvement in the labor force is keeping up or slowing down.
Welcome to Bloomberg ETF IQ Europe. I'm Francine Lackwin. Over the next 30 minutes, will be your guide to the region's thriving market in exchange-traded funds. Everything you need to know about the funds and the flows. A record rotation optimism for a post-pandemic recovery sees investors piling to underloved sectors while defensive bets crash. We'll monitor the moves. Is it time to buy then as the dust settles on America's election? We'll discuss how investors should position for a Biden White House. And after gold tumbles on vaccine optimism, European ETFs tracking the metal continue to see inflows. We'll discuss the prospects for one of 2020's most popular assets. Well, hi, everyone. We're going to have a packed show. But first up, let's take a look at which countries and sectors have been attracting the money. Danny Berger's here with the details. Hi, Danny.
Hi, Francine. That's right. I've got FFLO up on my terminal here. And you can see that for European tracking ETFs over the past week, we've seen net outflows, 400 million to be exact. This is interesting after a week where we saw the stock 600 rise 7%. The worst region was the Nordic region. But I really should say when you see $141 million worth of outflows, this is really concentrated on one singular fund. It's a high dividend, low volatility fund. Low volatility has not been doing very well as a strategy over the past week as investors go more towards those cyclical and volatile names. You also see, though, this buildup of outflows in Germany and France and Italy and Spain. Sure, that could be coronavirus fears. It could be taking some profit after the rally we saw. But regardless, flipping to outflows after we actually saw some solid inflows last week. Finally, I should just point out United Kingdom seeing some very, very slight inflows today. That's all thanks to some stock funds. For the most part, gilt funds have been seeing outflows over the past week, but really stocks helping that bring it back, though it doesn't help fix the picture we're seeing where investors in European ETFs have, for the most part, withdrawn their money over the past week, Francine.
Danny, thank you so much. Our Danny Berger there. Now, it has been quite a week for investors. The biggest exchange-traded fund in the world added just shy of $10 billion on Monday as markets jumped on news of coronavirus vaccine progress. State Street's S&P tracker saw one of the 3 best days in more than a decade. Now, as well as a surge of new money, there was also a breathtaking rotation, investors dumping tech and buying into some of the most beaten-up sectors of the market. Well, joining us now to discuss the moves and how they're showing up in the ETF space is Sam Potter. He's our senior editor at Bloomberg who oversees ETF coverage. Sam, thank you for joining us. If you look at the SPY flow, quite something, but this wasn't just indiscriminate buying, was it? Let's get to Sam.
Good morning. No, it wasn't. As you just mentioned, it was one of the 3 biggest inflows in a decade. It was more than 10 times the nearest competitor on the day in terms of inflow. Now, when we see that kind of volume, that kind of inflow into a broad stock index like the S&P 500, you could say immediately indiscriminate buying. People are just going risk on and they want in stocks. But as you heard Danny talk about just now and the flow picture, and as you yourself have mentioned, that's not the case. All year long, a bet on the S&P 500 has really been about tech stocks, which have dominated the gauge and driven the gains. And this time, what we have seen is a move away from that. And if you look under the surface of that eye-catching 10 billion and look at some of the other funds getting inflows, we saw XLS, that's the financials ETF. We saw XLI, which is the industrials ETF. Both had the best inflow since June on Monday. Jets, the airline ETF, that surged so fast that there was a disconnect in the pricing. It ended with a premium of 1.8%, which was the highest since March. So what we are seeing is bets on a more broad-based rally. This rotation to cyclicals, the vaccine news causing hope that actually some of these beaten-up sectors are going to revive.
Sam, plenty of cash chasing equities. Does this mean we're finally seeing some of the huge flows into fixed ETFs reversing?
Well, this is the fascinating picture. Obviously, all year long, we have seen a pretty strong bid for bond ETFs. The inflows hit a record for the first time ever. Inflows into bond ETFs in the US may actually beat inflows into equity ETFs. And you would expect with a big risk-on move like we're talking about that maybe some cash would be coming out of those bond funds. In the event, what we see, there's been a small exit from government funds, but it's minor in the scheme of things, and the bonds are still recording inflows overall this month. What's that telling us? It's telling us about the election result and the consequence of that. Monetary stimulus, because we may be looking at divided Congress, the chances of a large fiscal stimulus have dropped. That puts all the onus on monetary stimulus on the Fed. That means low yields and asset purchases. That makes bonds still a secure bet. At the same time, we still have risks around us. We still have COVID. We still have the election to be finally settled in terms of whether there's this blue wave or not. So investors are not yet ready to completely abandon the sort of safety of bonds.
Thank you so much, Sam Potter there. Bloomberg News. Now joining us today is Keshava Shastri, Head of Capital Markets at DWS. Keshava is also Chair of the ETF Committee at the Investment Association. Keshava, thank you for joining us. When you look at the big market moves, actually, that we had on the back of the U.S. politics, on the back of this rotation, how does it play out in the ETF world?
Yeah, thank you, Francine, for inviting. Great to be here. We've had an amazing year, actually. We've seen we're on track to have a record year this year. We're up nearly 12 billion in net new assets. And the price action, it's interesting that you mentioned and also what Sam mentioned. Some of the news on the vaccine has been coming out and the market reaction shows that some of this already being priced in. But the vaccine still has a few more steps to go through before mass public distribution, and might not see mass production before end of the Northern Hemisphere winter. But on this basis, we probably assume there'll be cyclical industries that could benefit a lot from this, who are the initial kind of the losers in the early pandemic, the leisure, the hospitality, the airline. But when we speak to clients now, they're really looking at coming back into those kind of sectors, some of our world sector funds and the US sector funds as well. And there is what Sam interestingly mentioned, there is a equity flow coming in that we've seen, especially like some of our China products. There's what you mentioned with the election results, there's probably better trade relationship. So our China fund, with more than $1 billion now, significant inflows, and also really strong proactive discussion with clients to look at how they get into that, both on the equities, but also bonds as well. So it looks like more of a risk on, and also on our credit ETFs as well, we're seeing inflows in our fixed income. So to what Sam mentioned, we're not seeing outflow from fixed income to equities. It's actually equity having inflows, but also fixed income also having inflows. And the interesting is also the ESG. Right. When the market moved down in March, April, people went out of the core benchmarks, but they're coming back in through ESG, which has been a big benefactor as well.
Keshava, can I just get back to some of the market rotation that we saw? Do those moves, are they actually led by ETFs, or do ETF moves then follow?
I don't think, we've done a lot of empirical evidence on this. I don't think, obviously ETFs price comes from the underlying basket, but, ETFs are not big enough to have a huge impact on the underlying. I think the market makers that you see will look at both those angles. I don't think it's quite right to say that ETFs having a massive impact on the underlying basket itself. But obviously, a significant demand in ETF coming through, the market makers will hedge it using the underlying basket to make sure that they provide best execution for clients. So it's not like one is, in the ETF, it's having a negative impact at all. It's actually, in many cases, it's providing that 2 layers of liquidity that the market has been talking about and the issuers are talking about.
Keshava, thank you. Keshava Shastri there from DWS stays with us. Now, coming up, what does a record rotation mean for quant strategies, and how should investors be positioned for a Biden presidency? We'll discuss that next. Hong Kong's opposition bloc has resigned en masse Wednesday. This is after China moved to disqualify lawmakers who aren't deemed sufficiently loyal. That's one of Beijing's strongest actions yet to quash dissent in the territory. This is huge. It will have, of course, repercussions across the world. We'll be live in Hong Kong shortly. This is Bloomberg.
The outlook for the economy is extraordinarily uncertain and will depend in large part on the success of efforts to keep the virus in check.
They're torturing themselves to explain that they're there, ready, willing, and able.
The Fed has basically done all it can do, with the exception of extreme emergency measures.
Of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take? With you.
Learn how to listen.
They will continue to play an important role in Hong Kong.
This is Bloomberg ETF IQ Europe, everything you need to know about the funds and the flows. I'm Francine Lacqua. Now, how should investors position for a Biden White House? And what does the rotation mean for quant strategies? Let's get more with our Danny Berger. Danny, what strategies have been doing well through all of this?
Francine, there's this really interesting push and pull between the momentum and the value story. There had been some repricing out of value after the Biden win, though his hopes for a blue wave faded, which was said to have really benefited value. But as the week unfolded, here's what the flows ended up looking like. And that's some pretty sizable outflows coming from low volatility. So this is more or less a bond proxy bet. It's going to be doing better in a lower yield environment. However, with the vaccine news, you see the cyclicals outperform, more volatile stocks outperform. So we get these outflows coming from low volatility. Now, when it comes to inflows, size hits the top over the past week in terms of smart beta flows, seeing $156 million worth of inflows. So this is smaller cap, riskier stocks. Again, these are the kind of equities we saw investors really rally to after the positive vaccine news, with hopes that we'd get a resurgence. And although momentum got hard hit both globally and in Europe, momentum ETFs still saw inflows, more than $100 million worth of inflows. I should say that contrasts with value, which only saw half of that amount. So at least ETF investors over the past week still going with the old reliable momentum trade, perhaps not necessarily convinced that value is the place to be. Though I should say a lot of strategists say European cyclicals, European value will do better under a Biden presidency, given perhaps more softer trade relations, less tension, which should benefit a lot of European industries, Francine.
Danny, thank you so much. Our Danny Berger there. Still with us, Keshava Shastri from DWS. Keshava, when you look at what happened in terms of money flowing maybe into gold and other parts of asset classes in the ETF space, actually, does the market become more sophisticated in dealing with political turmoil? It could be the U.S. election, or it could be something happening in Hong Kong.
Absolutely. We see, clients really, especially in Europe, 80% plus of our clients are institutional clients, and they're engaged very actively with us on the capital markets team, but also on the sales team to really look at how do they position this. But we saw this during the Brexit day, the elections in 2016, and even this year. We came into the office much earlier than normal market hours to really help clients get that exposure, whether long or short. And that's the other thing that's happening in the US. Hedge funds have been a lot more active. For the last decade plus time, but in Europe they're slightly a bit behind. But in the last 2-3 years, they've really been using the advantage of ETFs, intraday trading, going long, but also going short to put on those strategies. And what kind of Danny mentioned about the short-term quant guys. On Monday, they pretty badly got hurt on playing the long momentum, which has been very much the long tech recently, long tech, but also short value. But short value also was played as a long momentum game because the value was kind of going down in one direction. So and that reversal on Monday had a significant impact. And we saw clients using some of our ETFs to really play that and make sure they were able to either hedge or also put into new position. But to what Danny mentioning that there are still people looking at this is still a short move, but they can really come back in again and use that strategy of kind of being long momentum. But it is whether if it's gold, again, gold has been very big trend you mentioned at the beginning. We have a $10 billion kind of commodity platform, and the goal is like $8 billion between different currency hedging products that we have. And that's been really used, and also between currency hedging, looking at if it's euro or sterling, people's expectations. So people are rotating between currency hedge products of either if it's commodities or if it's kind of even equity and fixed income to really play that political landscape and how that has having an impact in the marketplace. But that sophistication of using not only for long-term, long exposure, but using more tactical trades is significantly increasing in Europe, and more hedge funds and smart money using the products as well.
But Keshava, so the more the money is using ETFs in Europe, how will it actually change the markets? Again, one of the themes that we try and explore is that it's still very nascent in Europe compared, for example, to the ETF market in the US. Does it really catch up? Or at least try to catch up in these kind of very volatile and very difficult times for the markets?
Absolutely. Actually, you mentioned at the beginning, as the chair of the IA, after the March volatility, we put out a paper from the industry to really look at how that market behaved and how clients use the products. And because it's an institutional client base, they use it very sophisticatedly. And what we saw was that, like in the US, in Europe also, the use of ETFs increases significantly as volatility really increases materially. And obviously in US, you have some of the structural evidence supportive of like tape, and there's a single consolidated tape and completely visible volume, which also is there now after MiFID II. You have the post-trade transparency, but the data is not as easily visible because there's no consolidated tape. And we as the industry body are working on that. But when you look at the empirical evidence, and again, happy to go more into detail to anybody else has questions afterwards, but the empirical evidence does show, even in Europe, the increased use of ETFs is increasing throughout when the volatility comes in. It is not just a product that's used during calm period, but if you look at all of our peers in the industry, the client both the conversation but also use is getting broader and deeper in terms of the size of products. We see even during the height of the crisis in March, April, we had 500 million buy orders coming into our dollar credit and some of those funds, which in other wrapper products we're actually seeing outflows or significant trouble. So it is increasing in Europe. With a fragmented market, Francine, as you mentioned, it's harder to get to the detail or get the full picture quickly. But there are experts teams like capital markets teams in issuers that we can get to that product information.
Keshava, thank you. Keshava Shastri there from DWS stays with us. Coming up, news of a vaccine breakthrough saw the gold price slump the most in 3 months earlier this week. So why have European funds continued to see inflows? We'll discuss that next and take a look at this week's ETF winners and losers. This is Bloomberg.
Give you a sense of the real-time action. The 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
This is Bloomberg ETF IQ Europe, everything you need to know about the funds and the flows. I'm Francine Lacqua. Now let's take a look at this week's winners and losers with our Danny Berger. She has your ETF leaderboard. Hi, Danny.
Hi, Francine. Over the past week, what we've seen in funds and flows in European-listed ETFs really reflects some of the greater euphoria we saw in markets to kick off the week, reflecting the news that there's progress on a coronavirus vaccine. Much like in the U.S., we saw the biggest S&P 500 fund see a record day of inflows. The best fund in Europe over the past 5 days was also an S&P 500 one. European bonds and European stocks also hitting the top of the leaderboard. I should say in the corporate bond space, everything from Ryanair to Unibail, the Westfield Mall owner, saw their corporate bonds rally with this optimism over cyclical growth coming back to the European region. Now, flipping over to the outflows, we see the opposite. You see some of the safer investments, investors pulling money from those. That ex-tracker government bonds one, I should say, saw its worst day on Monday since April. So a lot of those safer trades really losing some steam. Interesting, though, that the MSCI World Index saw funds pulled from it, given that the All-Country World Index this week hit a new high, though the U.S. Minimum volatility certainly fitting that theme of buying riskier assets away from safer assets. We talked about this earlier in the show, that minimum volatility was one of the worst factors over the past week when it comes to flows. I should say so bad that Natixis even closed one of its minimum volatility funds, saying that they didn't have enough assets in it. Investors really just not interested in that bond proxy at the moment, Francine.
Danny, thank you so much. Danny Berger there. Now, news of the vaccine breakthrough saw the gold price slump the most in 3 months earlier this week. But while the biggest American gold ETFs saw heavy outflows, the two largest European funds saw substantial inflows. Now, that left net global ETF gold activity fairly flat overall. So what does 2021 hold for one of the year's most talked about exchange-traded products? Still with us, Keshava Shastri from DWS. Keshava, maybe if you don't buy gold ETF, if something goes wrong in 2021, is there something else that you would buy?
I think there is gold has definitely been in big vogue, and there is a big trend that's been happening from futures to gold product and silver futures to silver ETCs or ETPs. This year, as you rightly said, more than 10 billion money has gone into gold products alone. So that's been a trend for 2021. I think when we speak to clients, the large institutional clients, what's on their mind, I think ESG is definitely a big focus for them, and also kind of fixed income. With the market being so much larger, so we're looking at how do we provide that kind of exposure to clients, but also then be putting fixed income and ESG together. So we've launched quite a few products recently on dollar corporate ESG, short duration US ESG Euro corporate. So that is a big theme, and what kind of Danny mentioned about some of these MSCI World and some of the outflows, we're seeing clients getting out of those core range non-ESG into actually our ESG range. So that's been a massive trend. And I think when we speak to clients actively and even internally for our own, at the firm level, our big priority is ESG. So that will be a key thing to kind of look at. But also on the currency hedging, as some of these kind of volatility kind of cuts in between Brexit or maybe other things, we're seeing a lot of clients playing that in currency hedge exposures to adding to that.
Keshava, thank you so much for all of your time today. Keshava Shastri, their head of capital markets at DWS. So certainly a lot going on in the markets and a lot going on in the ETF space. Now that's it for this week's Bloomberg ETF IQ Europe. Yes, we will be back with more next Wednesday at 9:30 a.m. London time. Of course, we'll have the latest on leaderboards. We'll see the week that was a lot of focus, of course, not only on gold products ETFs, but one of the main questions, what happens to liquidity and what happens to volatility in the markets from here until the end of the year. This is Bloomberg.
It came in better than expected, not only in terms of job creation, but also a sharp fall in the unemployment rate consistent with higher labor force participation. That's really good news.
Overall, the gain was solid, but even while this is a very robust pace of job gains, it's a lot slower than it has been in the summer months.
Great that we saw the job gains we did, but they still are diminished from what they were, of course, back in April and May. And the scarring, the sort of wounds that were created by COVID are beginning to fester.
I would caution people to look at the top line number because I don't think it tells the entire story. Employment relative to population is still well below where we were pre-crisis, and that's because I think that we're going to have some lasting damage.
Depending on what you look at, jobs creation or the unemployment rate, you have different views as to whether the improvement in the labor force is keeping up or slowing down.
So do you get tired of people calling you a jazz legend? Do you feel older when they say that to you?
Yeah, I like the word jazz. I don't like the legend.
Joe Biden says Trump's refusal to concede is an embarrassment as the White House stalls the transition. Secretary of State Pompeo even talks of a second Trump administration. Biden's Brexit warning. The president-elect uses his first call with Boris Johnson to reaffirm his support for the Good Friday Agreement. And risk on rotation to move out of tech names picks up steam. A Chinese crackdown on tech wipes almost $260 billion in 2 days. Alibaba and Tencent sink. Well, good morning, everyone, and welcome to Bloomberg Surveillance. I'm Francine Lacqua here in London, Tom Keene in New York. Tom, of course, we'll look at live pictures on Armistice Day. I think we have live pictures coming on from Paris, but I think we also had some live pictures from Hong Kong. And Tom, in the last 15 minutes, something that could be quite significant on Hong Kong is the fact that actually some of the opposition has quit to protest some of the powers coming in from China. And this was after China moved to disqualify certain lawmakers who are not deemed sufficiently loyal. And so the opposition bloc in Hong Kong resigned altogether this Wednesday.
Well, the present news from China, but it can wait for Armistice Day. This in Paris, the Champs-Élysées. And the Arc de Triomphe, obviously early 19th century, but not known, the first eternal flame was lit in the Western world in centuries in 1920 beneath the Arc de Triomphe, and starts an interesting day for remembrance worldwide. Of course, in France, there's always a tone here of the cost and the price of World War I. Francine, I would say that this dovetails with a Remembrance Day of an aging queen in the United Kingdom. And over in the United States, overnight, Francine, there will be no focus on Armistice Day. There is absolute chaos, no other way to put it, at the Pentagon with the resignation of the Secretary of Defense. So it is a very different Remembrance Day this year.
It is, Tom, also because the coronavirus pandemic, of course, is limiting public services. So a lot of people are respecting the 2-minute silence. In the UK, it usually falls in an hour from now. But you're right. There are so many things that people are thinking about because a lot of the uncertainty in the U.S. politics. But again, we remember the fallen on Armistice Day. Now let's get straight to the Bloomberg First Word News in New York City. Here's Ritika Gupta. Hi, Ritika.
Morning, Francine. Tom. President-elect Joe Biden calls President Trump's refusal to accept the results of the election an embarrassment. The president won't allow his administration to cooperate in the transition of power. And Biden isn't getting the intelligence briefing that presidents-elect normally receive. Biden says the president's actions won't help his legacy. President Trump is quickly remaking the Pentagon leadership in the wake of the election. A day after the president fired Defense Secretary Mark Esper by tweet, 2 senior Pentagon officials stepped down. So did Esper's former chief of staff. Trump allies are poised to take acting roles. Critics say that sends a signal of turmoil in the military leadership. The coronavirus is roaring back in U.S. cities. That comes after a couple months of the disease being essentially a rural problem. According to the CDC, metropolitan areas are now averaging a daily record number of cases. That has meant rising cases in and around Denver, Detroit, and Chicago. The virus is also mounting a comeback around Boston, Newark, and New Jersey. In Hong Kong, opposition members of the legislature quit after China moved to disqualify unpatriotic lawmakers. It's one of Beijing's strongest moves yet to put down dissent in Hong Kong. The government ousted 4 lawmakers as soon as China passed the law. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Francine Tom.
Ritika, thanks so much. Let me look at the data right now. A lift in the equity markets with the bond markets closed here on November 11th. Futures up 24. Dow futures at level 29,507. So some real resiliency away from big tech. And even big tech does better today with the NASDAQ 100 up. The VIX comes in 24.29. Now, I don't have bond quotes, but I have a final quote on 10-year at 0.9753. That's not a live quote. But nevertheless, that shows over the last 48 hours how we've nudged up on the 10-year yield. A little bit of dollar strength today. I don't want to oversell that. I mean, the euro 117.89. Francine, help me.
Stocks are advancing in Europe, Tom. Investors continue into this rotation into cyclical industries at the expense of technology shares. Again, we look at companies such as internet firms and, of course, fintech giants in China because the tech sell-off deepened after China's crackdown. So that's a story that we're going to follow very closely. But again, you're absolutely right, Tom. If you look at the risk-on sentiment, it definitely buffeted sovereign bonds, which fell in Europe, and then treasuries are closed today because of Veterans Day. But you're right, treasury futures also sleeping, Tom.
We have a wonderful guest to get us started here. But first, with the tumult of the last, I want to say 24 hours, but I believe it's Tuesday. There was an election a week ago. Let us listen to the president-elect.
I just think it's an embarrassment, quite frankly. The only thing that, how can I say this tactfully? I think it will not help the president's legacy.
Very good. Mr. Biden speaking yesterday, and of course the news flow, and again, folks, the news flow late into the evening in Washington and overnight has been extraordinary. We'll bring you up to date on that as we look at economics, finance, investment, and yes, this political season. There is Christine Lagarde now holding court in Frankfurt, Christine Lagarde of high school in Washington, D.C., and then there is Wolfgang Ischinger of Germany, who's had high school in Illinois, and after that, Tufts, of course, in their acclaimed Fletcher program. We're thrilled that Wolfgang Ischinger could join us this morning. He is a former German ambassador to the United Kingdom, the Court of St. James, and of course to the United States as well. Ambassador, what a most interesting time to speak of a world in danger. Define that within your book. What is the new danger this world faces?
Well, thank you for having me on your program. I think this is the best moment we can ask this question. When I finished editing my book, World in Danger, I did not know that if I had to rethink the title today, I would probably want to say World in Great Danger, because many of the certainties which we in Europe, and maybe also you on the American side, which we have been taking for granted, seem to disappear as we speak. What about the protective umbrella that the United States of America has made available to Europe for the last 70 years? Is it there to stay? Or as President Trump suspected? Is it no longer necessary or useful for the United States? What about the ever closer union of the European Union? A principle with which I grew up as a young diplomat for the last 40 years. Brexit demonstrates to us that the ever closer union is not a given. And what about, China and possibly Russia as responsible stakeholders? That was the idea that we pursued not so long ago. Quite obviously, China and Russia are not going to want to be responsible stakeholders in the kind of system that the United States with her allies created after World War II. So things have been falling apart, and this is a dangerous situation because it invites conflict, it invites misunderstanding, it has created enormous mistrust.
Right. The Chancellor of Germany, I believe, is 59 years in holding. We all know that. And, of course, she has been elegant for 14 years, moving on 15. Ambassador, I'm fascinated what you think of a Trump at 74 and now a Mr. Biden soon to celebrate his 78th year. Are you worried at all about a physical energy to do the exhausting work of diplomacy?
I'm over 70 myself. My own experience, speaking personally, is that if you have a challenging mission in which you believe, it doesn't really matter whether you're 25 or 75. You're gonna give everything you have, and you're actually going to wake up earlier each morning because you want to get things done. So I don't really think, unless there is major sickness coming in, I don't think that you can't carry out this kind of mission at age 75 or 78 or so. Of course, you're going to get tired a little earlier, but having watched President Trump over the last 4 years, he has found sufficient time to go golfing and to relax and to recover. And I don't see why the next president can't do the same thing.
Right. Ambassador, what's the easiest thing that Joe Biden can do to try and bring back trust within the international community?
Just be himself. We know him. He's been around for 40 years. Every sitting European head of state or prime minister, with very, very few exceptions, knows Joe Biden, has met in Washington or at our conference, at the Munich Security Conference, where he's been a frequent guest, et cetera, et cetera. So he is a known entity. People trust him. They've known him for a long time. He was the vice president of the United States for so many years. So if he just acts as Joe Biden,
right,
he is a living trust-creating, confidence-creating measure.
But and Ambassador, Joe Biden has recently said a clear message to his allies, which is we're back. Can the U.S. really be back, especially in this transition period where everything seems to be contested, where the Trump administration also thinks that actually possibly they've won this, and frankly, just by the sheer number of Americans who voted for Trump, how difficult is it for allies to believe that the U.S. is back to the pre-Trump world?
Well, I don't think he meant to indicate that we're going to go back to some kind of transatlantic paradise that actually, never really existed. We've always had contentious issues. So I think there is no return to the former relationship. But what we can and what we must do, we on the European side, is to make an offer to the next American administration. We cannot now, knowing that this was a hard-won election, that there are 70 million Americans who did not vote for Joe Biden, we as the European Union, we as Europeans, we should make an offer to the United States, offering cooperative arrangements, for example, on the issue of how to deal with China. On the question of what kind of burden sharing, above and beyond the famous nasty 2% of GDP expenditure for defense. What kind of burden sharing can we enter into that would make the burden for the United States a little less, and maybe carrying a little more responsibility by the Europeans? So it's a new world, a new relationship, and we Europeans need to behave as adults and have an adult relationship with the United States.
We will continue with the ambassador here, of course, Munich Security Conference chair, the former German ambassador to the Court of St. James and also to the United States. It is November 11th. It is Remembrance Day, different names in different nations, but something in common, which is a somber moment for all, considering back to World War I and on to other conflicts as well. Mr. Macron at the Arc de Triomphe.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here? It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
The Boston Symphony Orchestra presents BSO at Home. While you stay inside, enjoy a curated collection of archived concerts and behind-the-scenes stories from BSO musicians. BSO Homeschool provides lessons for music lovers of all ages. New performances and messages from musicians are added regularly. Enjoy these selections and much more at bso.org/at-home.
Those are live pictures of the French President, Emmanuel Macron, of course, remembering November 11th. A lot of the focus will be on France with the head of state, continuing, of course, this Armistice Day. Now, in France, it is normally marked by a parade in Paris and events around the country. Of course, with the nation under lockdown, this year will be very different. But they're hoping, of course, this is televised, so they're hoping that a lot of people are joining in from around France. Maybe a special significance for a lot of the Frenchmen and French women that suffered because of the world wars. Now, still with us is Wolfgang Ischinger, Munich Security Conference chair and former German ambassador to the U.S. Thank you so much, Ambassador, for staying with us. We were just looking at live pictures of the armistice, where really, our collective memories remember at a time where the world was divided and split. Given what we've seen over the last week and the fact that you have countries such as Russia and China not having congratulated President-elect Joe Biden yet, what does it tell you about the state of the world?
Well, I would not overestimate their hesitation. You can argue, and I'm sure people have argued in other Western capitals also, shouldn't we wait with our congratulations, with our messages, until it's really official? But then, of course, when you think about it, that would mean that you would want to wait until the Electoral College has met, which is like in a month. So then people said, no, when the news media announced the winner, we will congratulate. I can understand. I don't like it. I don't appreciate it, but I can understand that some would want to wait until some kind of official result is announced and once all the votes are in. Is it a great sign of future cooperation between China and the United States, between Russia and the United States? Probably not. But let's wait and see. Leaders can get together, and I would think that a future President Biden will. I've known him. I've seen him work. I think he will find a way to connect to Vladimir Putin and to Xi Jinping over time and work things out.
Ambassador, I grew up in a house that revered Konrad Adenauer. He was ancient and lived and worked very much into his 80s as well, dying in 1967. There is a memory of these wars, this World War I, this World War II. Is the next generation, have we just given up those memories? There is a transition going on. How will it go if we don't have a collective memory?
I think you're addressing a very, very important question. By the way, when I served as a German diplomat in Paris in the 1990s, in the early 1990s, up to those years, no Germans had ever been invited to the official celebrations at the Arc de Triomphe on this Armistice Day, because of course we were the enemy then. And then the French government in the early 90s changed their policies and invited Germans, including even Germans in uniform, to participate. So that is, reconciliation between two former enemies. And that's what makes our job, the diplomatic job, so fascinating, that you can actually reach out and grab your enemy's hand, your adversary's hand, and make peace. That's what it's all about.
Ambassador, thank you so much for joining us on this Remembrance Day. Wolfgang Ischinger, the former German ambassador to the United States and to the Court of St. James in Britain as well. Speaking of the British, we will move well across the globe. We do that on this day. Futures lift as well. The bond market closed in the United States for Veterans Day, as we call it. Lord Patton will join us, the former Hong Kong governor. We are fortunate here, and there is terrific news flow out of Hong Kong this morning. Worldwide, it is Armistice Day. This is Bloomberg.
Give you a sense of the real-time action. The 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
This is Bloomberg Surveillance. I'm Ritika Gupta with your Bloomberg Business Flash. Bloomberg's learned that Italian payments processor Nexi is close to a $9 billion all-stock deal to buy Danish-based rival Nets. It would be the latest acquisition in a rapidly consolidating industry. Nets is backed by private equity firm Hellman and Friedman. Bloomberg's learned that Airbnb's long-awaited filing for an IPO has slipped to next week. The home-sharing giant had planned to file on Thursday, but it decided on a delay to keep from being overshadowed by the U.S. election. Airbnb is planning to raise as much as $3 billion in its debut on the Nasdaq. China's ByteDance has asked a U.S. appeals court to intervene in that forced sale of the TikTok video sharing app. The Trump administration has ordered ByteDance to sell TikTok by Thursday or else face a ban in America. The government has cited national security grounds. ByteDance is seeking an extension of the deadline. And that's your latest Bloomberg Business Flash. Tom.
Ritika, thanks so much. Equities, not bonds, currencies and commodities. The bond market closed in a quiet to the tape as the dominant fixed income market really is not doing all that much. In the U.S., futures green, up 26, Dow futures up 218, and the VIX 24.22. I do have a final quote on a static 10-year yield, 0.9753. That's a big deal. That's migrating out from 0.94 over the last number of days. 1% in vicinity. Francine?
Tom, the focus is, of course, on this rotation. The focus is on some of the other things that we're watching, including, this Hong Kong opposition actually quitting en masse to protest these new China powers. Now, on the markets, I'm looking at the Chinese technology companies retreating, and that's having an impact here in Europe. You can see they're still getting some 0.5%. And this is really some of the shares, including utilities, the defensive, staging a comeback in Europe. So we'll have plenty more, of course, on the markets. We'll have plenty of more on the economy and COVID. Up next, Christian Keller, Barclays Head of Economics Research. This is Bloomberg.
Every era presents its own unique set of challenges and opportunities. Trade CME Group futures with Interactive Brokers at low cost and seize the moment. Start investing today at interactivebrokers.com.hk.
The big concern is climate change. We can see the global warming accelerating at the moment, and the goals that we must hit are so ambitious. It's 1.5 degrees by 2050, being climate neutral in terms of emissions by 2050. That's a huge challenge. We have to reduce emissions by 50%, 2030, 2040 again. It's very, very ambitious, and mobility plays such a crucial role in there. One thing is to do it in developed countries. I think we're going to get there by 2030, but then the rest of the world, and that's just as important. If you look at developing countries, emerging countries, that's where probably the biggest challenge we are going to face, to also deploy EVs there and make mobility greener in those countries. I know it's possible to move mobility forward fast enough to be able to do its part in this fundamental threat that we're facing.
I don't believe the renminbi will be a viable reserve currency quickly, but I do believe it'll happen much faster than anybody expects. The question is, what is the storehold of wealth in the meantime?
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
We are already beginning the transition. We're well underway. And the ability for the administration in any way by failure to recognize this our win does not change the dynamic at all in what we're able to do.
That is, of course, U.S. President-elect Joe Biden vowing to go forward with the transition of power regardless of Republicans' efforts to challenge the results. Well, to talk about politics and, of course, the impact this has on the markets and on our economic outlook is Christian Keller. He's Barclays Head of Economics Research. Christian, thank you so much for joining us today. We had so much news in the last 10 days or so. Partly it's U.S. politics with a new administration that should take charge in January. Partly it's with news of the vaccine. If you look at the economic outlook for next year, what will be the most significant change that we've seen that will impact your forecasts?
It has been quite a roller coaster. I mean, we did go into this election with the polls telling us it would be a blue wave and markets preparing for a $2 to $3 trillion fiscal stimulus. Then we came out of it seeing that this is not happening. Markets reduced their expectations for the fiscal stimulus. And then suddenly the news on the successful vaccines coming possibly sooner and even more, more potent in a way that was anticipated just 2 days ago. Now, I would say, though, even though that was packed with very important news for the global economy, I think the vaccine is really the biggest game changer. We can talk about policies all we want, but they are just trying to aid us in a situation where the global economy is going through a rough patch because we are, to some extent, locking down activity that otherwise would be there. And the vaccine is really the game changer here to bring us back to normalcy.
Is there a danger, Christian, that we're putting too much hopes on the vaccine? I'm not saying that, it won't arrive, but it could be delayed, it could be longer, it could, protect you for a limited amount of time. And is there a danger that actually policymakers aren't ready for that? And so once, let's say second quarter of next year, we see, a big disappointment and that really moves the economy into a double-dip recession?
Well, I think that there are dangers to this entire crisis because, it's driven by health. It's something, we are only slowly starting to understand. Obviously, in particular, markets have been moving around very sharply. They now anticipate that this being, a very effective vaccine coming and others maybe on the way, and that this was more or less end, the whole COVID episode. But you're right, we could end up with something where suddenly there's some backtracking or more negative news. I would say to some extent, we will have a double dip already because Europe and the UK will experience negative growth this quarter, in the fourth quarter, and that comes after a very, very strong third quarter. So I think that double dip we have, it's now all about how much recovery we can see in 2021. And, there, I think markets at the moment are rightly so anticipating a much better outlook than we had earlier. But as you point out, it's really something out of my expertise to forecast, to what extent there could be on the health front suddenly, bad news that we didn't anticipate right now.
Christian Keller, gridlock is something comfortable to politicians. You have it brilliantly in your Barclays note over in Divided We Trust. The idea of American gridlock, we see it in the United Kingdom this morning with the Brexit delay, the can kicketh down the road again. Are we in a Western world, indeed a global gridlock?
Well, I think there is some hope that a new administration in the U.S. With maybe a more traditional view on transatlantic relationships, on multilateral relationships, would actually maybe help to overcome some of that gridlock. I think at the moment, it's right to point out that in many ways we are stalling in some of those important negotiations and relationships. I think there's a hope that, as I said, with the President Biden, to return some normalcy also on that front. And that, one can then start to, improve some of these relationships, be it between the U.S. and Europe, be it between the U.S. and China, be it on the WTO, on climate deals, etc. So I think that is a hope. But I think you're right that at the moment, or the last few quarters really have been characterized by, somewhat of a gridlock and little progress.
What is the vector right now in world trade? I really haven't had an update in the last 90 days on just the spirit of world trade, the pandemic rages, et cetera. I mean, what is the direction there on units of export?
Well, Tom, world trade is actually doing relatively well in the sense of, the direction has been really sharply increasing, obviously from a very, very low base. But what we have seen is somewhat a split recovery, whereby the entire universe of services has been starting to slow down already in September, October, while the manufacturing of goods, which are globally traded, has actually been on a very strong footing. China kept producing good export numbers. Global manufacturing in countries like in Germany and others, kept being quite strong. And typically manufacturing is very closely related to global trade. So that was actually the one element that has been continuing to recover when we already had indication that the second wave of infections were actually weighing on the very important service sector in many economies.
Christian, thank you so much. Christian Keller there of Barclays stays with us. We'll have plenty, of course, on China and other parts of the world. Now let's get straight to the Bloomberg First Word News in New York City. Here's Ritika Gupta. Hi, Ritika.
Hi, Francine. Former federal prosecutors say Attorney General William Barr may make President Trump happy with his election fraud probes. But they say it's unlikely to change the result. Barr has set a high threshold on irregularities for investigators. At the same time, though, there's concern that the probe could undercut public support for Joe Biden. Mike Pompeo isn't acting like a lame duck Secretary of State. Pompeo warns that the U.S. is not finished yet when it comes to acting tough on China. In a speech to the Ronald Reagan Institute, he called the Chinese Communist Party a Marxist-Leninist monster whose rule is authoritarian, brutish, and anti-ethical to human freedom. President-elect Biden has warned British Prime Minister Boris Johnson not to compromise peace in Northern Ireland whilst pursuing Brexit. The two spoke yesterday. Biden reaffirmed his support for the 1998 deal that put an end to the violence in Northern Ireland. According to a British official, Johnson promised that the UK would uphold the peace agreement. And the Federal Reserve expects to join the club of central banks set up to fight climate change. The network for greening the financial system requires members be signed up to the Paris Climate Accord. President Trump withdrew the U.S. from the pact, but President-elect Biden has pledged to rejoin. Global News 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Francine, Tom.
Ritika, thanks so much. A nice lift to the market. Futures up 26. It is a good conversation always, peer-to-peer. David Rubenstein of the Carlyle Group and their co-founder. He'll be with us this morning to speak forward on his many conversations. This is Bloomberg. Good morning.
we're heading in the wrong direction. Over the next 2 quarters, I'm very optimistic that we're gonna grow at very strong rates. But a real downside over the next 2 quarters is, does the resurgence get so bad it forces lockdowns because of overwhelmed healthcare systems throughout the country? That's what we're watching for.
Right.
That's a real risk. Our own sense, and we're watching this very carefully, and we do it through bank balances and other ways, our sense is the savings from that fiscal stimulus starting to run out. We don't know exactly when it will run out. When it does, incomes will start to drop and consumer spending will start to weaken. And so that it starts with, and probably the highest priority is some continuation at some level of the unemployment benefits.
The gentleman from Dallas yesterday, I was all zoomy, Francine. It was Mr. Kaplan of the Dallas Fed. And I'll tell you, I don't know where this is going in 5 or 10 years, Francine. The turnout was extraordinary. It was well in excess of 200 people, probably double what they would have gotten into the offices at 67th and Park Avenue. Vincent Reinhardt showed up, number of professors that knew Mr. Kaplan from his days at HBS. And what do you think, Francine? I mean, Zoom's here to stay, right?
Well, first of all, I was going to say congratulations and welcome to the 21st century, Tom.
Thank
I know
you.
a lot of this stuff has been virtual. You have been outstanding on Twitter and a lot of social platforms, but this is like, a different kind of Tom Keene. I think a lot of people think it's convenient because they do it from the comfort of their own home. But remember, the social capital, I think people miss also seeing each other face to face and actually networking. It'll be interesting to see Davos, which I think it's not Davos. Do we still call it Davos if it's 3 months afterwards and not in Davos, Tom?
I don't know.
But the World Economic Forum is expecting to be one of the first places that we meet in person.
Yeah, I mean, there's that. And then also the IMF, of course, in Morocco canceled as well. We'll see where we go. And seriously, folks, the pandemic has really deteriorated in the United States in the last 2 days. We continue with Christian Keller of Barclays. Thrilled that he's with us. Christian, how do you fold this resurgence of the pandemic into your Excel spreadsheets? I mean, the statistics in the United States, essentially we're back to May, if not late April. That is not good. How does that adjust your outlook?
Well, it's very interesting because on the one hand, you need to follow the infection rates, and then you have to figure out what the policy response and the political response will be to it. So it does seem that, for example, we do see some differences between the US and Europe, where in Europe, once you reach, higher hospitalization rates and politicians become concerned about, emergency or intensive care units being filled up, there are very sharp reactions and the willingness to lock down economies. In the US, that seems to be different from state to state, and we have so far seen actually less reaction than we probably would have seen with same rates in Europe. Now, I think there is a risk, as we heard earlier, that if the US continues with these increases and the vaccine not coming yet or needing a little bit more to be properly implemented, there may actually be a situation where the US, with a lag, needs to do similar measures to Europe, not as harsh. There won't be anything national, but on a state level, on a localized level. And frankly, we have to adjust our forecasts each time. And we do it sector by sector to see which sector is, how much affected. We already found out that the shares of sectors in this lockdown, the current lockdown, is less than in spring. But it's a very tedious exercise if you want to try to do it as best as you can.
Yeah, one of the statistics, folks, U.S. hospitalizations, again, not focused on the East Coast in New York, but across the great Midwest and out to California, are back to April 15th levels, which is really something. There's 62,000 hospitalized in America right now. Christian Keller, on Europe, you mentioned earlier the true slowdown. Mr. Kaplan of Dallas notes a very difficult 2 quarters. How do you extend out the slowdown in Europe? Do you dare go out to Q2 or Q3 of next year?
What we currently have is a significant, actually negative growth, not a slowdown, but an actual contraction in the fourth quarter. And then relatively little momentum in Q1 and Q2. What that does, of course, almost mathematically, is it gives you very low base, which you go into 21, and then you have a very, very poor carryover. And that means that, growth in Europe in 21 could be, disappointingly low. I believe that has now changed somewhat, that outlook with the vaccine. I do think the first quarter will be difficult to really accelerate a lot, but I think with the vaccine and with the optimism that may bring, I think we could see maybe better numbers than what we have now in the second and third quarter. And households will play a big role. I think Mr. Kaplan said that earlier. Those household savings are very high. If households feel confident that this is over, that they don't have to worry as much about their jobs, and they reduce these excess savings, there's a lot in a way that could boost demand in 2021.
Christian, where do you see China headed? I mean, could they be the real big winners in 2020 because they got out of the vaccine, they got out of the pandemic quicker and really seem to be on much stronger footing, frankly, than anyone else?
They did. I always call them first in, first out, and first in, best out. They're clearly, relative winners. They're still going to have a lot less growth this year than what they're used to. We think 2 point something rather than, the 6 point something they're used to. They were successful in really containing this COVID. If you look at cases in China, in relation to the population, it's almost non-existent. And then, of course, with the kind of command economy they have, they were able to bring production back. We've seen quite robust export numbers. So to some extent, they're actually benefiting from the situation where they are gaining export share in some of these markets. And consumption, however, and they are trying to boost this now with a lot of credit growth. I don't think people look at this anymore the way they did in 15, 16. But you look at the Chinese credit impulse, it's quite potent and has been increasing over the last few quarters, and that I think will do a lot with a lag. So we're not concerned about China. We think that story will continue to pick up.
Christian Keller, thank you so much. He's, of course, Barclays Head of Economics Research. Now, coming up on Bloomberg Markets, we talk about the emerging markets with Mark Mobius. He's Mobius Capital Partners co-founder. That interview at 10:30 a.m. in New York, 3:30 p.m. in London. We'll also talk about the Great Rotation. This is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here? It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
We explore the trends, investments, and competition of the European ETF industry. Join us on Bloomberg ETF IQ Europe.
This is Bloomberg Surveillance. I'm Ritika Gupta with your Bloomberg Business Flash. Apollo Global Management has agreed to buy Great Canadian Gaming for $2.5 billion. It's the latest shift for the casino industry that's been hit hard by the pandemic. Great Canadian operates 25 gaming and hospitality facilities. Congressional negotiators have agreed to include more sanctions on the gas pipeline between Russia and Germany. The sanctions against the Nord Stream 2 pipeline target insurance and completion companies. They would be included in a must-pass defense bill. And the world's biggest shopping binge is well underway. Alibaba has kicked off its annual Singles Day. It's a frenzy of consumption that will also serve as the best barometer of China's post-pandemic recovery.
Offline sales will recover to a better level in 1 or 2 quarters. But if we only look at online sales, I believe it's already returned to normal.
Chinese retail sales are down 7% for the year, and that's your latest Bloomberg Business Flash. Tom, Francine.
Thank you so much, Ritika. Now, in the last hour and a half, we had that news coming out of Hong Kong that the opposition has quit en masse because of what's been happening with China. Now, what we know is that the bloc actually resigned today after China had moved to disqualify some of the lawmakers that they didn't deem sufficiently loyal. I think they said this morning that they would disqualify 4 lawmakers, and in total, I think 15, all of them resigned. Joining us now is John Liu. He's Bloomberg News' executive editor for Greater China. John, great to have you today. How significant is this? Is it actually a win for Beijing, or is it something that Hong Kong protesters can advance through getting allies to back them up?
I think this is a bad development if I'm looking at it from Beijing. I think the risk here is it's going to escalate the situation with the U.S. and with Europe and the West in general. You have President-elect Biden coming into office. This is going to put more pressure on his administration to act, to take some sort of punitive measures against Beijing for increasing its stranglehold over Hong Kong.
John, Mr. Cheng, Fernando Cheng, I hope I'm pronouncing that correctly, and I apologize if I'm missing the mark, has said the dictatorship has descended onto Hong Kong. Do you feel that on the streets?
I think it's palatable that the level of dissent, the amount of people, how much people are speaking up. Obviously, the number of protesters out in the streets has decreased substantially in the past year, especially after the national security bill has come into effect in Hong Kong. So I think behavior has undoubtedly changed. I think it's sort of this weird dynamic where business, when it comes to IPOs, barring ants, but other IPOs and other sorts of businesses are booming, but sort of dissent is noticeably quiet.
John, do you think the pro-democracy camp is emboldened because of an upcoming Biden administration, or is it timing coincidence?
I think, it's hard to sort of say broadly what the opposition, if they were more pro-Trump or pro-Biden. There was a sizable part of that camp that hoped that President Trump would be reelected. They supported some of the policies that he and his administration undertook, specifically the Hong Kong bill that was passed by Congress and signed into law. I think there's hope that Biden will continue that sort of approach. And by and large, based on the things that have happened today, the resignation of the lawmakers, I have to imagine that the pressure on Biden to be tough on Hong Kong is going to continue.
I look, John, at where we are, and of course, Mr. Biden has options, but we're not going to show the flag in the harbor. How do you perceive the options of America, or for that matter, the United Kingdom, to project outrage, to project protest?
I think the tricky thing is both governments, American and British, are going to want to try to find some sort of response that punishes Beijing but does not punish the people of Hong Kong, and I think that's tremendously difficult. The other thing is, as your guest was talking about before, there is this divergence in economic performance. China economically is recovering much faster than most parts of the world, and so there is this balance between, Hong Kong and sort of perceived aggression versus what is in the economic interests of each country.
John, we've got to wrap it up there, but thank you again for your reporting from Hong Kong. In charge of all of our Greater China effort and news, John Liu. Please stay with us. Lord Patton in the next hour. This is Bloomberg.
It came in better than expected, not only in terms of job creation, but also a sharp fall in the unemployment rate consistent with higher labor force participation. That's really good news.
Overall, the gain was solid, but even while this is a very robust pace of job gains, it's a lot slower than it has been in the summer months.
Great that we saw the job gains we did, but they still are diminished from what they were, of course, back in April and May. And the scarring, the sort of wounds that were created by COVID are beginning to fester.
I would caution people to look at the top line number because I don't think it tells the entire story. Employment relative to population is still well below where we were pre-crisis, and that's because I think that we're going to have some lasting damage.
Depending on what you look at, jobs creation or the unemployment rate, you have different views as to whether the improvement in the labor force is keeping up or slowing down.
This morning, this November 11th, it is 102 years on, this Remembrance Day in the United Kingdom, there will be a moment of silence, a silence from the cenotaph attending Prince Charles and the Duchess of Cornwall. Let us listen. And as we saw this morning at the Arc de Triomphe, Mr. Macron and the French considering the well over 1 million who died in World War I. The sacrifice of France was extraordinary. John Fenby has written that up. I think this is a profound sacrifice of France in World War I. But Francine Lacroix, as well, London, with just under 1 million dying in that war. An important moment each and every year, Francine.
Yeah, it certainly is, Tom, although, of course, the remembrance is a little bit different this year because of restriction on public gatherings because of COVID-19. Now, homes across the UK moments ago, of course, falling silent in remembrance of the nation's dead because of the world wars on Armistice Day. People were encouraged, of course, to pause on their doorsteps and by the windows instead of congregating outside together. What was also something that, you know, in London we're very careful to talk about because it's really dominated the news this morning, Tom, is that earlier on, I think about 4 to 5 hours ago, Extinction Rebellion, the climate change group, have put a banner and placed a wreath on the cenotaph on Remembrance Day, and this was done with the help of veterans, basically saying, act now, this is our next war. So interesting, Tom, that here in London, Extinction Rebellion hung this climate change banner on Remembrance Day to make sure that we honor the dead of the past, whilst trying to focus also the conversation on climate change for the present.
On World War I, and on this Remembrance Day, and again, Prince Charles scheduled to be here this morning, representing the Queen. 6 million casualties in France, 3.2 million casualties all in from the United Kingdom. And to show the lesser commitment by the United States and sacrifice there, only about 300,000, 1/10 as many as in France, from the United States, of course, entering the war later. We will leave Whitehall and leave this to the silence and the sacrifice of the many wars in the United Kingdom. It has been an eventful week. I had to ask literally Matthew today, is this Tuesday or is this Wednesday? That is the blur that the events have been. And I just really must say, I honestly couldn't remember, folks, starting the broadcast today, what today was. I believe it is Wednesday, and with it Wednesday, First Word News, here's Ritika Gupta.
Morning, Tom, Francine. President-elect Joe Biden calls President Trump's refusal to accept the results of the election an embarrassment. The president won't allow his administration to cooperate in the transition of power, and Biden isn't getting the intelligence briefing that presidents-elect normally would receive. Biden says the president's actions won't help his legacy. And President Trump is quickly remaking the Pentagon leadership in the wake of the election. A day after the president fired Defense Secretary Mark Esper by tweet, 2 senior Pentagon officials stepped down. So did Esper's former chief of staff. Trump allies are poised to take acting roles. Critics say that sends a signal of turmoil in the military leadership. And the coronavirus is roaring back in U.S. cities. That comes after a couple of months of the disease being essentially a rural problem. According to the CDC, metropolitan areas are now averaging a daily record number of cases. That has meant rising cases in and around Denver, Detroit, and Chicago. The virus is also mounting a comeback around Boston and Newark, New Jersey. In Hong Kong, opposition members of the legislature quit after China moved to disqualify unpatriotic lawmakers. It's one of Beijing's strongest moves yet to put down dissent in Hong Kong. The government ousted 4 lawmakers as soon as China passed the law. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Francine, Tom.
Hey, Ritika, thanks so much. Bond market closed today. Final quote on the 10-year yield, 0.9753. Equities lift up 27 on futures. Francine?
Tom, it's very clear that there's a rotation going on, and that's impacting European markets. But really, the tech sell-off has deepened following Beijing's crackdown on internet and fintech firms. And I think this is longer-term strategy, something that we need to look at. As a risk on sentiment is enduring, a gauge of the dollar is pretty much steady and close to a 2.5-year low. So we look at dollar, and of course, U.S. Treasuries closed for Veterans Day.
Right now, Kevin Cirilli, of course, usually getting up the crack at 12 noon, and Washington heating up with news flow yesterday about 3 p.m. Extraordinary comments. Here, the Secretary of State.
Is the State Department currently preparing to engage with the Biden transition team? And if not, at what point does a delay hamper a smooth transition or pose a risk to national security?
There will be a smooth transition to a second Trump administration.
The Secretary of State, and of course the headline there, looking forward to a second Trump term as well. Kevin Cirilli, our chief Washington correspondent this morning. Kevin, I've got to move on from the Secretary of State and his intransigence to the Pentagon in a musical chairs. It gripped Washington last night. Let me ask simply, what do the chairmen of the Joint Chiefs of Staff think?
Well, two things. First and foremost, in terms of the signal, based upon the conversations I've had with members that are close to this world, in terms of the signal that this sends to the international community, it raises questions about whether or not this is chaos or confusion. And really, I think what it points to is continued volatility that the president has deployed as a strategy at some points, both politically and internationally. But the second point that I would make there, in that clip that we just heard from Secretary Pompeo, he went on to say that none of the actions that have been taken at this point have jeopardized Americans' national security. He echoed Senate Majority Leader Mitch McConnell. And again, I think it's very important to note the context of all of this, which is that the Senate score is still not settled. They're headed for a two-point conversion of sorts, regardless of whether it's Democrats or Republicans in Georgia on January 5th with those special runoff elections.
Well said, but you and I agree that we have to start some form of transition if we're going to have a transition. Kevin, with all your reporting, particularly from Philadelphia to Erie, is there any evidence of the evil things the president's talking about?
None. And in fact, yesterday I spoke with Republican sources, including one very close to the current president's campaign strategy with this legal stuff, and for lack of a better word, because there are no court documents. I mean, there is no affidavit. And so as a result of that, Republicans are deeply concerned and questioning openly, many behind the scenes as well, about what the strategy is here. The second point that I would make here, President-elect Joe Biden continuing on with his transition route. As yesterday he announced the presidential transition teams, landing teams rather. And these are the teams for each of the agencies and departments that are going to be the think tanks, so to speak, in terms of trying to sort through what each strategy will be. I bring that up because it's right in line with how a president-elect typically conducts themselves during this transitional period.
Kevin, good morning. I know this is a difficult, if not impossible, question to know, but is this, 80% political strategizing because of the race in Georgia, because we still don't know the outcome of the Senate, or is this what we hear underlying certain Republicans not wanting to upset President Trump? And if there's truth in that, why would they not want to upset him if he's on his way out?
They would not want to upset him because of the role that he will play in the future of the Republican Party. And in conversations that I have with Republicans over the last couple of days, whether it's midterm elections or 2024, they view him as a potential ally of sorts, politically speaking. Look no further than Senator Ted Cruz, a Republican of Texas, who really is jockeying to inherit much of the Trump movement and the Trump base for the upcoming midterms as well as 2024. I know that feels like a long way out. I get it. But the other point, to your other point in terms of the political strategy in Georgia, I talked to a source yesterday who said that they're on the phone with Republican donors because it's all coming down to Georgia. And there seems to be, in the world that I report in, much more of an interest in keeping the Senate and for Senate Majority Leader Mitch McConnell to keep his power than there does to be about overturning or speculating about the legitimacy of our last election.
Kevin, I'd never want to lecture you, or for that matter, anybody inside the Beltway, but I believe the 14-day trend on deaths in America is up 23%. Yeah. Do any of these clowns care about a greater pandemic?
I think based upon, again, when I talk to folks, I think this is the largest unknown variable, Tom, and that's a great point, because when you've got these cases skyrocketing, and as a result of that, states, New Jersey, New York, California, to some extent, even Washington, D.C., here in the nation's capital. I mean, they're having to factor in, what is Thanksgiving going to look like? What are the holidays going to look like? What is our New Year's celebrations going to look like? And, oh, yeah, the inauguration, because Mayor Bowser here in Washington, D.C., giving a press conference yesterday, Tom, about the expected crowds. The hotels are already booked here for inauguration. And so that could inform some of the decision-making on fiscal stimulus. Leader McConnell says the Pfizer news is only evidence that it should be a limited, skinny stimulus.
Kevin, quickly, are we going to hear from Dr. Fauci today?
I'll keep this quick. I'm not sure we are, but if we do, he will likely be in a Biden administration.
Kevin Cerulli, thank you so much, our chief Washington correspondent. They're spirited, and folks, the statistics. For those of you worldwide, the statistic, the FT, the graphics they have, and the statistics Bloomberg has, it is shocking, the expansion of this pandemic. It's 6:30 with the news from Hong Kong. Lord Patton joins us. Futures up 27. This is Bloomberg. Good morning.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here? It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
This pandemic, I think we're not just going to snap right back to the previous economy. And I think that's unrealistic. There are people, though, that need to be retrained. This has accelerated, for example, trends in retail, right? We've seen that. I don't think retail is going to come back in the same way. So we're going to have to figure out how to retrain that workforce.
The gentleman from Philadelphia speaking much as I heard from the gentleman from Dallas yesterday. The Fed talk here at Bloomberg is just extraordinary, and they're about the longer and broader, bigger picture. Then there's the short term, which is the litmus paper of the bond market, which I believe recently has been yield higher and bond prices down. That means it's a good time to speak to Neuberger Berman's Deputy CIO for Fixed Income. Ashok Bhatia joins us this morning. Ashok, I believe it's yield up, price down. Has price hurt portfolios yet?
Well, it depends a bit on which market you're looking at. If you're looking at government bonds, treasuries, yeah, you're exactly right. We're seeing yields moving modestly higher, so prices are going down. So the 10-year treasury, it spent a lot of time around 65 to 75 basis points, is back to 95 basis points or so. So that yields up, prices down. But credit markets, investment-grade credit, high-yield emerging markets, those prices are generally all up. Those types of more risky bonds have performed extremely well over the past couple of weeks since the election, and modest single-digit returns now year-to-date for a lot of these markets.
I would gauge retail, which is if you see 1 month, 2 months, and 3 months of your statement with price down, you call that a bond bear market. At what point on full faith and credit 10-year yield do you begin to call a bear market in bonds? Is it a 1? Is it a 150? Dare I say if we get back to 2%, is that where the agony clicks in?
Yeah, I think, certainly if you saw us back to 2%, which would be a significant move, that's, over 100 basis points from here, that will definitely qualify. But the other wild card is, the Fed has signaled that if rates start rising too much, and they haven't really defined that, the Fed's indicated they've got some more tools to try and keep interest rates low. So personally, I'd be surprised if we get back up to 2% anytime soon.
Ashok, away from that, are we underestimating some of the disruptions coming from China? This could be monetary policy. We saw it today with, some of their cramping down on technology. How does that impact the Treasury market?
Yeah, China has been reducing its pace of buying of treasuries. So it doesn't appear that they're out there selling treasuries, but certainly, they're accumulating less of them. And I think that's going to be an intermediate term story that's going on. Is China appears to be wanting to diversify their official holdings. So you are having one important buyer of the treasury market taking a bit of a step back. At the other side, though, as we all know, starting last March, again, the Fed stepped in and is buying treasuries. They're buying agency mortgages, have ability to buy corporate bonds. So I think in some ways, what's going on is the Fed is replacing, whatever some of the Asian investors are reducing, and they're doing even more of it. So it's probably not going to be a big market impact for rates in the near term.
Ashok, there's something that really surprised me today. So first of all, if you look at, Spanish bond yields, Italian bond yields, Portuguese bond yields, they're down and they could potentially go negative territory. But then I'm looking at the UK 30-year bond yield, and it breached 1% for the first time. What does that tell you about the state of Europe?
Yeah, this is a really important dynamic, is that what we are seeing is a lot of these, I think there's two things. There's a lot of these riskier, quote unquote, riskier bond markets. So, like you mentioned, the periphery bond markets, which continue like, a lot of the credit markets to do extremely well as investors are looking for any source of income. But the second element is, as you mentioned, this rise in 30-year bond yields. This is a global phenomenon. We've seen yield curves, what we call steepening. So front-end interest rates really not going anywhere, but these 30-year rates rising. It's happening in the U.S., UK, Europe, Germany in general, too. And I think what that's reflecting is just longer-term risk premiums entering government bonds as fiscal stimulus remains relatively high. And importantly, some expectation that we'll see a bit of a pickup in inflation rates into the next year or two. So would look for, a bit more pressure in some of these longer ends of the market.
Ashok, thank you so much. Way too short of a visit. We'll do this longer next time on a busy Remembrance Day. Ashok Bhatia with us with Neuberger Berman on the little bit of a yield lift we see. Bond market closed in the United States, 0.9753. That final quote on the 10-year yield, distant from 0.70. On EM, after we speak with Lord Patton, we will speak with Mark Mobius in the 10 o'clock hour on Bloomberg. We do economics, finance, investment. We do politics. And for Mark Mobius, we do the world economy. This is Bloomberg. Good morning.
So do you get tired of people calling you a jazz legend? Do you feel older when they say that to you?
Yeah, I like the word jazz. I don't like the legend.
We would love, at the right time and the right way to have a digital bank license. We would almost certainly do that in partnership with a strong local partner, and we would use the technology and the experience that we've gained from Mox in Hong Kong.
This is Bloomberg Surveillance. I'm Rishka Gupta with your Bloomberg Business Flash. Bloomberg's learned that Italian payments processor Nexi is close to a $9 billion all-stock deal to buy Danish-based rival Nets. It would be the latest acquisition in a rapidly consolidating industry. Nets is backed by private equity firm Hellman & Friedman. Bloomberg's learned that Airbnb's long-awaited filing for an IPO has slipped to next week. The home-sharing giant had planned to file on Thursday, but it decided on a delay to keep from being overshadowed by the U.S. election. Airbnb is planning to raise as much as $3 billion on its debut on the Nasdaq. And London's Heathrow Airport keeps getting crushed by the pandemic. Passenger numbers there fell 82% last month from a year ago. And Heathrow warns that this month's numbers are likely to be worse because of a travel ban. Officials say that the lack of a testing program has left British airports unable to compete with European rivals. And that's your latest Bloomberg Business Flash. Tom.
Ritika, thanks so much. Bond market closed, equity market open. Not say I agree with that in honor of those that have served the many, many conflicts and wars in America. Futures up 31. I do want to note Turkish lira on a tear, stronger lira, and we had a print of a 7.99 handle moments ago, about 18 minutes ago. That's a moment. 8.01 in from 8.50-ish. Strong Turkish lira over the last number of days. Francine?
Yeah, Tom, I also wanted to show you actually the yield on long-dated UK debt climbing above 2% for the first time since March. So we'll have plenty, of course, on bond yields. But coming up next, we'll talk Hong Kong with Christopher Patten, the former Hong Kong governor. This is Bloomberg.
The Boston Symphony Orchestra presents.
Every era presents its own unique set of challenges and opportunities. Trade CME Group futures with Interactive Brokers at low cost and seize the moment. Start investing today at interactivebrokers.com.hk.
New performances and messages from musicians are added regularly. Enjoy these selections and much more at bso.org/at-home.
I am David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
Just give you a sense of the real-time action. The 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
This is Bloomberg Surveillance. Tom and Francine from London and New York. Tom, I know you've been way up front on Turkish lira. We have, of course, a great chart that we almost look at hourly to look at what Turkish lira has done. In the last moments, the Turkish president, Mr. Recep Erdogan, saying that he fully supports the central bank policies. Now, in a speech that I believe he was giving to Parliament over in Ankara, Tom, the President Erdogan was urging citizens to trust the Turkish lira. He also said that he will hold a series of meetings with investors. On the back of that, the lira is extending gains to below 8 mark versus the US dollar after the statement. Tom, what's very significant is that for the last 2 to 3 years, investors had criticized, of course, Turkey and the central bank because of its unconventional economics. And the government has now started taking steps towards a more rational approach. I don't know whether investors will buy into it or not, but certainly there's a dramatic shift from where we were 2 months ago.
This is dramatic shift. That's absolutely right, Francine. Let's stay on this for a moment, folks. He fully supports central bank policies. This is Mr. Erdogan. And Francine, this is a sharp, sharp change for Mr. Erdogan if it sustains.
Yeah, one thing, Tom, that I keep on hearing about, of course, you and I call a lot of investors and we speak to market participants, is that actually having such a seasoned economic management team is actually a welcome change. This would be economic advisors to Erdogan. It's the head of the central bank. But of course, its task is still complicated by the extreme centralization of power in Turkey. And of course, and there's a political ramification, like geopolitical risk as a backdrop.
Well, it will be interesting to see. Again, futures up 31 on this Remembrance Day, this Veterans Day in America. There is news flow of any number of ways out of China, some on capitalism, some on technology. And then there is the political economy and the changes of Hong Kong. Here is their chief executive, Carrie Lam.
I wouldn't say that for members remaining in the Legislative Council, we will have a rubber stamp legislation. I welcome diverse opinion in the Legislative Council. I respect the check and balance responsibility of the Legislative Council. That is clearly written in the Basic Law as the constitutional duties of a Legislative Council. But all these responsibilities have to be exercised in a responsible manner.
Carrie Lam on the latest events in Hong Kong. Prince Charles today scheduled to be at the cenotaph at Whitehall on this Remembrance Day. 23 years ago, he was scheduled to hand over Hong Kong on Britannia with Christopher Patten, who was a former Hong Kong governor at the moment. It was a seismic and visible change at the end of the 20th century. Lord Patten joins us this morning. Lord Patten, I think of the sacrifice of the British up and down the Pacific Rim, including aiding China in World War II, and the reach has changed. What can Britain do about a Hong Kong where one of the dissidents today framed it as a dictatorship?
Yeah, it's turning into just a replica of the police state, the surveillance state in mainland China. And I'm afraid it's a reminder of the fact that you can't trust anything China promises to do. We've seen today the snuffing out of the last remnants of democracy in Hong Kong. Carrie Lam says she's very much in favor of diverse opinions in the Legislative Council. Don't believe it for a moment. Anyway, she doesn't really run Hong Kong anymore. Hong Kong is run by the Chinese Communist Party and its local boss in Hong Kong. But what you've seen, I'm afraid, is of the extent to which China is involved in a war of values against liberal democracies in Europe, in the Americas, in Britain. And what we have to do is to work together, but not establishing a cold war with, but actually stopping China undermining the values which we hold as so important and which have determined Hong Kong's success for the last years.
Lord Patton, I learned about sanctions 34 years ago, and I would suggest that Senator Biden was involved with this, with the sanctions of Washington against South Africa, and the stunning idea that possibly they worked. If Hong Kong is a center of capitalism, a center of international finance, will sanctions work against the territory or against Beijing?
Well, that's a very good question. It's why I've always been rather doubtful about sanctions as a policy. And I think we've very often thrown them around as an alternative to doing other things. When I was governor of Hong Kong, I used to lobby very enthusiastically against imposing sanctions on China or Hong Kong. But you've got to avoid anything you do to support Hong Kong at the UN, in human rights organizations and so on. You've got to try to make sure that it doesn't hurt Hong Kongers. If you want to do things, they should be aimed at China and Chinese officials. And I certainly think that things like Magnitsky legislation are very valuable in dealing with the thugs who run police states. I think they've been helpful in relation to Russia, in that they'll be helpful insofar as it matters to them in Belarus. And I think they're quite helpful in China and Hong Kong. But I certainly want to avoid anything which hurts people in Hong Kong. That's not what we want to do. China is hurting people in Hong Kong. Look, for years, Hong Kong's great success as a spectacular market economy has been based on free capital, on free information, and the rule of law. And you take two of those things away, and the third starts to weaken.
But Christopher Patton, how will a Biden administration navigate this?
Well, to be fair to President Trump, who's departing office, I imagine, even as we speak, to be fair to President Trump, he did actually focus on the menace represented by China to the international community and to liberal democracies. I'm not sure what he's doing at the moment actually helps the case for liberal democracy, but that's by the by. What I think Mr. Biden will do as president is something which wasn't President Trump's strong point, and that is to build alliances, to work together with others, with Australia, with Europe, with New Zealand, with Canada, with India and others, with South Korea, with Japan, because all of us have the same interest in stopping China destroying the sort of world we want and destroying the sort of values that we hold to be so important. I'm not in favor of containing China. I am in favor of constraining China and stop it ravaging the rest of the world. We know of the responsibility Chinese secrecy has had in allowing the pandemic of coronavirus to be such a force, a terrible force in the world. We mustn't allow China to destroy other parts of the international community and international life.
But Lord Patton, given the West and NATO allies actually, some would argue, didn't handle Russia as it should have 4 or 5 years ago, what makes you confident that they can now handle an even more important force like China?
I think that's a very good question. I think what we've got to recognize is the best thing we can do for Hong Kong is by making sure that we hold on to our values, democracy, rule of law, freedom of speech and freedom of the press and so on, that we hold on to those things. And I hope that in due course, Hong Kong will have those qualities back again. But we're certainly not going to immediately be able to change China, but we must be able to stop China changing us. That's the threat, and we can only deal with it if we work together in a partnership. I'm very much in favor of the Trans-Pacific Partnership, and I hope that President Biden will return to that proposition.
Lord Patton, because of the tenure and the overlap, I must ask you about the former Prime Minister John Major's comments in recent days about the placement of the United Kingdom in world international relations. Has Britain become a second-rate power?
Well, we're not a great power anymore. I think we matter. I think we're, in terms of our economic strength, we're 5th or 6th in the world, depending on how you make the calculation. We've got a stronger military than all other European countries, I think. We've got a very good diplomatic service. We've got the biggest aid program in in Europe and one of the biggest in the world. So we do count. We count rather less if people think we break our international agreements. And there's some problems about whether we'll do that in leaving the European Union, because we're trying to legislate at the moment, or rather the government is, to escape some of the obligations which we've already agreed with Europe in order to try to safeguard the Good Friday Agreement. That would be very bad for our international reputation. But John Major was entirely right. We're not a great power. I think we're a great country still. And I hope that we won't undermine that by the way we behave. And I hope that we'll still be able to strike a deal with Europe, because leaving the European Union with no deal would probably be the greatest act of self-harm, not least to our economy, that we've performed since the Second World War.
Thank you so much, Christopher Patten there, the former Hong Kong governor, joining us this morning. Now, up next, we, of course, track COVID-19 with Lauren Sauer, Johns Hopkins Assistant Professor of Emergency Medicine. We'll have a full roundup of the pandemic. This is Bloomberg. Surveillance, Tom Francine from London and New York. Tom, as we continue to track the virus, Bloomberg has developed a unique partnership with the leading authority on COVID-19. Johns Hopkins has been at the forefront of the international response, and every day we bring you insight from experts in public health, infectious disease and emergency preparedness. Well, joining us today is Lauren Sauer, Johns Hopkins Assistant Professor of Emergency Medicine. Lauren Sauer, thank you for joining us. When you look at the number of infected in the U.S. and the number of hospitalizations, can you juxtapose that compared to the encouraging news that we had about a vaccine today? What happened this week? What happens in the next couple of months?
Yeah, well, the cases are not looking great. And so it is, I think, very, very optimistic to see this vaccine. And I think everyone's very hopeful. That being said, the vaccine is not going to be a silver bullet for the pandemic. We need not just production, but also uptake. And so as we're watching these cases tick up and tick up and tick up across the country, I think everyone is hoping that people move into the holidays and move into winter very cautiously. I saw yesterday that the stocks, the air industry stocks went up on the news of the vaccine, which means I think everyone's very hopeful and excited that things are going to get back to normal. But it's definitely going to take a while to get there, even with 1 or 2 vaccines coming online.
Lauren, the numbers are absolutely extraordinary. Mayor de Blasio in New York talking about a cusp of a resurgence in New York, which seems to be way behind some of these most challenged states. And yet in Washington, as I mentioned to Kevin Cirilli a half hour ago, it just seems to be completely off the radar. What does someone like you in the trenches want to see out of Washington right now?
I think one of the things we'd really like to see is a joint task force working on this. We've seen that in former administrations during a handover when there's a crisis. I'd like to see activities moving towards ramping up the Defense Production Act, building national strategies for testing, which we still don't have in any systematic way. All of these things can be happening even as the transition to the new administration happens. I'm hopeful seeing some of the names on President-elect Biden's new task force, but I would like to see that task force working with the current administration to really move some of these activities forward, to really make sure that we don't have to wait until January to see a scale up in the response.
Lauren, is the vaccine really the only way to control this virus? And how hopeful are you that we'll get something in the next 6 months that we'll be able to distribute correctly?
I would say the vaccine, or a vaccine, is the most important tool in our toolkit. And I think we're moving really closer to having that readily available, not just with this vaccine, but with several of the other ones that are in phase 3. So the promising data is really exciting. That being said, we saw a press release. We don't know if this vaccine prevents infection or prevents severe disease. We have to wait to see what the data looks like to see how strong this vaccine is going to have, how strong the impact is going to be. Things like masking, things like social distancing, contact tracing, all of these public health tools that we have had and have applied in very disparate measures remain incredibly important, and probably more important until that vaccine is widely available. The other challenge with this vaccine is that the cold chain storage, so how you move it around, it has to be kept at minus 70 Celsius, and that is a real challenge globally for how you distribute a vaccine like this. I think the activities around making sure that we can do that effectively are ramping up, but the logistics on that side of vaccine distribution are going to be incredible.
Lauren, thank you so much. Lauren Sauer there of Johns Hopkins. And be sure to check out VRUS Go on the Bloomberg for the latest information. You can also tune in every day for our exclusive conversation with Johns Hopkins experts for an inside look at battling COVID-19. Now, coming up on Balance of Power, Michael Osterholm, the University of Minnesota Infectious Disease Research Center Director and Biden COVID Task Force member, will talk about the number of infected and the number of people in hospitals in the U.S. That's at 12:30 p.m. in New York, 5:30 p.m. in London, and this is Bloomberg.
It came in better than expected, not only in terms of job creation, but also a sharp fall in the unemployment rate consistent with higher labor force participation. That's really good news.
Overall, the gain was solid, but even while this is a very robust pace of job gains, it's a lot slower than it has been in the summer months.
Great that we saw the job gains we did, but they still are diminished from what they were, of course, back in April and May. And the scarring, the sort of wounds that were created by COVID are beginning to fester.
I would caution people to look at the top line number because I don't think it tells the entire story. Employment relative to population is still well below where we were pre-crisis, and that's because I think that we're going to have some lasting damage.
Depending on what you look at, jobs creation or the unemployment rate, you have different views as to whether the improvement in the labor force is keeping up or slowing down.
Well, it's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
This is Bloomberg Surveillance. Tom and Francine from London and New York. Now, the COVID-19 pandemic has exacerbated a crisis of inequality in the U.S. economy. TIAA President and Chief Executive Roger Ferguson told Bloomberg's Jason Kelly how the group has taken steps to meet this critical challenge.
Well, the first part of tackling one of these challenges is to be honest and say, yes, it does exist. And yes, it is shown in financial metrics as well as other metrics. The second approach that we took was to say we have to double down on our own values. We have a long history here at TIAA around diversity and inclusion. And so let's reminded ourselves of the value that we place on diversity and inclusion. And we did ask ourselves, well, gee, are there things that we can do a little better? So one of the things that we've done is we've recognized that we should always have a diverse slate of candidates applying for our jobs. We've now also said we should have a diverse slate of interviewers talking to those candidates so that we have a diverse point of view on both sides. So we've observed some things that we could change in our own organization. The third thing that we've done is we've tried to figure out how to reach out to our various communities to be responsive to these challenges. As you know, TIAA serves a higher ed sector. So we've had outreaches to our HBCU colleagues to talk about recruiting, training, et cetera, job preparedness. We've also had outreach in our communities where we have a large number of our employees to provide social service activities over the summer. We hosted a symposium of business leaders in Charlotte, which is our largest single location. And the final thing we've done is we've made sure that we understand other ways we can contribute by focusing in on financial literacy. We are, after all, a financial services company, so we've studied differences in financial literacy. Indeed, last year when we did a survey, we over-sampled African Americans to make sure we understood their challenges around financial literacy. So we're bringing our brain power, our analytical skills to bear here. All of this has been wrapped up in a program that we call Be the Change. So it's change through dialogue, change through understanding, change through leadership, and change through action. And so we've given it a brand name, and it will be with us for a long period of time as we and society work through these deep-seated problems that go back hundreds of years in American history.
How do you think you've changed throughout this very turbulent year?
Well, that's a very good question. This year has forced me to reflect on my own, personal journey and origin story, and to help other people understand, how my experience might be different, but it's certainly an experience. So this year I've been forced to reflect on the fact that I really did grow up in a, financially constrained environment. We'll put it that way. There were 5 of us living in a 2-bedroom house that was less than 1,000 square feet. Yet, I also had the benefit of parents who put a great deal of weight on education. My mother in particular always thought of education as this phenomenal, gift that no one could take away from you. And my father put a great deal of weight on financial literacy. We didn't know the phrase at that time, but nevertheless, I'm the beneficiary of that. So this period has allowed me to reflect on how, my origin and origin story, if you will, has been an important part of my journey through life. It's also allowed me to reflect on, how much things have changed and how much things haven't changed. So as I said, I went to segregated schools up through the 6th grade. There was quite a bit of debate and dispute in Washington, D.C. about integrating the schools, and I was a beneficiary of that. I describe myself as the beneficiary of Brown versus the Board of Education, and proudly an affirmative action child when the Ivy League schools were suddenly trying to find qualified African Americans to fill those classrooms. I was fortunate to have been one of those beneficiaries. On the other hand, we see things that haven't changed. We've talked about the economic inequality, and even I, as a CEO of a Fortune 100 company, have been mistaken for a waiter in certain locations. I would go into a retail outlet and have the security guard sort of watch me pretty closely. I've been in stores where individuals came up and assumed that I was not there shopping, but was there, to be a salesperson, and have been asked to help fit someone with a suit. I've had difficulty occasionally getting a taxi. And so, this year has allowed me to reflect on my journey. It's been an American journey. It has had some phenomenal ups and benefits that have led me to be one of the few African-American CEOs. But I'm also reflecting on how, at the end of the day, skin color and race still do matter, even regardless of what position one may have in life. So it's been an important year of reflection for me, and an important year of sharing my story with others, and hopefully, ultimately, will be a positive year for everybody in this regard.
Well, that was the TIAA Chief Executive Roger Ferguson speaking with Bloomberg's Jason Kellen on COVID-19's impact on inequality and, of course, the U.S. economy. Look at the Turkish lira. It's been appreciating some 3% versus the dollar after the comments from the president, Mr. Erdogan. He was speaking in Ankara. Extremely interesting, actually, to hear him say, almost a full reversal of what we heard in the past, that he fully supports the new central bank governor and the finance minister. Now, he also said that Turkey is determined to bring down risk and increase return for investors. And I believe on the back of that, he will meet with a number of investors. A different tune to what we heard only 3 months ago. This is Bloomberg.
We don't have a sort of fixed order of use of tools, and I think that's appropriate. It would always be dependent upon the state of the world and the state of the economy that we found ourselves in.
The outlook for the economy is extraordinarily uncertain and will depend in large part on the success of efforts to keep the virus in check.
They are torturing themselves to explain that they're there, ready, willing, and able.
The Fed has basically done all it can do, with the exception of extreme emergency measures.
Markets will probably judge this that this is no longer a contested election.
Some clarity around the election and some clarity with a divided government, which I think is actually a great outcome for markets.
The virus and economic growth is more important than the gyrations in D.C.
I think the vaccine, in a way, should be seen as a global fiscal stimulus.
Everything is going to be lower and flatter for longer.
There's just a lot of cash in the sidelines that needs to be put to work.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
From New York and London, for our audience worldwide, good morning, good morning. This is Bloomberg Surveillance live on Bloomberg TV and radio. Alongside Tom Keene, I'm Jonathan Ferro. Lisa Abramowitz did the unthinkable. She took the day off, Tom Keene. Lisa Abramowitz took the day off.
On radio and television, it's hard to believe. I think the gloom yesterday was so thick with Lisa. She's like taking a day off therapy and all that. She's, trying to.
Is it because of the stock market rally in the last couple of days?
Could have been the
Lisa
rally.
Needed a little bit of rest
look
after
at
that.
the Goldman note, John. Look at the Goldman Sachs note. Go over that.
Roaring 20s from Goldman Sachs. JP Morgan talking about market nirvana. I want to check in on the price action. Let's just look at where futures are right now, and then we can talk about price targets. S&P 500 futures this morning, kind of chopping around on the S&P. We are positive 0.7% and up another 26 points. So here we are at 35.67, and Goldman coming out, Tom, for 2020, looking for 3,700 year-end, 3,600 previously. But let's go with their year-end 2021. 4,300, 16% upside through 21, in addition to the upside they see into year-end.
Yeah, they model out to 2022 as well. And again, John, it's everybody recalibrating and readjusting, hearing, yes, it's the vaccine, and I know Mr. Costin leads with that. He likes deep value. He likes ESG. So in right now, but it's got to be more than just the medical news that we're seeing. And, John, to be honest, in the last 12 hours, the pandemic news is really pretty grim across this nation.
Well, Tom, let's do this. I'll read the line from David Costin at the top of the piece this morning. A vaccine is a more important development for the economy and markets than the prospective policies of a Biden presidency. This is a story for the market right now. We've talked about it repeatedly over the last couple of days. This market is living in the back end of 21. We're living in the here and now, looking at a deterioration, quite clearly, in COVID cases in the United States of America, Tom. On top of that, a contested election down in Washington, D.C. that has not been resolved yet, and a Senate race that has not been resolved yet. You need to get through the next couple of months still.
Well, even the next couple of weeks as well. Of course, overnight, John, and we don't need to go into it right now. We can focus on the markets. Futures up 25. The VIX is solid, 24.09. We should note the bond market closed today, folks, for Veterans Day, Remembrance Day in the United Kingdom. But, John, what I would focus on more than anything here is just the recalibration and reset. Let's remember it's November. And, John, you've got to reset into your 2021 research note.
We've got to reset into the politics as well, with the president refusing to concede the election. Secretary Pompeo in the last 24 hours really stirring things up.
It will be a smooth transition to a second Trump administration. All right, we're ready. The world is watching what's taking place here. We're going to count all the votes. When the process is complete, there'll be electors selected. There's a process. The Constitution lays it out pretty clearly.
Secretary Pompeo there, that's the Fuller quote from Pompeo, and I think it's really important to use the Fuller quote. A lot of news organisations overnight running the first line, a misplaced joke, bad taste. Maybe so, but I think it's important to recognise the overall context of that comment and what came afterwards as well. For the President-elect Joe Biden, this is what he has to say.
I just think it's an embarrassment, quite frankly. The only thing that... how can I say this tactfully? I think it will not help the president's legacy
That was President-elect Joe Biden. Joining us now is Peter Cheer from Academy Securities. Peter, it's a remarkable situation. Tom and I talking about these market notes coming from Goldman, roaring 20s, coming from JP Morgan, market nirvana. And here we are confronting two serious issues. One, a contested election down in Washington, D.C., which people are shrugging off. And two, COVID is still a thing in America. It's becoming a bigger thing again, Pete.
Yeah, it's definitely deteriorating. And I can see the point. We started writing about a month and a half ago that we could see the economy doing much better by the end of 2021 than it even started at 2020. But I think there's a lot to get through first. We really need to know we're going to get stimulus, and not just Band-Aid stimulus, but real infrastructure spending. And yes, we had some really positive news on the vaccine. I think it's going to take a little while. So right now I'm a little bit bearish in the near term because I think there's too many hurdles for the market to cross, and everyone got a little bit too bullish in the past week.
Peter Cheer, is the market pricing in a Biden presidency? I mean, the way I look at it is the market is looking at, as John says, well out into 2021, and they're not looking, I would suggest, to a Trump 2021.
Well, I think we still have to accept that at this point it looks like it's going to be Biden, that he's going to get through, that we still have the Senate race that's going to come up, and those runoffs are important. And I just don't see how we get meaningful stimulus before then. And there's so many uncertainties. Although I firmly believe we will get that infrastructure spending, there's a lot to go on before then. So, yeah, markets, I think, are a little bit complacent right now, a little bit looking too far ahead, and maybe we've got to focus on the here and now a little bit more, where there are contested elections, there are issues, and the vaccine, unfortunately, is not here yet.
With the gyrations you've seen the last week, have you recalibrated your sector choices here? Mr. Costin at Goldman clearly has done that. Maybe he's making some institutionally easy calls like the OSO and ESG and all that, but parse it out, financials, cyclicals, and the rest. What are you looking at?
Is going to dissipate, and you've got some valuation issues there. And then even, I like the financials a lot, and I think one thing that's been missed through this whole talk is a lot of people talk about the shape of the yield curve. Yes, that's good for financials, but you're still having a robust housing sector, which tends to be good for financials, and financials took a lot of loan loss reserves. I think if we're near the end of the pandemic, our ability to deal with it, you won't see those loan loss reserves increase anymore, and you may actually see some release. So I think financials can do very well. They're very underweight. So those are sectors that I've been looking to, and I expect this have-not outperformance to continue.
Pete, let's talk about the Treasury market. You mentioned it briefly there. 10-year yields, of course, at that upper end of the range of the last 5-6 months. Bond market closed today, but here we are at about 97 basis points on a 10-year yield. How much oxygen is there above this level, Pete?
I think there's a decent amount. I think we get towards 125 on the 10-year. I think as we break through 1%, you'll see some more selling pressure. You'll see kind of people pile into the trade. I think that inflation hopes remain, especially if infrastructure talk comes up. And positioning is just, again, fairly awful. Everyone got so bullish again on the rate side of things. I think we head towards 125. I don't think we get much above that because the Fed will jawbone it down.
Well, Peter, that's what I wanted to build on as well. Not just the jawbone from the Fed, but how the market would respond to that too. Last couple of days, clearly an index sector story for the equity market. At some point, you have to believe, with the move up in 10-year Treasury yields, it starts to take a bite out of broader risk appetite. Do you think 125 is where we get it done?
I think we've already started seeing that, and I think as we move towards 110, you'll see continued pressure, especially on some of the names that have really relied on this belief that the Fed is here forever, that rates are going to remain permanently low. I think the markets as a whole can adapt to it. I don't think we see a massive sell-off, but it will weigh on the markets.
Peter, Lisa emails in from 15 Central Park West, and she's asking about the gloom that's out there right now. What is the level of gloom, and is that a wall of worry that will really help us make a David Costin-like move?
I don't think so at all, actually. I think the doom kind of completely dissipated with the election, and my streams that I follow became incredibly bullish. Everyone was bullish. So that's part of why I think we're seeing this rotation. We're seeing some of these sectors fall down is everyone got too bullish post-election, and now the reality sits in. And, let's think about it. Everyone's kind of talking about how great this is for D.C. and all these things. D.C. often struggles to function at the best of times. It doesn't feel like the best of times in D.C. right now.
Just for the record, for our listeners, our audience worldwide, Lisa does not live at 15 Central Park West, just in case anyone is going to go and try and find Lisa Brown. It's just leave her alone today, Tom. Peter, just to wrap this up, this equity market, you like the have-nots in this stock market, right?
Yes.
But you also say you're nervous about the next couple of months. I understand that. I understand why. Where do you go for the protection, the downside protection? Where'd you get it from?
So I think right now you're supposed to be selling the winners. You're supposed to maybe be 50% invested. So you want to play this cautiously. I think you're looking for a dip. I think you're looking for that where the market kind of gets disappointed and everything sells off, and we don't get the rally like we've had the past couple of days where you really had strength in the Dow, Russell 2000, and weakness in big tech. I think you get a period of time where everything moves down, and that's when you want to reinvest heavily, but really focus on loading up on those have-not stocks.
Peter, great to catch up, as
Peter,
always.
thank you.
Peter Cheer there of Academy Securities. Peter, we appreciate your time. And Peter, just finally, before we let you go, I know that at your firm, a huge amount of veterans are working for you over at Academy. Peter, can you just speak to that on a day like today, please?
Yeah, so it's been a real pleasure working with Academy Securities. We're about 80 people. We're service-disabled, veteran-owned. Our entire management structure is veterans. About 45% of the firm are veterans. And I also have the pleasure that we work with what we call the Geopolitical Intelligence Group, which is 14 retired generals and admirals. So they provide a lot of geopolitical context that sometimes in its own right is very worthwhile, and sometimes it really meshes into what we're doing on the macro. It's been incredibly helpful when we've been dealing with China and our calls on China. So it's been a pleasure with working with these people. Everyone's been great. The service they provide to this country is awesome, and I'm happy to be a part of it.
Peter, fantastic work.
Very
fantastic work over at Academy. Appreciate your time. Really, really cool. Tom Keene, I think we both just got the same message, didn't we?
We did. Jim Bianco very clear that in his research there is no gloom at 15 Central Park West. For those of you, we say this with great affection for the architecture down at the bottom end of Central Park here in New York. There have been what many would suggest monstrosities built high and straight up into the air on Billionaires Row, 15 Central Park West, which is a really fancy address. I think, John, they have a helicopter pad actually, is within the scale of the grandeur of middle 20th century New York City. It's actually a very beautiful building and sits nicely there in the southwest corner. Did I do okay there, John?
I think it's
view
fair to
is
say you would know
unbelievable.
more about this building than any of us would, Tom.
I just
Especially
thought,
not Lisa.
I think Lisa's scoping it out. I mean, I don't know what else.
Is she?
You know what
Is
she
that what
is?
she
I
is
just
today?
got a message from her. She's up picking out her turkey in the Catskills.
Okay. Or maybe after all these years, she was never bearish. She was limit long airlines, leveraged up over the last several months.
I'm looking for an entry
cashed out,
point.
and maybe she's not coming back. We'll find out tomorrow. From London and New York this morning, good morning. For our audience worldwide, this is Bloomberg.
With the First Word News, I'm Rishika Gupta. President-elect Joe Biden calls President Trump's refusal to accept the results of the election an embarrassment. The president won't allow his administration to cooperate in the transition of power, and Biden isn't getting the intelligence briefing that presidents-elect normally receive. Biden says the president's actions won't help his legacy. And President Trump is quickly remaking the Pentagon leadership in the wake of the election. A day after the president fired Defense Secretary Mark Esper by tweet, 2 senior Pentagon officials stepped down. So did Esper's former chief of staff. Trump allies are poised to take acting roles. Critics say that sends a signal of turmoil in the military leadership. The coronavirus is roaring back in U.S. cities. That comes after a couple of months of the disease being essentially a rural problem. According to the CDC, metropolitan areas are now averaging a daily record number of cases. That has meant rising cases in and around Denver, Detroit, and Chicago. The virus is also mounting a comeback around Boston and Newark, New Jersey. In Hong Kong, opposition members of the legislature quit after China moved to disqualify unpatriotic lawmakers. It's one of Beijing's strongest moves yet to put down dissent in Hong Kong. The government ousted 4 lawmakers as soon as China passed the law. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishika Gupta. This is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
We are already beginning the transition. We're well underway. And the ability for the administration in any way by failure to recognize this our win does not change the dynamic at all in what we're able to do.
President-elect Joe Biden there weighing in as the contested election down in Washington, D.C. continues to heat up. Here's the price action cross-asset worldwide. We begin with S&P 500 futures shaping up as follows. We drift higher once again on the S&P. We kick higher by 27 points, up by 0.75%. The rotation of the last couple of days fades a little bit today. We'll talk about that a little bit later this morning. In the FX market, the euro retreats. Euro-dollar Monday, a 119 handle briefly, 117.57 right now, down a half of 1%. Yeah. A note to our audience, for Veterans Day, the bond market is closed, but there's the bond market. Tom, just to give you a flavour of things, yields come back in, down 2 basis points to about -50, -51.
John, we're not going to do it here right now, but Turkey roars. Erdogan stood up today and did what international finance wants him to do. Massive, strong lira and continued strong lira, 7.94 right now on the Turkish lira. Huge, ginormous move there. Right now, our Kevin Cirilli, our chief Washington correspondent here, 1 week on from the election. I mean, Kevin, I try to imagine where we were 7 days ago, and I guess I didn't expect we'd be here now. Let me cut to the news of last evening. How's that transition going at the Pentagon?
Well, look, I think that the conversations that I had yesterday with sources in the intel world and over this week, what they've suggested is that they're concerned about the message that this sends internationally to allies and adversaries around the world in terms of the confusion that this could lend itself to having. Yesterday, Secretary of State Mike Pompeo joking in the sense when he said that he's looking forward to a second Trump administration, but he went on to say and really echoed Senate Majority Leader Mitch McConnell in saying that the legal process of this has not impacted thus far any transition efforts, paraphrasing here, or any national security efforts either.
One thing so important here, Kevin, and this goes back to Barry Goldwater, and of course this is the Goldwater beyond the political election, the Goldwater-Nichols Act of 1986, which forever changed the Pentagon. What is the responsibility of Mr. Milley, General Milley, and the Joint Chiefs of Staff right now, given this political earthquake?
Well, I would note that we still have not heard from President Trump on camera. And so that has been a question that Republicans, as well as to some extent Democrats, are trying to sort through. The political nature of the Georgia January 5th runoffs, in which control of the Senate is at stake, is very much impacting and casting a shadow over all of the different dynamics that are at play here in the transition process. We should also note President-elect Joe Biden has also announced yesterday his transitional landing team teams. People like Ellen Hughes Cromwick, the former chief economist at Ford Motor Company, being named to the various economic agencies, in that case, the Commerce Department, but all of the different agencies and departments getting their thoughts together as a result of that announcement yesterday. And the names, I would note this, the names that are not on that list, Tom, potentially because they're being vetted for cabinet level officials. So if someone isn't on that list, it doesn't mean they're shut out. It means that they could be being vetted.
Kevin, I'll give you a flavour of Wall Street quickly on this particular issue. A shrug of the shoulders, not really taking it seriously. Can you give us a flavour of DC? How seriously are they taking this?
It's pure politics at this point, and I think that's a great point. I mean, candidly, the investor community is looking more at the December 11th deadline for there to be a government funding bill to avoid a government shutdown, and they're trying to look at the relationship between President-elect Biden and Senate Majority Leader McConnell. In terms of the politics of this, the Republicans that I speak with are all trying to sort through what precisely President Trump is trying to create, establish, jockey for in 2024, keeping options open on that front to try to become a political kingmaker of sorts, but also, and I would carefully watch Senate Majority Leader Mitch McConnell's comments this week and comments that he makes over the next couple of days, because he is also trying to protect, Jonathan, a Republican majority in the Senate, and that happens on January 5th.
Well, Kevin, this is what I'm grappling with. I'm trying to understand when to take this a whole lot more seriously. Are you essentially saying that if Georgia was done and dusted and we didn't have what was about to happen in early January, we wouldn't be having this conversation right now? There'd be a different approach?
There are Republicans that I speak with who would make that argument. And I would also note, I mean, last night, I spoke with a source very close to President Trump's political orbit and the remnants of his 2020 presidential campaign. And even this source said, where are the court documents? Where's the affidavit? I mean, right now, there is not a cohesive legal jargon. I mean, there's no document that has made this a case that is to be taken beyond just the tweets that we're seeing.
Kevin, within the intrigue, and I'm almost embarrassed to bring this up, but we do cover politics here, and for the nation and frankly the world, this is serious stuff. What is the significance of the CIA director meeting with the senator from Kentucky? Translate that for us mere mortals.
Well, look, I would say the following 2 points. First and foremost, I mean, it is quite common for Leader McConnell to meet with a host of different officials from the intelligence world, from the geopolitical world. And so there's that. And as well as people, like Federal Reserve Chairman Jay Powell. But the second point that I would make here is that the timing of it is of intrigue and is of note. And so given what is being discussed, both publicly in the public discourse sphere, as well as reportedly in the private behind closed doors sphere, or virtual sphere, and for that matter, it does warrant questions and of intrigue. But Leader McConnell has a long relationship with President-elect Joe Biden. They have, in some ways, even similar biographical backgrounds in terms of how they came up in adversity that they both face. And so I think that there are a lot of people in Washington, Tom, to be quite frank with you, who are looking forward and optimistic about the relationship between Leader McConnell as well as President-elect Joe Biden.
Kevin, great work, as always.
Thank you.
Good to hear from you. Kevin Cerulli there, Bloomberg chief, Washington correspondent. Tom Keene, a little bit earlier, mentioned the Turkish lira. It's probably his favourite currency. So let's check in on the Turkish lira, and I'll bring you the comments from President Erdogan that he made just a couple of hours or so ago, Tom, when he said Turkey is to implement the bitter pill policies if needed. The argument being that he might allow a central bank that most people assume that he's had control of over the last several years to actually hike interest rates. But he also said this, Tom, interest is reason, inflation is the result. So I don't think he's completely given up on his unorthodox approach to economics.
This is really, really important, and we don't need to go into it at great length here, John. But Mr. Erdogan just simply believes his politics and his representation of the Turkish people is beyond international economics, and he's going to look out for them first. Today, John, I would suggest, was a capitulation.
We have a 7 handle on dollar lira. Coming up on the FX market, Dan Katsi, BNP Paribas head of FX strategy for North America from London and New York. Looking at Washington, D.C., this is Bloomberg.
So do you get tired of people calling you a jazz legend? Do you feel older when they say that to you?
Yeah, I like the word jazz. I don't like the legend.
They have been here for quite a while. They have obtained the SVF license back in 2016. They've also been granted a license for the virtual bank. They will continue to play an important role in Hong Kong.
From London and New York, this is Bloomberg Surveillance. Let's get straight to the price action this Wednesday morning. We shape up as follows on S&P 500 futures, up about 29 points. We advance 0.8% after several days of NASDAQ underperformance. We have just a little bit of outperformance on the NASDAQ this morning. NASDAQ futures up a little more than 1%. Switch up the board in the bond market. Treasury market closed today for Veterans Day. Just wanted to give you a flavour of where we are at the moment in Germany, in the UK. Yields coming in Germany. That yield right there, negative 50 basis points. It was negative more than 60 Monday morning. Just get your head around that. Huge repricing of the bond market, the Treasury market as well. The Treasury yield closing yesterday at 97 basis points. We're now at the upper end of the range of the 10-year yield range of the last 5-6 months. keep your eye on that. My question, how much oxygen is north of this level and how long before that move starts to choke off risk appetite more broadly? Final point on the FX market. I think this is really, really interesting. We have seen humongous European equity outperformance over the last couple of days, and yet the euro has retreated. 119 handle intraday in Monday's session, all the way back down to 117, and we trade right now 117.60 and down 0.5%. Tom, I would have expected, as risk appetite picked up globally, for the dollar to fall away. That hasn't happened.
Well, it hasn't happened, but it's been a change in the foreign exchange market and sort of a discombobulation is the way I would put it. Daniel Katzev is with BNP Paribas. He writes extremely detailed and complex notes for institutional Wall Street. We're going to try to distill it down right now into basic pairs. Daniel, I see a huge disconnect between the major currency pairs and EM. What does that signal?
I agree with you. It's a discombobulation that we've really been observing since Monday, and it's particularly notable in dollar-yen, euro-dollar, the core dollar pairs. The market had a playbook going into the elections, which was that good news for the world was bad news for the dollar in the sense that if risk appetite improved, the dollar was going to tend to go down. If fiscal stimulus seemed more likely after the election, the dollar was going to go down because the Fed was capping nominal yields and creating this dynamic where the better the U.S. economy did, the more downside pressure there was on real yields.
I want to give you... Well, Dan, I want to give a window into what you do institutionally, folks. I'm going to put some Greek up on the screen. For those of you on Bloomberg Radio, you're lucky. I'm just verbaling it to you. Receive 10-year in 5s, 10s, 30s swap. It's Greek to me. It's Greek to you. But Dan Katzev, let's translate that right now. Is it a time to do complex strategies, or is it time to say do the blunt instrument, go long yen?
Well, I guess it depends where your normal operating venue is. I mean, the people who do complex strategies will want to do those complex strategies, but they're all playing off the same macro idea that ultimately with the Fed telling you that they're trying to reflate the economy and that they're going to look through a surge in activity relating to either fiscal activity or a vaccine success. You really should view good news on either front as likely to weigh on the dollar, as long as the Fed is sticking with its reflation plan. And this is really the best chance they have of success on the reflation front, is if we do get a rebound in activity because of either a vaccine or fiscal or some combination of that.
Dan, do you see a bit of a pain trade developing here? Like you said, like we said, typically you might expect European equities to outperform in an environment where the euro starts to outperform. It isn't happening. Isn't happening again this morning, Dan. I'm trying to understand how long that can persist.
I think it is a bit of a pain trade because the correlations are breaking down. And to me, it's not so much about relative equity performance as the idea that just if equities are going up globally, that is, the market's programmed has been programmed to sell dollars on that. The fact that playbook isn't working so well, you could view it as a pain trade. Our metrics tell us that the market was actually pretty flat dollars going into the election, even though there was this consensus that the dollar was likely to weaken post-election. There had been so much chop in September and October that the positioning was actually pretty flat. So there may not be as much pain as you might think, given the breakdown in correlation. And we don't know
Dan,
how
the reason
long
I
it's
ask,
gonna persist.
it could just be a short-term correlation breakdown, as you allude to, or it could be something bigger than that. It could be a signal from the FX market. And I know we often do this with the bond market. We look at treasuries and say, what's the bond market telling us? What is the FX market telling us this week, Dan?
I agree. I think it's probably a short-term breakdown, but I think the key thing is to listen to the Fed now. If the Fed comes out and says, hey, with the vaccine, well, maybe the economy will recover more quickly and we don't need as much accommodation, that would be a very bullish signal for the dollar. I think that's very unlikely. I think the Fed is going to come out and say what a lot of the Fed presidents yesterday said. There's still a lot of risks. The economy needs accommodation, and we're trying to get inflation and inflation expectations up, and this is the way we're going to do it. We're going to stay dovish even as we get a vaccine recovery. That would be a bearish message for the dollar.
Daniel, on EM strength, how do you productively trade the Pacific Rim?
I think the trade-sensitive currencies are going to have a better go of it now because the risks on the trade front seem lower in a Biden administration than they did in the Trump administration. Not that everything's magically going to improve in terms of trade relations globally. We're not going back to the old days of WTO rounds and things like that. But there's a little bit less unpredictability in U.S. policy, we think. So that should help the exporter currencies to some extent. And it seems like the central banks there are more tolerant of currency strength than they used to be.
Do you assume, Daniel, that with a Biden administration, the discussion of currency manipulation and the fear-mongering wrapped around foreign exchange drifts away?
I think it's still going to be with us. But, we learned a little bit during the Trump administration. We used to think that anything the Treasury said that diluted the strong dollar policy would be an immediate disaster for the dollar. It seemed that, we learned over the last 4 years that actually a lot of this rhetoric on not liking strength in the currency, things like that, has less impact than, maybe a lot of people assumed. So I think there will be these background issues of currency manipulation, tensions in bilateral relations with various countries relating to currency. But, I don't know if it will have a huge macro impact because, at the end of the day, Treasury is really not going to do much in the currency markets, not going to do much to generate a weaker dollar. And you're already seeing less intervention globally to support the dollar versus various local currencies.
Yeah, Dan, that's the issue. And Tom, I think we've spoken about this quite a few times over the last several months, the last several years for that matter. The Treasury can make some noise. What are you going to do about it? The central banks can make some noise. What are they going to do about it? And Tom, you can look at the ECB. The ECB, euro dollar for them, the good news is 117, not approaching 120 at the moment. And that's the good news. But Tom, even if they wanted it lower, what are they going to do about it?
Yeah, but this is really, really, really important. Daniel Katzev, where does Europe start screaming about strong euro? This is, John, to be kind, a wide debate. Daniel Katzev, where is it? What level?
I think they've already, screamed a little bit.
Agreed.
We had the comments last month from the ECB where they noted that the currency was a factor they were taking into account. But I think they want to be careful. They want to discourage generally, especially they did during the Trump administration. They wanted to discourage generally any notion that the central banks were kind of wading into the more mercantilist policies that were associated with trade wars and things like that. And they wanted to be a voice for free and open markets. So I think they want to be probably careful about what they say on FX, is my guess. And as Jonathan said, there's not that much that they can really do. I mean, they're already all in on the easing front. They're getting close to being all in on the easing front, getting closer to be like the Bank of Japan, where there's really not a lot that the market can anticipate from a macro easing standpoint. They can take various micro measures to support peripheral bonds and support their banking systems, but those actually tend to help the euro more than they hurt because they reduce perceptions of systemic vulnerability. So
okay, Dan, that's a really important point. Next couple of weeks, we go into December with an ECB meeting and many people expecting more European QE. You're saying more QE is euro bullish, not euro negative.
I think it's a little ambiguous. I think, more larger asset purchases would tend to have a negative impact on the euro. At the same time, to the extent that it reduces systemic risk premium, that tends to have a positive impact. And the result is that we don't really see a lot of FX impact from further easing. It's a bit of a headwind. I think the market knows the ECB is going to tend to be dovish, and it's one factor that should keep euro from exploding higher if the dollar starts to weaken very broadly. But I think of it more of as a headwind. I don't think they're going to be able to really engineer a lower euro at this point in the context of a generally weak dollar.
Dan, great to catch up. As always, Dan Katzev there of BNP Paribas. One of the more interesting stories of the last couple of days in the price action is what hasn't happened in the FX market. We have seen huge outperformance in the European equity market. Euro Stoxx 50 up 7-8% over the last 3 days. The Nasdaq is down almost 4%. Get your head around that. The second point, Tom, is that as European equities outperform against the backdrop of improving cyclical appetite, you'd be expecting the dollar to fall away against that move. We haven't seen that.
Yeah,
we've seen the euro trade negative.
We've been wrong on that for a year. I mean, the dollar, basically the dollar, I think of the David Bloom no longer with HSBC, who I think has just been absolutely great on that. I would say, John, the correlation on the equity markets today is more normal than what we've seen the last couple days. To walk across it, futures up 26, Dow futures 176, and NASDAQ 100, 142. John, I was going back and forth with Mohammed in East Anglia. And, John, do you celebrate Thanksgiving in the United Kingdom?
We don't, but I will for you, Tom. Bear in mind that I am on the US calendar, so I may or may not be at work that day. Would you like me to
But
celebrate?
do they
Should we
do
do
the
it
whole
virtually?
turkey thing? Do they do the turkey? You know,
I
mean,
believe
know
you
the
are, if you
pilgrims
are an
coming.
American in the United Kingdom,
You
might celebrate Thanksgiving. Are you cooking this year?
I am cooking this year. We had a massive battle last night. Divorce almost ensued, and I will. Let me rephrase this, John. I'm not cooking. I'm mailing it in. It comes in.
You're mailing it in.
It's coming in. I sit in the kitchen, and the boxes come in, and I take the cranberry out. And
Well, I've had the smoked turkey at yours before. Are you doing that again?
Greenberg's tragedy in Texas. The
Nice.
wonderful Greenberg family had a fire, and they have no turkeys
No
this year.
way.
Seriously, yeah. Major
So
crisis.
you've
actually got to cook?
I am going to, yes, I'm going to cook a live turkey. It's going to be one of these hugely overpriced things. It's got like lead pellets in it from when they went out and hunted it in the New England woods or whatever they did. It's, you know, people are going to leave in droves.
They're leaving the show right now.
Lisa's
I'll
up
uh,
tell you that.
picking out a turkey right now in the Catskills.
I don't know where Lisa is. Lisa Bravis isn't with us today. Good plan. Alongside Tom Keane, I'm Jonathan Ferro. Let's all hope Tom doesn't have to have a divorce over the holidays. I don't think I could cope
Turkey.
through to the new year.
Stuffing.
This is Bloomberg.
With the First Word News, I'm Rishika Gupta. Former federal prosecutors say Attorney General William Barr may make President Trump happy with his election fraud probes, but they say it's unlikely to change the result. Barr has set a high threshold on irregularities for investigators. At the same time, though, there's concern that the probe could undercut public support for Joe Biden. Mike Pompeo isn't acting like a lame duck Secretary of State. Pompeo warns that the U.S. is not finished yet when it comes to acting tough on China. In a speech to the Ronald Reagan Institute, he called the Chinese Communist Party a Marxist-Leninist monster whose rule is authoritarian, brutish, and antithetical to human freedom. President-elect Biden has warned British Prime Minister Boris Johnson not to compromise peace in Northern Ireland whilst pursuing Brexit. The two spoke yesterday. Biden reaffirmed his support for the 1998 deal that put an end to the violence in Northern Ireland. According to a British official, Johnson promised that the UK would uphold the peace agreement. And the Federal Reserve expects to join the club of central banks set up to fight climate change. The network for greening the financial system requires members be signed up to the Paris Climate Accord. President Trump withdrew the U.S. from the pact, but President-elect Biden has pledged to rejoin. And the world's biggest shopping binge is well underway. Alibaba has kicked off its annual Singles Day. It's a frenzy of consumption that will also serve as the best barometer of China's post-pandemic recovery. Chinese retail sales are down 7% for the year. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishika Gupta. This is Bloomberg.
It came in better than expected, not only in terms of job creation, but also a sharp fall in the unemployment rate consistent with higher labor force participation. That's really good news.
Overall, the gain was solid, but even while this is a very robust pace of job gains, it's a lot slower than it has been in the summer months.
Great that we saw the job gains we did, but they still are diminished from what they were, of course, back in April and May. And the scarring, the sort of wounds that were created by COVID are beginning to fester.
I would caution people to look at the top line number because I don't think it tells the entire story. Employment relative to population is still well below where we were pre-crisis, and that's because I think that we're going to have some lasting damage.
Depending on what you look at, jobs creation or the unemployment rate, you have different views as to whether the improvement in the labor force is keeping up or slowing down.
The Boston Symphony Orchestra presents BSO at Home. While you stay inside, enjoy a curated collection of archived concerts and behind-the-scenes stories from BSO musicians. BSO Homeschool provides lessons for music lovers of all ages. New performances and messages from musicians are added regularly. Enjoy these selections and much more at bso.org/at-home.
We explore the trends, investments, and competition of the European ETF industry. Join us on Bloomberg ETF IQ Europe.
Heading in the wrong direction. Over the next 2 quarters, I'm very optimistic that we're gonna grow at very strong rates. But a real downside over the next 2 quarters is, does the resurgence get so bad it forces lockdowns because of overwhelmed healthcare systems throughout the country? That's what we're watching for. Right. That's a real risk.
That is the real risk. That was President Robert Kaplan there, the Federal Reserve Bank of Dallas president and CEO. Alongside Tom Keene, I'm Jonathan Ferro. For our audience worldwide, we're live on Bloomberg TV and radio, and that right there is the problem. This market is living in the back half of 2021. Yeah. We're living in the here and now, Tom Keene, and we've got to get through the next few months, and those next few months are going to be difficult.
Robert Kaplan was riveting yesterday, folks. This was the Council on Foreign Relations on the Dallas Fed's ability to reach out and study hospitals nationwide. And I won't mince words. The usually optimistic Kaplan was grim about where we are right now. For John and I, and for Lisa, this is without question our interview of the day on the pandemic. Lawrence Gostin is with Georgetown University. He is definitive on our public health law, and I might point out our transitions amid pandemic. Dr. Gostin, a few statistics. Milwaukee, hospitalizations up 5 times. The 14-day national trend of deaths up 23%. We are back to April 15th in terms of hospitalizations across this nation. Is it worse now, or was it worse then?
Well, I think it's unquestionably worse now. I mean, it was a shock to our system then. You know, we literally didn't expect it. But now we're going into the winter. We've got celebratory dinners. You were just talking about your Thanksgiving. We've got Thanksgiving. We've got Christmas, Hanukkah, other festivals coming up. People are going to be indoors. They're fatigued. They don't really want to do it. And frankly, the Trump administration has basically given up, and we're just kind of sitting there waiting for the vaccine. And the virus is not waiting. The virus is, is all around us, and it's very transmissible. I'm very worried.
Yeah. As an aside, Professor, you are invited to the Keene household for Thanksgiving. I'm cooking, and that's a public health risk. Right now.
As long as you don't have the lead pellets in it, I'm fine.
Don't go, Professor. Don't go.
Lawrence Gostin, I really want to point out something. When all else fails, fancy suits and ties and dresses form a task force. If Mr. Biden does a task force, what does it, and you could be on it, what does a task force do?
Right. It advises the president, and frankly, I know everybody on his advisory task force, and they're all very, very good people. We had good people on the Trump task force. We had Tony Fauci, we had people, Deborah Birx, CDC people. But the difference is the tone from the top. Biden's going to say, mask up, distance, no gatherings. Whether that's going to have any effect now, I don't know, because it's so deeply ingrained in our culture. It's like a mask is an icon now. Either you're for it or you're against it. And so I just think, we're sitting ducks until we can get a vaccine. I have to say, the Pfizer vaccine result exceeded my most optimistic hopes. I just never expected to see a 90% effectiveness rate.
Professor, that's the good news. Let's talk about what we're grappling with right now. We've got this vaccine on the horizon. I want to understand from you, you've talked a little bit about the federal response, the state-level response from Massachusetts, from Utah, from New Jersey, just a couple of days ago. What more can they do, and what should they be doing? And if they don't, what trajectory do you think we're on?
Well, the states have only limited powers because people are traveling, and they're going to travel for holidays as well. And they're trying to have quarantines and testing requirements for people coming into the state. But that's not always very feasible because you've got them coming in by cars, trucks, every possible means, including plane and train. So I think, what they can do is not open bars, not open restaurant. We should have no indoor bars or dining. We should really make sure that people understand that these indoor, large celebratory gatherings are big spreaders of the virus. And there needs to be clear and consistent messaging. That's basically all we can do right now.
Professor, I want to go back to John Rawls and almost a theory of medical justice, if you will. And we don't need to get all philosophical here, but the great divide in America seems to be people that say at no cost we need to frame a public health policy where we don't kill a lot of old people, versus other people saying the economy's got to move forward. And, if the sacrifice is a bunch of old people, frankly, like you and me and not young Pharaoh, well, that's the price we pay. What kind of theory of justice is between those two?
Well, I mean, the first one, the idea that, the Great Barrington Declaration of just, letting it go, letting it run wild, but just save the elderly and the disabled people is I've never seen anything like it before, because when we talk about herd immunity, we're talking about vaccines. We're not talking about letting a potentially dangerous, fatal virus, spread like wildfire across the population. And I really do think that the economy versus COVID is a very false choice. Because if you look at the economies that have started to really bounce back, mostly in East Asia, China, places like that, they've done it by keeping the coronavirus under control and having really rigorous measures there. That, they had locked down originally, but then they got on top of it. That's what we need to do. It's the only way we're going to open up our economy. Otherwise, people are just going to be afraid to shop, to go to restaurants, bars, movie theaters, and we'll just, stagnate. And that's what's going to happen until we get a vaccine.
Professor, just a final question from me, and I ask this of you with the greatest of respect for the work you do. If some people tune into this today and hear you say things like close the restaurants, close the bars, and they look up at the TV, they listen to the radio and think, here we go again. Someone telling me that I can't go back to work, I can't earn money because of a pandemic that so far hasn't touched me. What's your message for them?
No, I totally understand that. My message for them is that we want the economy to go well, but we don't want to have extraordinarily high-risk environments. So indoor bars where people are drinking, they're getting close, they're losing their inhibitions. We see it just spreading like wildfire. It will go to your parents and your grandparents. And so, we can't always think about me. We have to think about the us. And I can say that in countries that have done well, they have opened up their economy a lot faster than us. Look, what we've done in America hasn't worked so far. Our economy is not booming. And the reason for that is we haven't gotten this virus under control.
Professor, we appreciate your time this morning and look forward to having you back soon. Lawrence Gostin there, Georgetown University professor from London and New York this morning. Good morning. Alongside Tom Keene, I'm Jonathan Ferro. Lisa Brammett's taken a well-earned day off. With equity futures positive, this is Bloomberg.
So when you went to Baltimore, you went initially to be an anchor woman, and then it didn't quite work out.
Yeah, I got fired.
Well,
demoted. I was
got demoted, but they didn't. They had a contract, so they didn't say goodbye. Yeah. And then, how did you work out to be on a afternoon show where you actually got to be an interviewer? How did that actually happen?
Well, what happened was this is what I now know with age and perspective, that many times getting demoted is an opportunity for something else to show up, or getting fired. You know, lots of people I've interviewed over the years who have these stories about the best thing that ever happened to you. It puts you in the next best place. I was not a good television reporter. I was too emotional. I was making $22,000 a year, and my best friend Gail, who I met there at the time, she was also working there. She said, "Oh my God, you're 22, making $22,000. Imagine when you're 25." Then you're 30. So I'd be making 60 about now. It'd be good, 62. Once I got demoted, they didn't want to pay out my contract. I was making $25,000 a year. They didn't want to pay me the $25,000. Right. So they kept me on and said, "We'll put you on this talk show just to run out your contract."
renminbi will be a viable reserve currency quickly, but I do believe it'll happen much faster than anybody expects. The question is, what is the storehold of wealth in the meantime?
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Will probably judge this that this is no longer a contested election.
Some clarity around the election and some clarity with a divided government, which I think is actually a great outcome for markets.
The virus and economic growth is more important than the gyrations in D.C.
I think the vaccine, in a way, should be seen as a
a global fiscal stimulus.
Everything is going to be lower and flatter for longer.
There's just a lot of cash in the sidelines that needs to be put to work.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
Good morning, everyone. Jonathan Ferro, Lisa Abramowitz, and Tom Keene, Bloomberg Surveillance on Bloomberg Radio, on Bloomberg Television. Earlier this morning, the Arc de Triomphe, Mr. Macron and his military. Earlier at the Cenotaph in London at Whitehall, the British military, Prince Charles, I believe, in attendance there. And, John, you really got to wonder, we'll get to the markets in a moment, who shows up with President Trump today on Veterans Day in America? That is a mystery.
We mark that Veterans Day here in the United Kingdom, Remembrance Day, Tom, the 11th hour of the 11th day on the 11th month, and we did that just a couple of hours ago. We will see the President today, and I think that's important, Tom. We will see the President, whether we hear from the President, two different things, and we would like to hear from the President and see where he stands on the contested election that is building up over the last couple of weeks or so, Tom, particularly over the last couple of days. For me, this market is just shrugging it away.
We're going to go to the market right now.
That?
We need to explain right now that one Lisa Abramowitz not with us today. It's an important day off for her up in the Catskills north of New York City trying to find the proper bird for the fourth Thursday of November. John, to the markets. Futures up 30 moments ago. Dow futures up 201. Look at the VIX, John, under 24.
Look, this market's bulled up, and the South Side is bulled up as well. JP Morgan calling it market nirvana. Goldman Sachs this morning, the roaring 20s redux, Tom Keene. That's the call from Goldman. 3,700 on the S&P's the year-end target, up from 3,600. Year-end 2021, 4,300. And that is the story for us this morning. The belief that 2021 is just full of the good stuff and you just need to work through the next couple of months. What would undo that new consensus view?
David Kostin at Goldman Sachs maybe catching up with someone like Alicia Levine, someone like Ben Laidler over at Tower Hudson. John, to me, the important note there is not up 21% end of 2021, but Kostin frames a productive 2022 as well.
And the vaccine being the more important development for this economy, as opposed to anything that's going on politically speaking. And that's key, Tom, because for many people, you won't really understand the policy outlook until early January when we work our way through the Georgia runoffs and understand who actually runs that Senate.
Couple of headlines coming out. Mr. Pence, rumored to be in Florida, will stay in Washington now through this election uproar. We'll get more on that through the day from our Kevin Surley, David Weston covering that, of course, on Balance of Power. Christine Lagarde just moments ago. John, you got to translate this for me. Christine Lagarde says the duration of ECB stimulus matters as well as level. I mean, and Christine Lagarde here, of course, our head of the European Central Bank. John, I love that idea. Duration over level.
So I need a bit of context here, Tom. I haven't actually read the headlines, so I'm not sure if she means duration of the bonds that they're buying or the time that they buy bonds for. And obviously both are important for any asset purchase program. This ECB is going to be in the market for a long, long time, Tom. Let's be clear about that. They will reinvest those maturing bonds on the balance sheet for a long, long time.
And that emphasized by Robert Kaplan yesterday to Michael McKee and myself in two separate interviews. Right now, on the equity markets, Alicia Levine with BNY Mellon, really quite good at dovetailing quantitative into the fundamental outlook on the market. Alicia Levine, get quantitative for me right now, looking at something like price to cash flow, price to revenues, price to earnings. Is this market cheap, ready to launch higher, or are you still cautious?
So I actually am very optimistic. I mean, we had two major game-changing events. We had the election, which probability-wise is going to produce a less activist government than the market probably would have been comfortable with in the form of split government. And even if the Georgia races produce a 50-50 Senate, you still have some conservative Democrats that may not go whole hog for the full progressive agenda. So there's that. And then there's the vaccine. And it's not so much that it may be available by the end of the year, which we knew. It's the efficacy, which means people are going to take it, more likely to be willing to take it, and you can get to some sort of immunity faster because of if the efficacy holds up. Therefore, the chart on the S&P looks great. It looks like it's about to power higher. It's held the 3,200 level 2 or 3 times. It keeps them working out its way towards 3,600. It looks like it's going to move higher. My one word of caution is if you look at the QQQs, it's making lower highs. So if I'm going to be the skunk at the party is the QQQ chart doesn't look as solid as the S&P does. And to the extent that these large cap tech stocks are, producing so much of the price action in the S&P, you have to watch that as well.
These are the tech names. The Nasdaq peaked in early September. We didn't get back there. Alicia, many people are asking how much risk there is at the index level if big tech gets in trouble here. Big tech did really well with a shutdown. Big tech has done really well without a vaccine. Can it continue to do really well with a vaccine?
Right. So we think in the next couple of months, tactically, the cyclicals and the value will outperform on a relative basis, but you still need tech to hang in there on some level. So you can't have one of those terrible days where Nasdaq's down, 4 or 5%, because the S&P will not be able to make progress then, just because tech is overweighted so much on the index level. It just has to perform a little bit. And as we know, going forward, it's your growth names that are really going to be carrying the market, not so much value and cyclical going forward. This is a tactical trade because the Fed is staying easy and rates are staying low. And even if the 10-year gets to 2%, which is really hard to imagine, your yields are still negative until the 10-year gets to 2%. So your real yields are still negative. So you have a lot of juice in the trunk here for the market moving higher. You can't have tech fall out of bed. You can't, because you'll never get the index moving.
Yeah. Alicia, stick with me. I've got to do a couple of things. I want to get to the European bond market quickly and pick up on what's happening in Italy at the moment. The 10-year yield just rolled over, down about 5 basis points on a session now to 71 basis points on a 10-year. Here's the why. ECB President Christine Lagarde speaking right now and alluding to her view that PEP, which is the Pandemic Emergency Purchase Programme at the ECB, is likely to remain the main ECB tool, along with TLTROs. Now, this is important, Tom, because as we work our way through 2020 and out into 2021, that asset purchase programme has a huge amount of flexibility that the traditional asset purchase programme on the sovereign side of the ECB over the last few years did not. Her ability to get the Governing Council to stick with her and stick with that through 21 and not just go back to the old ways, keep that flexibility, gives them a lot of comfort on the peripheral side of things, which I think is what the read across is right now. You take that headline, you drop it into the periphery, and you bid up Italian bonds.
Well, let's make it simpler. She's saying they will take in less pristine paper, so it's price up, yield down, right?
They will have the ability, if they so wish, to maintain that flexibility to lean into the periphery a little bit more, Tom, and maybe not buy as many bonds and buy some more BTPs if they need to. You remember back in March when they said we're not here to close spreads? That headline right there tells you everything we need to know. They are here to close spreads. They know, and this is the delicate dance played out in Europe much more cleanly than what we're seeing play out in the United States. They know that on the fiscal side, there's still work to do. And they know to get that work done, these governments are going to have to issue a lot more debt. What are they doing? They're keeping interest rate costs a whole lot lower. Alicia Levine of BNY Mellon still with us. Alicia, this is the story, isn't it? Central banks aren't going to remove themselves from the game in 2021. Things have changed. Used to be the case that when things get bad, they step in. And when things get better, they'll step away again. In 21, if things get better, they'll still be in the game, won't they?
That's right. I mean, that's also fuel for the market. You know, the discussion of the average inflation targeting was precisely for moments that we're in today, when the expectations of growth tick up a notch, the expectations for inflation pick up a notch, and the announcements over the summer in September were precisely for this moment, saying to the market, we are going to stay put. And we're going to let growth take hold, and we need to heal the labor market. It was for moments like that we're in today. And so we have wind at our back here.
Alicia, great to catch up, as always. Alicia Levine there of BNY Mellon on this market. Just another reason to be bullish in the minds of many people. And, Tom, we've got to question that consensus now, because that consensus is so strong looking out to 2021. Just to reiterate what we've heard from Goldman, from JP Morgan, the roaring 20s, market nirvana, Looking out to 21, everything's great. Let's look at what's right in front of our face. Next couple of months, difficult.
Well, what are you, missing Lisa or something? You're going to give me the gloom of Lisa? Look, all I know, John,
No, I think we've got to digest two different time frames, Tom. I think it's important.
We got to do two different time frames. I get that, and I see that people are optimistic. But, John, how many days ago was the world coming to an end? We're reacting to the news. What comes after the vaccine euphoria wears off? And my answer is we're just closer to a vaccine when the vaccine euphoria wears off. And am I right? There's many other vaccines to come.
Yeah, and Tom, I would go one step further. What happens once we get the vaccine? You will get that sudden rush of demand, that inflationary impulse come back into this market. Then what? What's trend growth look like? I don't think trend growth adjusts that much. I think trend growth is going to be lower, which is what many people anticipate. So you get that brief boom, and then what? You get that low trend growth again. And John, that's what we need to adjust for the whole cycle.
Another thing, John, we haven't talked about is trend growth of EM. I've been really taken by ADXY and the tea leaves across the Pacific Rim. They are hugely optimistic about EM finally getting its act together. And whether you call that one big small cap, I don't know. But nevertheless, it's a fact. They're doing much better.
EM looking good. China at the epicenter of that. Coming up on this program, Julie Norman, University College London professor, on the situation in Washington, D.C. From London and New York this morning, good morning. For our audience worldwide, heard on Bloomberg Radio, seen on Bloomberg TV, this is Bloomberg Surveillance.
With the First Word News, I'm Rishika Gupta. President-elect Joe Biden calls President Trump's refusal to accept the results of the election an embarrassment. The president won't allow his administration to cooperate in the transition of power, and Biden isn't getting the intelligence briefing that presidents-elect normally would receive. Biden says the president's actions won't help his legacy. And President Trump is quickly remaking the Pentagon leadership in the wake of the election. A day after the president fired Defense Secretary Mark Esper by tweet, two senior Pentagon officials stepped down. So did Esper's former chief of staff. Trump allies are poised to take acting roles. Critics say that sends a signal of turmoil in the military leadership. And the coronavirus is roaring back in U.S. cities. That comes after a couple months of the disease being essentially a rural problem. According to the CDC, metropolitan areas are now averaging a daily record number of cases. That has meant rising cases in and around Denver, Detroit, and Chicago. The virus is also mounting a comeback around Boston, Newark, and New Jersey. And Bloomberg's learned that Airbnb's long-awaited filing for an IPO has slipped to next week. The home-sharing giant had planned to file on Thursday, but it decided on a delay to keep from being overshadowed by the U.S. election. Airbnb is planning to raise as much as $3 billion on its debut on the NASDAQ. Global news 24 hours a day on air and on Bloomberg Quick Take. Powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishika Gupta. This is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here? It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
Give you a sense of the real-time action. The 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
Beginning on January 20th, the Vice President-elect Harris and I, we're going to do everything in our power to ease the burden of health care on you and your families. I promise you that. As I said, I will protect your health care like I protect, like as my own family.
President-elect there, Joe Biden. From London and New York this morning, good morning. Alongside Tom Keene, I'm Jonathan Ferro. Lisa Abramowitz is out today. Got to do a couple of things, work through the politics and work through these markets as well. After a couple of days of huge, explosive outperformance on the equal weight S&P, particularly on Monday, it was phenomenal. Small caps surging, NASDAQ rolling off. I can tell you today, the S&P up 29. We advanced 0.8%. The NASDAQ kicks back a little bit. Bit of outperformance on the morning, up 154. We advance 1.3% now. In the FX market, a dovish tone from ECB President Christine Lagarde. Euro-dollar 117.68, still negative 0.4%. But the bid into the bond market, Italian 10-year yields lower, German 10-year yields still lower, down 2 basis points there. Tom, negative 51 basis points on a German 10-year.
Yeah, John, I go percent change on the equity market, up 0.8%. Standard & Poor's 500, a lesser 0.7% on the Dow. And the NASDAQ almost normal today, up 1.3%. We'll see if they can sustain that through the day, and for that matter, through the week as well. Lots to talk about here. Again, bond markets closed here on Remembrance Day, Veterans Day as well. But it is a good time to speak of the political moment. Julie Norman is at University College London. She is expert, studied, and thought about conflict resolution. Julie, what's your prescription for the resolution and the conflict of this election? What's the path forward?
Well, Tom, right now we're seeing almost two different realities playing out. I think the Biden team is playing it right by just moving ahead with the transition right now. They're not fueling the fire that we're hearing from Trump and from the Trump tweets. But at the same time, we hear from a lot of Trump allies simultaneously, from Barr, from Pompeo, that they are still entertaining the president's allegations of voter fraud and of a flawed election. So right now, moving forward, it's really a critical time for really getting on message to ensure that there isn't an increasing threat to American security and democracy at this transition moment.
Long ago and far away, and Barbara Conable of New York was involved in this, and Senator Goldwater of Arizona, Minority Leader of the House, John Rhodes. This is 1974. Julie, they got together and they walked up to Nixon and said, it's over. Who's going to walk up to President Trump and say, it's over?
Well, that's the big question right now, Tom, because we've seen mixed messaging from the GOP. We have seen some more moderate GOP figures, Mitt Romney, George W. Bush, come out very publicly and congratulate Biden and Harris, really condemn any allegations of voter fraud. But at the same time, we still see a lot of support for Trump right now within both the Congress as well as within the White House. And really some rather careless remarks from some aides around Trump. One yesterday that the Post reported saying kind of what harm is there in just humoring Trump at this time? He's just making noise. But indeed, as you said, from a conflict perspective, this really is reckless. Even though within the Beltway, most people know the votes are still going to be cast, Biden will assume the presidency. All it's doing right now is stoking tensions. It's feeding a lot of animosity, especially among Trump's base, and really just making it possible that people would doubt future elections and doubt the electoral process, which could be something quite long-term and difficult to repair.
So, Professor, this is important. For market participants right now, they're taking the approach that most people are taking, which essentially is, this is President Donald Trump. We've heard this kind of thing before. Let it go. Yes, it's reckless. We don't agree with it. But ultimately, there are no risks that could materialize in the short term. You've brought up a long-term risk, and that's the democracy in the United States and the voting process and the legitimacy of it. An important issue that goes way beyond 2020 and 2021. But can you help me understand the short-term risk factors that might materialize, Professor? What are they?
Absolutely. Well, often at a transition time for all states, it's a time when states are a bit more vulnerable than usual to both internal threats and also external threats. And the U.S. has always had a very smooth transition of power, so this hasn't usually become an issue. And I don't see it necessarily becoming one now, but the U.S. is looking more vulnerable when a transition seems chaotic or unstable as it currently does. It's also problematic when the incoming administration doesn't have access to the resources, the agencies, and especially the intelligence briefings. We even heard in the 9/11 Commission report that the delays of George W. Bush getting the intelligence briefings and the security briefings earlier on, might have made the U.S. more vulnerable to those attacks in 2001. So again, this doesn't mean anything is imminent, but it just means that transitions and smooth transitions really facilitate and help us on the security and intelligence front, and not having that just makes us further vulnerable.
Julie, thank you so much. Julie Norman with us with UCL this morning on the politics of the moment. And yes, here on Surveillance, on radio, on television, we do look at politics and international relations across all the market move. And John, I admit, with the bond market closed today, it's actually a very, very interesting equity market, particularly with those research reports out.
Yeah, on the bond market specifically, trying to do two things at once here, anchor a program and read a speech from President Lagarde. I wanted that context around what she was talking about, around the duration of the program. Doing it in English, fortunately, on the ECB website. She's talking about financial conditions and financing conditions for people and companies and households, Tom. It's actually a really, really interesting speech, and it's about the duration of policy support. So not about the duration of the bonds that they buy, but the duration of policy support. And I think what Christine Lagarde, the ECB president, is trying to achieve this morning, Tom, is set us up for 2021 and beyond. And perhaps at the next meeting at the ECB, it's not going to be a simple case of just boost QE. Yeah. It's going to be about communicating how long we are going to be in this game for.
John, let's look at Armistice Day. Mr. Macron at the Arc de Triomphe this morning. I'm looking at the money market screen on the Bloomberg. I have negative interest rates out to 10 years in France, John. How do a people of a nation work with negative interest rates? It's yet to be explained to me.
With great difficulty, and I remember a conversation we had with Eric Nielsen of UniCredit just a couple of weeks back, Tom, and it's something that has really stuck with me. Will we be able to engineer a recovery in the Eurozone that actually leads to higher interest rates? We failed last time, and his response was, we'll likely fail this time. I'm paraphrasing, my words, not his, but that's what he alluded to. That's the story, Tom. The story is in Europe, even when we get through this mess, trend growth is going to be so low that the ECB will not be able to put up interest rates anywhere near like they were 10, 15 years ago.
John, I thought of you yesterday in talking to Mr. Kaplan. It wasn't about Tots Chelsea, which is coming up the weekend after Thanksgiving. But, John, it was about Kaplan talking about 2 quarters in America and then improvement. Is that tone the same in Europe? I don't think so.
With lockdowns in the UK, France and Germany,
I just don't think it's
and
there.
other countries as well, not part of the conversation in Europe. Tough 4Q still ahead. From London and New York this morning, good morning. Tom Keane with something extra to say. Throw it out there.
Have you heard
You've got
from
20
Lisa?
seconds.
Have you heard from Lisa? I haven't heard from Lisa. I mean,
just had an email.
I
had an email.
You hear from me. I didn't get an email. You know, I get no love.
She's getting messages about how she's storing oil in her home in 15 Central Park West, and she's binge watching Alan Partridge. There you go.
There isn't anything about trading that is more central to your success than accepting the risk. So wrote Mark Douglas in Trading in the Zone. But how do traders accept the risk? They apply good risk management. They never lose more than a very small percentage of their capital on a single trade. They protect what they have, concentrate on capital preservation and don't get hung up on making money. And they never let their ego, emotions, fear or greed get the better of them.
The big concern is climate change. We can see the global warming accelerating at the moment, and the goals that we must hit are so ambitious. It's 1.5 degrees by 2050, being climate neutral in terms of emissions by 2050. That's a huge challenge. We have to reduce emissions by 50%, 2030, 2040 again. It's very, very ambitious, and mobility plays such a crucial role in there. One thing is to do it in developed countries. I think we're going to get there by 2030, but then the rest of the world, and that's just as important. If you look at developing countries, emerging countries, that's where probably the biggest challenge we are going to face, to also deploy EVs there and make mobility greener in those countries. I know it's possible to move mobility forward fast enough to be able to do its part in this fundamental threat that we're facing.
From London and New York, this is Bloomberg Surveillance for our audience worldwide, live on Bloomberg TV and radio. Here is the price action this Wednesday morning after a historic rotation Monday, Tuesday, both on a sector level and a regional level as well. We unwind some of that just a little bit. That move fades. If you look at the NASDAQ, that's where the outperformance is. Previous 2 days, underperformance. We advanced there 1.2%. The S&P 500 up just 0.8%. The big tech story coming back just a little bit in the United States. Over in China, pretty ugly. Check that out on the Bloomberg or on Bloomberg.com. Elsewhere, Europe, that's where the outperformance was Monday, Tuesday. That's where the underperformance is here. Euro Stoxx 50 up by just 0.5%. Want to finish in Europe on the bond board, though, and get to the European bond market and take a look at Italy following that ECB speech from Christine Lagarde. The bid is back. We're down 5 basis points on an Italian 10-year to 0.715%. Tom Keene, the ECB president, not just setting us up for the December meeting, but 2021 and beyond. An ECB that will be in and around the game for a long, long time with loose monetary policy.
Over the last 10 minutes, John, yen goes stronger on euro-yen as well, and the euro on dollar 117.65. Right now, Thomas Koster joins us at Pictet Wealth Management. He has been very, very cautious on the economy, but you've got to dovetail that into market performance. We're thrilled that their senior economist joins us this morning. Thomas, you have had a very articulate, cautious view on aggregate demand. What does that mean for the stock market?
Well, you have really two things about the stock market. One is the economy, and the second one is monetary policy. I must say we're in a world where monetary policy is very stimulative. Rates are going to stay low for a while, and actually we may see more asset purchases. Bonds, obviously not equities yet. But still more liquidity going into the market, and that's helping valuations. Right. That's a fact.
Tell us what, as we mentioned 20 minutes ago, 10 minutes ago, the reality of a sustained at the zero bound or a sustained negative interest rate. Away from the fancy guys like you, what does it mean for the people of Europe to see this chronic negative interest rates?
Right. So the first thing, the mood has shifted a bit on negative rates. I will note that Europe did not move further down into negative after the coronavirus crisis. They did more asset purchases, more long-term loans to banks, but negative rates actually stayed where they are. So there seems to be some pushback against negative rates in the global central banking community. We all, we keep in mind Sweden decided also to move away from negative rates and back to zero. In England, they have been discussing and thinking about negative rates, but it seems there are some obstacles to negative rates there. So I must say, the wind has a bit shifted and is less in favor of negative rates globally, but more into asset purchases and how to provide fiscal space to countries so that they can spend money in the economy to help support the economy and to go through these tough times of the coronavirus.
So, Thomas, my question to you would be, is that a change in the theory, or has the vaccine developments of the last couple of days just changed the approach, reduced the urgency?
Well, the thing is, the debt is here, right? So you have to carry this debt. So I think, rates will have to stay low for long. I don't think the vaccine the vaccine, we were expecting a vaccine in 2021. Maybe it comes a bit earlier than expected, but big picture wise, it will take time for the vaccine to be deployed. And in the meantime, we still have many hurdles. So most of Europe is going through lockdowns right now. And in the U.S., I think we may, quite soon see, lockdowns at the state level. I'm watching New York City quite closely now. But, the situation is quite difficult, globally and especially in developed markets. So I think, central banks are here, especially to guard against the downside risks. So I don't think they will let down the guard. I think they will continue to provide accommodation for the foreseeable future, even if we have a vaccine and even if a vaccine is actually good news in 2021.
So, Thomas, they've gone above and beyond what they did 10 years ago now. The Federal Reserve's in the credit market. The ECB was in the credit market a number of years ago. As you've pointed out, rates aren't going up for a long, long time. Do we have centrally planned credit markets now? Is that what they are? Because if I'm an investor right now, looking at what's on the horizon, hopefully things get better. Maybe they won't. But ultimately, is the outcome the same? Credit spreads remain really, really tight because these guys will just step back in and buy.
Yeah, and I would argue we're in a kind of a soft MMT environment where there's pressure on central banks to ease policy and to keep rates low. However, we're not yet in the textbook MMT, and in the textbook MMT approach where the central banks completely lose independence or you plug them into the treasury, that's where the game changer would be, including for inflation. I don't think we're in that regime yet. I think we might be heading down that route. but it's more a question of several years rather than several months. But if we go into the textbook version of MMT, modern monetary theory, then I think we have a regime shift in terms of the inflation picture. So that's what I would watch. To what degree central banks start to lose their independence, and also to what degree the money starts to go away from the financial system to actually individual bank accounts. That's what I would watch closely.
What is the distinction right now between inflation dynamics of goods and services?
Well, that's the central question. The money right now is staying in the financial system. That's why you have low velocity of money supply. The money is still circulating within the financial system, and that's also helping valuations. So there's a line of thinking that says, well, let's stop this and put the money into the individual bank accounts. And I think that's where you could have a regime shift, because when you start to put the money into individual bank accounts, I think that's where you will have this inflation surge that everybody's fearing when you start to do that. I don't think we're there yet. I think what central banks are still doing, they're injecting money in the financial system.
Okay, they're injecting money into the financial system, which means a wall of money. We got a wall of money coming from institutions. I believe it's reported by strategists, including Mr. Costin at Goldman Sachs, that there's a wall of money out there looking for a warm place. What does that money do given the incentives of the next 6 months?
Right. So if you look at the macroeconomic picture, it's you have two stages. The first stage, it's the near term, and it's going to be tough. OK, you have, COVID infections are still up and rising quite strongly, especially in the U.S. And then in 2021, you should have the cyclical recovery. I mean, the economy will bounce back, right? So as an equity investor, I mean, do you look at the near-term challenges or do you look at 2021? My feeling is that, equity investors are already looking at 2021. And on top of that, we have almost, an assurance from central banks that they are going to stay behind the curve. They, by the way, those central banks still believe in this, trickle-down effect from asset prices to the real economy, even though the jury is still out on whether that really works. But they still do believe that boosting asset prices will end up boosting the real economy.
Well, the jury's definitely still out on that. We're talking about central banks, of course. We're talking mainly about the main ones, the Federal Reserve and the ECB as well, the Bank of Japan too. Tom, I just want to jump in with a call from SocGen on Turkey. SocGen looking for a 400 basis point rate hike on November 19th.
Yeah.
That's the next meeting. 10.25 is the rate right now, so another 400 basis point hike.
Yep.
And they're looking for a move on dollar lira, Tom. Right now, 787. They're looking for that to come down to 692. That's a big move, Tom.
I haven't done the math yet on what the lira does, but, John, your math on 400 beeps is absolutely right, because what they're going to do is overshoot the requirement, which is modeled at 12 or 13%. So they go out to 14, so they don't have to do it 2 days later. That's the basic thinking there.
So I'm going to use the I word. Thomas Costa, come back into the conversation. Idiosyncratic. How idiosyncratic is the Turkey story, and how many other EMs out there are going through a similar theme?
Right. And, the question comes back to confidence and confidence in the financial system. I think we in developed markets are lucky. We have, very deep financial system that, and people trust the financial system. It may be a bit less the case in Turkey, though. Low rates, there are low rates in developed market, but doesn't mean that you have to go out there and be blinded about where you go and put your money. That's also the key takeaway. Be careful where you put your money.
Thomas, thank you. Great to catch up, sir. Thomas Kostek there, Pictet Wealth Management senior economist, talking about central bank rate calls low. The Fed, the ECB, the BOJ and elsewhere. Much higher still to come in Turkey, apparently, according to SocGen, looking for a 400 basis point hike at the next meeting, I believe, a week tomorrow. Headlines coming from Chancellor Merkel as well. We must prepare for tough winter despite the vaccine prospect. The second virus wave is likely stronger than the first. And that's the reality for Europe right now. The hope on the horizon, we all share it. The reality on the ground right now, tough winter still ahead, Tom.
John, I can't convey, when I was coming in this morning in the surveillance Bentley, I can't convey the reality that right now it's a pandemic. We've got the election, a contested election. All that's going on in the United Kingdom, Chancellor Merkel speaking as well, we're underestimating, we do economics, finance, politics. You know what? We're a medical channel right now, John, because things have shifted. I'll call it in America the last 48 hours. You know way ahead you were that it's been the last couple weeks in the United Kingdom and the continent. This pandemic, again, is very close to what it was like in March.
So, Tom, here's the question for a market participant right now. You've got this huge hope on the horizon. We all hope it develops in a advantageous world for society.
Yep.
Let's get to what's in front of us right now. How much bad news are you willing to ignore in the next several months if you're long this market, long cyclicals into the back half of 21?
A lot.
How much?
A lot, because corporations will adjust. That's the great lesson of all this. You know, we do the running joke about triple leverage all cash fund. The history of this, John, and I was weaned on this in 73, 74 in school, and then wandering out into the glorious economy of 75. The history of this, John, is simple. Corporations adjust. Even Bloomberg will adjust to the idea Abramowitz is off today. I don't know what that's about.
I'm just adjusting to the fact that you were still in school in the 70s.
That's amazing. Can you believe that?
A little bit earlier than that, Tom.
You know, Jeff showed me the record album and said these guys are great. It was REO Speedwagon. No one knew who they were. You don't know who REO
Alongside Tom Key.
You don't know who REO Speedwagon is.
I'm Jonathan Farrow.
You don't know who REO Speedwagon is.
I do. We're going to play a song as we go to commercial break.
Yeah,
we're going to do that right now. Yeah. Lisa Abramowitz is back tomorrow. That'll be fun. Looking forward to having Lisa back.
She's back tomorrow?
The Bear taking a day off.
I'm off tomorrow?
Last couple of days has been tough. You can be off tomorrow. You can be off the day after.
Really?
Do you want to take next week off too?
Oh, you use my vacation days so I can understand it. You know, I've got like 6
Futures up 0.7%. This is Bloomberg.
With the First Word News, I'm Ritika Gupta. Former federal prosecutors say Attorney General William Barr may make President Trump happy with his election fraud probes, but they say it's unlikely to change the result. Barr has set a high threshold on irregularities for investigators. At the same time, though, there's concern that the probe could undercut public support for Joe Biden. And Mike Pompeo isn't acting like a lame duck Secretary of State. Pompeo warns that the U.S. is not finished yet when it comes to acting tough on China. In a speech to the Ronald Reagan Institute, he called the Chinese Communist Party a Marxist-Leninist monster whose rule is authoritarian, brutish, and antithetical to human freedom. President-elect Biden has warned British Prime Minister Boris Johnson not to compromise peace in Northern Ireland while pursuing Brexit. The two spoke yesterday. Biden reaffirmed his support for the 1998 deal that put an end to the violence in Northern Ireland. According to a British official, Johnson promised that the UK would uphold the peace agreement. And the Federal Reserve expects to join the club of central banks set up to fight climate change. The network for greening the financial system requires members to be signed up to the Paris Climate Accord. President Trump withdrew the U.S. from the pact, but President-elect Biden has pledged to rejoin. And Deutsche Bank says that working remotely is a privilege you should have to pay for. Strategists at the German lender are proposing a 5% tax for those who work from home on a regular basis. And not because of a government lockdown. Deutsche Bank says that could raise $48 billion a year in the U.S. and could help support low-income and essential workers. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
So do you get tired of people calling you a jazz legend? Do you feel older when they say that to you?
Yeah, I like the word jazz. I don't like the legend.
Well, it's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
The Boston Symphony Orchestra presents BSO at Home. While you stay inside, enjoy a curated collection of archived concerts and behind-the-scenes stories from BSO musicians. BSO Homeschool provides lessons for music lovers of all ages. New performances and messages from musicians are added regularly. Enjoy these selections and much more at bso.org/at-home.
We would love, at the right time and the right way to have a digital bank license. We would almost certainly do that in partnership with a strong local partner, and we would use the technology and the experience that we've gained from Mox in Hong Kong.
I always respected all of my colleagues, but I'm going to tell you that the pandemic has given me such a greater appreciation of the quality of people I've been blessed to work with. Our orchestra, we still have a vast majority of our staff on. We're open for business. We're getting things done.
Wynton Marsalis there, the Jazz at Lincoln Center Managing and Artistic Director. Two reasons we've played that clip. I'll give you one. A little bit later on the Open, we'll be catching up with Kathy Jones of Charles Schwab, which, as we know, Tom, may or may not result in Kathy playing a little tune on her piano for us. So look out for that on Bloomberg TV in the next hour.
John, I'm so glad you bring that up. We do these things, folks. And for starters, let's make this clear. We're completely unrehearsed. John and I, we all know we're not on speaking terms.
I don't think you need to tell anyone that this is unrehearsed.
Lisa's doing, and she's like 42 feet behind me, hermetically sealed away. And the bottom line is, folks, this strange stuff happens. And John, that wonderful moment was picked up by Schwab International at some big confab they had.
Beautiful thing.
To get through the pandemic. And it is really, we really, thank her for playing better than the two of us will ever dream about playing.
For tolerating you and I.
What do you have on Mid Morning Matters today?
Kathy Jones of Charles Schwab. That's who we'll be catching up with.
So
in the
you're
next
done,
hour.
right?
We're doing a piano special through the next 60. I'm stepping away now, Tom. Just to take a breather.
I'm glad you mentioned. Goodbye, John.
Recover from this.
Goodbye, John. Thank you. I'm glad piano matters because that is what it's about. His father was a legend. There's no other way to put it, including starting out Wynton at an older age, 12 years old, I believe, on his instrument. I think of Loston Harris at the Carlisle, studying under Marsalis years and years ago, and it brought on a generation of people who, guess what? They reinvented jazz and drove it forward into the modern age. David Rubenstein, peer-to-peer conversations, and Mr. Rubenstein digresses away from the politics in the moment with a gentleman from Lincoln Center. David, what did you learn in speaking to Mr. Marsalis?
Of course, I learned sadly that his father had died of COVID, and his father was an incredible jazz pianist, and he produced 4 sons who are also jazz musicians. Wynton is maybe the best known of them for the things he's done at Lincoln Center, but also he was a classical musician as well. He actually won a Grammy Award one year for classical music. The same year, he also won a Grammy Award for jazz. Jazz is probably the most American
type of music we have. It was invented in this country. It's personified by so many people in this country, and it's one of our great exports in the music world. Hip hop, you could also say, is invented here, but jazz for almost a century has been the most American, pure American form of music.
Which way would he like jazz to go? We talk of the death of opera. They're all aging. We talk of philanthropists like yourself trying to save classical music. I don't believe jazz needs saving, but which way does he suggest jazz will go?
Well, he thinks jazz needs to be better known. Of course, it's not known by everybody, and it's an acquired taste. But sadly, he and other musicians today aren't able to perform as much because of COVID. So he did come back from a tour recently, but it was unusual. Usually musicians right now all across the country are not able to perform right now because there aren't really live audiences. And it's in a sad situation for the performing artists in our country right now because a lot of them just don't get income unless they perform, and it's hard for them to perform right now. He's an unusual situation, though, because he's so well known. He's doing so many different things, but he worries about so many other jazz musicians and other musicians who cannot perform right now.
David, tell us about the sanctity of copyright. Carlyle's looked at this. I know Blackstone's been involved as well. Jazz musicians survive on copyright. The copyright rates in Europe are much more artist-friendly. Does he feel that people can get paid into the future?
Well, we didn't quite address that, but we did talk about something very important related to that, which is that jazz is something that is it changes a lot. In other words, when you're a jazz musician, you have copyrighted music, but you riff a lot. You keep playing a little bit longer than you maybe were supposed to. You change what was written for you. It's a music form that evolves a bit, and it's not as easy to copyright in some respects. But on the other hand, I do feel that jazz music is probably not as well known in all parts of the country as it is in, let's say, New Orleans or Chicago or New York, right. But it's incredibly popular outside the United States as well. Also, I wanted to point out that he has dealt with racism, as all jazz musicians who are black, no doubt, have done, and all blacks, I presumably, have done as well. And even though he's famous, he does talk about in the interview the fact that he still feels discriminated against, and he felt it when he was growing up in a segregated South. So although he's a famous musician, he hasn't escaped the racism that people of his race have suffered in our country.
David, Goldman Sachs today went exceptionally positive on 2021 and 22, and there's the noise of a vaccine. Of course, a small matter of an election that we're contesting right now. Does David Rubenstein have an optimism like some of the strategists looking forward 2 years?
I think the vaccine news is positive recently, and I do think that some point in 2021, we'll begin to get vaccinated sufficiently to make us be able to go back to work or enable us to go back to work. And I do think the election will get resolved in the not too distant future in some way. It's interesting to me, President Trump is still contesting it, but I've often thought the best job in the United States is being a former president of the United States. You don't have to get blamed for anything, and you can do whatever you want. And if you're a former president of the United States and you maybe could run again, that's even a better job. So if I were he, I would probably say, geez, I might be a former president. I might run again. So he might look at it that way. But in any event, I hope this will be resolved in the not too distant future.
David Rubenstein, thank you so much. Peer-to-peer conversations, a digression here to Wynton Marsalis and the future of jazz. Look for that tonight at 9 p.m. across all of Bloomberg. Really looking forward to that conversation as well. I need to do a data check. It's a data check of optimism, but far more, it's a data check of normality. Mr. Biden talks about normalcy. Well, we have normalcy in the market. Let me do the percentages first. I usually don't do that. It matters today. SPX up 0.7%, the Dow up a lesser 0.5%, and NASDAQ 100 up 1% on futures. That's called a normal day. We really haven't seen that in a good number of days, so maybe that's signaling something. On a Veterans Day, with the bond market closed, the last quote I have on 10-year yield static is a 0.9753, getting closer to that 1% level. The last curve steepening we have on Tuesday 10 was 1.6%, 79 basis points on Tuesday 10's spread. The dollar is stronger, and this has been an abrupt change from the dollar weakness of the recent days. Once again, I think of David Bloom, formerly with HSBC, and others that have talked about resilient dollar. Well, they win again. We had weaker dollar down to a 92 level and now 93.10 on DXY. And the polarity of it all, it's real simple. It's been strong yen against weaker dollar, euro yen 124.05 and euro 117.57, really indicating the weaker euro. I'm sure that John Farrell on Mid-Morning Matters with John Farrell, you'll see that in a bit here on television. And John will be talking, no doubt, about the important speech of Christine Lagarde, which he took from French. I haven't looked at that speech yet because John's French is a little better.
It's pretty good.
It's a
My
little
French is
better.
good.
C'est bon.
French is
I mean,
solid.
votre français, c'est bon, John. You know,
They pulled me back in. I was told you're struggling to time this show.
Get
Got another
through
40
this.
seconds.
Let me get
You're going to be
my walker.
okay. You'll
Megan,
get through
my
this. You can
walker
do
here.
this.
I've got to walk.
You've got this.
I've got to walk
Come on.
over.
You've got this.
Okay, would you get my walker, please? I've got to get over to.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here? It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
I am David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
The outlook for the economy is extraordinarily uncertain and will depend in large part on the success of efforts to keep the virus in check.
They're torturing themselves to explain that they're there, ready, willing, and able.
The Fed has basically done all it can do, with the exception of extreme emergency measures.
We explore the trends, investments, and competition of the European ETF industry. Join us on Bloomberg ETF IQ Europe.
From New York and London for our audience worldwide, good morning, good morning. The countdown to the open starts right now. 30 minutes away from the opening bell with equity futures nicely firmer, up 25 on the S&P. We begin with the big issue, the elusive rotation or another head fake.
Rotation into value has started.
Tech stocks are getting hit here.
There's a little bit of that unwinding going on.
It's really rotation into the stocks and names that have suffered from the lockdowns.
We've been waiting for this big value move.
There's a possibility for this to move further in the near term.
To see a sustained move towards value.
In the longer term,
you need to see inflation expectations moving up.
Interest rates rising. Can we see yield curve steepening?
Don't expect the pace of rotation to keep going like this.
There's definitely going to be some rotation, internal rotation at that over the next couple days.
We will probably also see this cyclical rotation switch back.
The second half of 2021 is really going to be the true test.
This market is bulled up this week. Strategists on Wall Street increasingly expecting stocks to pass that test. Goldman, the latest to raise its outlook on stocks, boosting its S&P 500 targets for the next 3 years in a note titled The Roaring Twenties. JP Morgan calling it a market nirvana scenario, writing the following: the equity market is facing one of the best backdrops for sustained gains in years. We view a confirmed Biden victory with a likely legislative gridlock as a Goldilocks outcome for equities. Joining us now for more, Bloomberg's Sarah Ponzek. Good morning to you, Sarah.
Good morning to you, John. The rotation taking a little bit of a pause this morning, but we've had positive vaccine news, as we just heard from Goldman. Gridlock, Goldilocks. Also, higher yields, but not too high. Still sub 1% on the 10-year. Well, what does that mean? We have the reflation trade. We have the reopening trade. We have small caps, value, all taking off. In fact, if you look at an index of stay-at-home stocks made by Solactive compared to an index, the S&P 500 sub-industry group that includes hotels and cruise lines, well, since April now, hotels and cruise lines are actually now outperforming after an unbelievable run that we saw in the first 2 days of the week, up 16% or so for that index. At the same time, if you look at exchange-traded fund, ETF fund flows, the money is following the rotation. Just under SPY, SPY being that very popular S&P 500 ETF, that's your most popular fund this week so far, 2 days in. But right beneath that, you have IWM, which tracks the Russell 2000, taking a $1.8 billion. Then you've got VTI. This is a Vanguard total stock market ETF. So this also includes small and mid-cap stocks, for example. Now, on the flip side of that, you have a $1.5 billion outflow from QQQ, the fund that tracks the NASDAQ 100. This, as if I bring you the numbers for the past 2 days, the Russell 2000 is up 5.7% in 2 days. Meanwhile, the NASDAQ is down 3.9%, a bit premature. It's only Wednesday. However, if you look at that gap, that would be on track to be the widest dispersion in favor of the Russell 2000 since 2001. Pretty unbelievable. At the same time, if we look at some other smart beta ETFs, looking at the dividend space, also value small caps in particular, IWN compared to SDY, they have really just taken off lately. Neither are too far away from the highs that they put in just earlier this year. I also want to highlight the makeup of SDY. Your top two stocks there are energy stocks, which have performed unbelievably this week. Also, your top sectors, financials, also performed amazingly this week. Wells Fargo Securities saying this morning, banks, it's time. So we'll see going forwards if this can be sustained. A bit of a pause this morning, but it's unbelievable, the remarkable rotation that we have seen, John.
Sarah Ponzek doing a phenomenal job of breaking down the data in the last couple of days. Sarah, thank you. 27 minutes out from the opening bell. Here's the story. Monday, Tuesday, NASDAQ underperformance. Today, just a little bit of outperformance. Let's get to the futures contracts on the S&P and the NASDAQ as well. The NASDAQ fighting higher, up by about 1%. On the S&P 500, up by about 0.7%. The small caps, that's where the huge bid was Monday, Tuesday. Small caps today, up about 0.5%. It's the big question for the next 60 minutes. Another head fake? Or is this the real thing? BTIG's Julian Emmanuel urging caution after the recent rally. He writes the following. The rotation sets the stage for higher prices in 2021, but political uncertainty in the virus leaves us cautious on further near-term gains. We recommend investors protect their gains by buying puts on the Qs. After all, the rally may only be halfway done, but what if it's done halfway? Julian joins us right now. Julian, just build on that for us. What you're thinking in the last couple of days.
Well, so I want to go back to early April when we were convinced that basically the capitulation you saw in March really was the start of a new bull market, fueled by the Fed, fueled by low rates, fueled by what has turned out to be an even stronger interest on the part of a new generation of investors. And what we saw at that time, looking at past bull markets, is that you always have a period of market outperformance of the losers in the last cycle, those having been small caps, financials, energy, industrials. And for us, we saw it in fits and starts throughout the summer, really correlated to when the virus was ebbing and flowing. And as we see now, we think that the vaccine news from Monday is very, very profoundly positive to set the stage for this next leg higher, led by this rotation. However, what we've seen over the last couple of years in this intense volatility environment that we're still in is that the short term can be gut-wrenching both to the upside. Imagine how you felt if you were short at the open on Monday, and by the downside. And when we look near term, there are lots and lots of challenges. So this rotation and the advance in the market in general is by no means a one-way street.
Well, Julian, let's talk about the bad news. The hope on the horizon, the vaccine. We're all familiar with the story of the last couple of days. Over the last 7 days in the United States, we've posted more than 100,000 daily cases. This headline crossed on Bloomberg now. Texas, COVID-19 cases exceeding 1 million. This new wave is getting worse. And, Julian, the question for me, and I think that Monday, Tuesday, when we started to frame this as short-term bad, longer-term good, two different time frames, we're trading on the hope of 21. That's where this market is living. I'm trying to understand, over the next few months, how much bad news are we going to be willing to ignore, Julian?
Well, I would say a lot of it depends on the smoothness of the presumed transition to a President-elect Biden. I would say that his words yesterday afternoon soothed the market, and I think is part and parcel of why we're a bit firmer this morning. We'll see how that process unfolds. But more importantly, because of the political divisiveness in Washington, and I go back to the Fed's, really drawing attention to this concept of economic scarring, okay, if you don't get stimulus to those that need it over the next 3 to 6 months, and in, reasonably large quantity, you risk this scarring where there is a permanent, higher reset of the unemployment level, or permanent lower reset of growth. And if the virus proliferates as it has recently, you risk the possibility of a recession, however short and shallow, but a recession in the fourth quarter and the first quarter. And we don't think stocks are priced for that right now.
Well, where do you think they should be priced? Where would you like to be sitting right now in this equity market? Where are you more comfortable?
Well, again, our view is that the psychology, actually going back to September, the psychology began to transition away from technology, high multiple, high growth. We think that the the vaccine news on Monday is accelerating that transition. We've obviously seen that in the market. From our point of view, that's where the risk lies, because the positioning is still very much in these high growth names. So we do think that downside protection in things like triple Qs makes a lot of sense. And then as we pull back towards the middle of the range, and if you look at Monday, it was a failed breakout, really just an extension of the range, whose bottom is defined in the 3,200 area on S&P. As we pull back towards the middle of the range, that's when we want to be more aggressive about adding to financials, about adding to healthcare, which we think is dramatically inexpensive and has lots of upside next year.
Julian, indulge me at the index level just for a moment with some numbers. Goldman out this morning, 3,700 year-end, previous target 36. Year-end 2021, 4,300. So the upside through to year-end, then an additional 16% upside through next year. Can you achieve those kind of numbers just in your projections without tech leading?
Well, I think the last couple days is telling you that that's going to be a difficult path to achieve. We've done work that basically says what you can't have is material tech underperformance, okay? Particularly given the fact that tech as a sector is over 27% of the weight in the S&P 500, and the top 5 FANG names are over 22%. You can have sort of slight underperformance to market performance, which is why we think that in the main, there's lots and lots of scenarios for that, the roaring 20s upside, and we've spoken about it as well. But it's going to require, real substantial medical progress and the kinds of enthusiasm that we saw this summer in the tech stocks, perhaps migrating to financial stocks next year. Is it possible? Yes. Is it likely? I don't think that we would call that our base case.
Julian, great to catch up. I always enjoy it. Julian Emmanuel there of BTIG. Thank you, sir. In this market, we build a little rally going into the cash open. Let's get you some movers. Here's Abigail.
John, well, yesterday's losers are this morning's big winners. I'm, of course, talking about the tech stocks with the NASDAQ outperformance for those futures. Taking a look at Apple, Microsoft, NVIDIA, Tesla. Lots of these big tech and momentum names really gaining speed today, of course, after 2 down days on the rotation toward value and cyclicals. Let's remember, though, last week, tech, that was the big winner of the S&P 500 sectors, gaining more than 9%. So it is going to be interesting to see what happens here. And, of course, Julian Emmanuel was just talking about the big weighting of these stocks and the importance to the market. So right now, these bulls are out. Where we don't have bullish action, though, John, Alibaba on pace for a 3rd down day in a row, deeply in a correction, almost at a bear market, down about 17%. This, of course, as China is clamping down, trying to clamp down on monopolistic type companies within the internet space. Alibaba is one of the exceptions to the tech strength that we are seeing overall here in the pre-market, John.
Abigail, thank you. Thank you very much. Coming up on this program, the president still refusing to concede this election. Vice President Joe Biden, now president-elect, calling it an embarrassment. Weighing in on the situation in D.C., Federated's R.J. Gallo. That's next. This is Bloomberg.
It came in better than expected, not only in terms of job creation, but also a sharp fall in the unemployment rate consistent with higher labor force participation. That's really good news.
Overall, the gain was solid, but even while this is a very robust pace of job gains, it's a lot slower than it has been in the summer months.
Great that we saw the job gains we did, but they still are diminished from what they were, of course, back in April and May. And the scarring, the sort of wounds that were created by COVID are beginning to fester.
I would caution people to look at the top line number because I don't think it tells the entire story. Employment relative to population is still well below where we were pre-crisis, and that's because I think that we're going to have some lasting damage.
Depending on what you look at, jobs creation or the unemployment rate, you have different views as to whether the improvement in the labor force is keeping up or slowing down.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
We don't have a sort of fixed order of use of tools, and I think that's appropriate. It would always be dependent upon the state of the world and the state of the economy that we found ourselves in.
There will be a smooth transition to a second Trump administration. Right, we're ready. The world is watching what's taking place here. We're going to count all the votes. When the process is complete, there'll be electors selected. There's a process. The Constitution lays it out pretty clearly.
With a little smile, State Secretary Mike Pompeo alluding to a second term under Donald Trump as the president continues to challenge the results of the election. President-elect Joe Biden expecting history to be on his side.
I just think it's an embarrassment, quite frankly. The only thing that, how can I say this tactfully? I think it will not help the president's legacy.
Joining us from Washington, our chief Washington correspondent, Kevin Cirilli. Kevin, a conversation you and I had earlier this morning, I think it's important to touch on it again. On Wall Street, there's no real concern about this. Is there in Washington?
There's a discussion about the political implications of what President Trump is trying to accomplish in his final weeks in office. And yesterday, I think it was incredibly important to note that Secretary Pompeo really did echo the comments coming from Senate Majority Leader Mitch McConnell. They are saying essentially that the president is within his right to pursue a legal route. The conversations that I'm having with sources on the president's reelection campaign, both who are the conversations, mind you, with individuals who are ardent supporters of President Trump, are pointing to confusion. They're not sure. There's no legal document that has been put forth or a series of allegations filed in courts that would lead any Republican at this particular point to suggest that there would be a different outcome other than what the expectation is of these results. And mind you, Senate Majority Leader Mitch McConnell has his eye on the calendar. We should note that on December 11th, they've got to pass a budget bill in order to keep the government open. And then you get into January 5th, where the Georgia Senate runoff is going to occur. That's really why Leader McConnell wants to keep the base here with regards to President Trump's ruminations about the election. And then finally, January 20th, and that's when President-elect Joe Biden will have his inauguration. And it's why you've seen the president-elect roll out those presidential landing teams, Jonathan, just the other day.
Kevin, thank you. Great work as always. You do wonder if that Georgia runoff on January 5th wasn't happening, what this situation would look like down in Washington. RJ Gallo of Federated Hermes weighing in on the post-election uncertainty. He writes the following: although the election is not finalised, the divided government still seems to be the most likely outcome, leading to more moderate policy outcomes compared to what would have occurred in a blue wave. Most importantly of all, election risk is declining. RJ joins us right now. So, RJ, let's build on the conversation that Kevin and I just had. This market is shaking this off. Do you think this market should continue to shake this off? And at what point would you become concerned about the rhetoric down in Washington?
Well, good morning, Jonathan. I do think the market is clearly looking at the most probable outcome, which, as you've reviewed there in terms of what we've written on the subject, is President Biden and a divided government. The Georgia runoffs are a meaningful wrinkle in this whole process. I think in many ways it's allowing the Republicans to sort of hold back welcoming President-elect Biden, in part because they don't want to lose President Trump's base. Let's face it, 70-plus million people voted for President Trump. They want their voters, their donors, to be motivated for the Georgia runoff. Let's hope that once we get past that, this sort of unusual whispers about the unwillingness for a peaceful transition of power now manifesting themselves in court cases, maybe this will all lapse once we get past what's going on in Georgia. But it's very unusual, obviously, in a historic sense.
RJ, you called it a meaningful wrinkle. Is it a meaningful wrinkle for your outlook in 2021, what happens in Georgia?
From the markets and the economic perspective, yes. I think if you were to get the Democratic Party winning both of those runoffs, you'd have a 50-50 Senate with the tie-breaking Vice President Harris. That could open the door to the more stimulative, the more deficit-riddled, policies that Biden has proposed throughout the entire election process, and certainly in many words on his website. That would include larger infrastructure spending, larger subsidies and spending on environmental issues, and higher taxation. So yes, if you do get a Senate that is evenly split in terms of the senators, but you have the vice president breaking the tie, that could be a curve steepener. That could push yields somewhat higher, and we could expedite the conflict between fiscal policy expansion driving rates up and the Fed eager to prevent that from happening too rapidly or too far of an extreme.
RJ, in 20 seconds, what do you make of the conviction people have about 2021 in the last couple of days, given everything you've just laid out?
Our equity guys are pretty bullish. We're risk on and are on the fixed income side of the house as well, because we think that's the most likely and most probable outcome. But probabilities can shift.
RJ, always great to catch up, and I believe that was 20 seconds precisely We appreciate it, sir. RJ Gallo there of Federated. Going into the opening bell, I want to go through the equity futures board for you after underperformance over the last couple of days on the NASDAQ. Just a bit of outperformance going into the opening bell. NASDAQ futures up about 0.9%. On the S&P 500 futures there advancing 0.7%. The Russell, the small caps, Monday, Tuesday, explosive. Just a little bit of underperformance there this morning as well. In the bond market, you will notice the Treasury market in the United States is closed today for good reason. It's not just the bond market that will be pausing now, it's the stock market too. The New York Stock Exchange observing a moment of silence in recognition of Veterans Day and the 245th anniversary of the US Marines Corps.
In the middle of a deadly pandemic that has infected more than 10 million Americans. Nearly 1 in every 32 Americans, often with devastating consequences to their health. These ideologues are once again trying to strip health coverage away from the American people. The American people are more united on this issue today than they are divided. Recently, as last month, a leading survey found that American people want to keep the Affordable Care Act in place by an overwhelming margin.
President-elect Joe Biden there promising to defend the Affordable Care Act while speaking from Wilmington, Delaware. I want to turn to the price action briefly for you. 5 minutes out from the opening bell. Equity futures are nicely positive, up 0.7% on the S&P 500. We advance on the Nasdaq by 0.9%. A few days of underperformance followed up by a morning of outperformance for big tech. We'll talk about that around the opening bell. Let's turn now to the morning call to look at some of the analyst recommendations on Wall Street this morning. First up, Evercore upgrading Yelp to an outperform with a $37 price target. The analyst expressing optimism about the company's ability to recover from pandemic-related weakness. Your second call, it comes from the team at Goldman, downgrading AIG to neutral, a $39 price target. The analyst citing the stock's valuation, saying most of the good news is now baked into shares. That stock is down by 1.44%. And your third and final call, it comes from the team at Susquehanna, upgrading D.R. Horton to positive. After reporting quarterly results, the analyst expecting growth to start accelerating amid the best housing market he's ever seen. That stock is up by 1.5% going into the opening bell. Coming up on this program, futures rebounding with tech leadership returning. Just for a moment, a different story developing out of China. That conversation on big tech in the United States and China up next with JP Morgan's Phil Camporelli. From London and New York this morning, good morning. The opening bell just around the corner with equity futures up 24. This is Bloomberg.
SPF license back in 2016. They've also been granted a license for the virtual bank. They will continue to play an important role in Hong Kong.
Give you a sense of the real-time action. The 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
The opening bell just around the corner. Here's the state of play. Monday, Tuesday, big tech underperforms this morning. Just a little bit of outperformance. Up 102 on the Nasdaq, a little more than 100. We advance 0.9%. On the S&P, up about 0.7%. Switch up the board into the bond market we go. Treasury market is closed today. Worth pointing out, though, at the close yesterday, at the upper end of the trading range of the last 6 months, almost 98 basis points. How much oxygen is there north of that level? We will talk about that as I clear my throat with Kathy Jones at Charles Schwab in just a moment. That's the cross-asset price action. Let's get to the market desk and get you a mover. Here's Abigail.
John, let's start out with that tech strength and the outperformance for the Nasdaq. We do have the tech stocks and some of the momentum stocks, stay-at-home stocks that have been lagging this week, catching back up. Apple is nicely higher, up about 0.6%. AMD, the chip stock, also gaining. Zoom, one of the big stay-at-home stocks, really rebounding today, up 5.3%. And then Lyft getting a boost from a solid earnings report where they reported a narrower loss than expected. But it's a pretty even rally that we have on the day, John. If we take a look at some of the other sector groups, the groups that have been doing so well this week, those cyclical names, they're still doing okay. Not huge moves, but we have Exxon higher, Boeing higher, and Citigroup higher as well. So it's going to be interesting to see whether or not today shapes up to be a relatively normal trading day in a year that is anything but normal, John.
Abigail, thank you. Energy on top, as you point out, up a little more than 1%. In the early part of the trading session, the S&P 500 up 0.7%. Bottom of the pile, it's early days, but materials is the lagging sector this morning. US tech rebounding following 2 big days of losses. A very different story out of China. There wasn't a rebound there for Alibaba. Let's bring in Bloomberg's Candy Lines for more. Hey, Kaylee.
Hey, John, well, it hadn't been a past 2 days that was great for tech stocks, but for Chinese tech stocks in particular. Beijing announcing new regulations to clamp down on the monopolistic power of internet giants, meant to rein in the likes of Tencent, Alibaba, JD.com, Xiaomi, for example. And all of those stocks have fallen at least 11% in the past 2 trading sessions. Now, what's interesting is the timing of this regulatory reckoning was notable, too, because it came right on the eve of Alibaba's Singles Day, of course, its annual shopping festival, bigger than Black Friday or Cyber Monday here in the U.S., and it has been objectively successful this year in the first 30 minutes, raking in more than $56 billion in sales relative to just the $38 billion in sales over a 24-hour period last year. But that entirely overshadowed by concerns about regulatory risk. Alibaba shares sinking nearly 10% in the Asian session on Wednesday. And of course, this all comes on the heels of the postponed Ant IPO, which was already dragging on the stock, as you saw there down some 16% in the past 6 sessions. And what's happening in China also, of course, was coinciding with what had been a rotation out of technology in recent days. But we are starting to see a reversal of that this morning, as you and Abigail have mentioned, the Nasdaq 100 up about 0.9%. And if we can hop into the terminal at GTV Go, we can see maybe a possible reason why, and that is that these stocks are still attractive relative to fixed income. Yes, the yield on the 10-year Treasury is approaching 1%. Once again, that's that blue line. But the Nasdaq 100 earnings yield, which of course as annual profits divided by the share price, is still sitting about 1.8 percentage points above that. That's what we see in white. Yes, that is the narrowest premium since all the way back in February, but it is still a premium and is still right around the 5-year average, Sean.
Kelly Lyons, thank you. 3 minutes in then, we do have that little bit of outperformance on the Nasdaq, up 0.8%. On the S&P, we advance about 0.6%. JP Morgan's Phil Camporelli seeing an opportunity to add risk. He writes the following: this is a supportive environment to take risk in the portfolio. We have an overweight to equity spread throughout the world. The biggest risk is a violent rotation from what worked to what hasn't worked, which we're addressing through a diversified overweight. Phil joins us right now. Now, Phil, I'm not sure what the date was on that particular piece of research, but I believe it was coming into the period of time that we've just worked through the last couple of days. So walk me through how things are working out for you this week.
Yeah, that's right. Good morning, Jonathan. And I just want to say happy Veterans Day to everybody out there. And thank you for your service. Yeah, I mean, 2020 is going to be remembered for a lot of things. But one of the things that it's really going to be remembered for from a multi-asset investing standpoint is this was just an incredible year to take risk if you separated the noise from the signals. And we got a ton of noise this year. So if you think about what's going on this week especially, one of the things that we really believed in was that once we got through November 3rd, and November 3rd ended up being a couple of days later, but once we got through November 3rd, and then with the news that we got on Monday out of Pfizer, those are volatility lesseners, right? Those, and if you think about what the last cycle was all about, the last cycle was all about very accommodative interest rates, which we would agree is happening still, very accommodative credit spreads, which is very important for funding, and very supportive and low volatility that follows really good forward guidance from central banks. Jonathan, that's kind of the recipe that we're taking right now in terms of our risk that we're taking, not just here in the U.S., but around the world. And one of the things that I wrote about a diversified equity allocation, Europe is probably the most unloved asset class, okay? However, it does give a nice value tilt at a time when that sort of rotation we would expect to continue into 2021.
Going into the news that we had, though, this week, Phil, that diversification into Europe sounds more like a call option on vaccine news. That's paid. Now, I want to understand whether that's something you actually want to stick with through 21, because the environment you describe, low rates, potentially low trend growth as well, is fertile ground, fertile environment, not to see the likes of the banks do well on steeper curves and all that good stuff, but to see big tech do well, to see growth names do well.
Yeah, and Jonathan, listen, these are not the companies from 1998 and 1999. These are companies that have exceptional earnings behind them. And I don't think it's hyperbole to believe that we may get the best holiday shopping season we've ever seen this holiday season because of what we saw over the summer. People are really foregoing vacations, but spending the money that they do have on things like retail spending. So those companies are going to stay very, very strong. However, we have seen a historical deviation between growth and value driven by an unprecedented amount of uncertainty about what the pandemic is. And Jonathan, I just want to be clear. No one has ever seen, what a recovery off of a pandemic looks like. And at the very least, we would expect the growth value kind of spread that has opened up so broadly this year to close, which is why we want to have that diversified asset allocation.
So we've talked about the sector diversification, the style diversification. Let's talk about the regional one a little bit more. You mentioned Europe. Walk me through your currency exposure there, Phil. How do you want to play that?
Yeah. So good question. And it's a very important question for U.S. investors investing abroad. Because if you have a dollar that's rallying like crazy, right, that just eats right into the returns that a U.S. investor is going to enjoy. So one of the things that we're looking at into 2021 is nothing really to do with monetary policy. Listen, the Federal Reserve is going to be on hold for a long time, and so are their friends in Europe and in Japan. So they're going to be on hold for a long time. It has nothing to do with a change in monetary policy. But Jonathan, if we're right about the global growth story and what is not a U.S. exceptionalist story, the world emerging from this pandemic in 2021, that's a weaker dollar story, similar to what we saw in 2017. That was the last year where the dollar weakened. Why? It had nothing to do with monetary policy. It had to do with the fact that the whole world was growing together. And those are similar kind of signals that we're taking into next year. So we have pretty much the least amount of dollars that we've ever had in the portfolio right now. And that is really reliant on the global recovery story, not just a U.S. recovery story. So that's very important for U.S. investors to consider when they're going abroad for returns.
So, Phil, if I was you this week, I'd be feeling really good. I've seen that side of my portfolio really start to perform. I've seen Europe really start to perform as well. There'd be one thing that makes me feel a little uncomfortable. Typically, when you get that outperformance in Europe against the backdrop of improving cyclical appetite, you'd expect the dollar story to be different to what we've seen play out this week. Monday, we had a 119 handle on euro dollar. Right now, euro weaker again, down to 117.51. What do you make of that, Phil? I know it's only a couple of days, but it just doesn't quite stack up with what we've seen in the equity market and elsewhere.
Yeah, and I just want to mention, too, that the dollar it's more of a story on those European equity markets doing well than us making a big bet on currencies. But also, Jonathan, we saw the dollar weaken by a lot kind of coming into this period. This is a more intermediate term view into 2021 once the tea leaves start to crystallize around global growth. Okay, so I want to be really clear with that. And the other story too, Jonathan, is we've seen a rise in interest rates, right? And the rise in interest rates is something that I guess in the very near term could be supportive for the U.S. dollar. But we are not of the view. I want to be really clear. We are not of the view that 10-year Treasury rates are going much past 1%. And why is that? It's because we believe that the transmission mechanism between what the Fed is saying and what the longer-term maturities do is really strong, similar to how it was in the last cycle. The only way that you're going to get 10-year Treasury rates to move higher is if the Fed does an about-face on quantitative easing, similar to 2013's taper tantrum. And we think we're quarters away from that, right? So that is not something that we would expect to continue. And by the way, Jonathan, if rates go to 1%, and it's because of growth, that's a really good thing. I'd rather go to 1% because of growth than some sort of gigantic fiscal policy, right, where 10-year Treasury rates look less attractive.
We're a couple of basis points away already, just at the upper end of that range. Phil, fantastic to catch up, and great week for you guys and the team, I'm sure. Phil Camporelli there of JP Morgan. Let's head back to the market desk and get you some movers. Back with us. Here's Abigail.
John, we have to take a look more so at the tech movers on the day because we have that outperformance for the NASDAQ. And for the S&P 500, the top 15 stocks or so, they're all tech or internet related. A real rebound after 2 days of the sell-off around that attempted rotation into the cyclicals. Let's see how that plays out. But Microsoft is one of the top point boosts. We also have Qualcomm, the chip maker, up sharply. Salesforce.com rebounding. They, of course, had that poor quarter a couple of weeks ago and the outlook taken down around COVID. PayPal is also higher. But, John, the top sector on the week, energy, get this, the energy sector right now on pace for its best week ever, going all the way back to 1989. Those movers, those stocks, those big oil companies, once again, a rally. It's going to be really interesting to see how this one shapes up. Because, again, the energy sector right now heading to its best week ever as oil also rallies on the hopes of a true economic rebound.
WTI 42 handle. Abigail, thank you. 42.60 on WTI. Brent just shy of 45 at 44 and around about 80 cents. Coming up on this program, COVID cases surging throughout the United States as the Fed continues to push for additional fiscal stimulus. That conversation up next with the wonderful Kathy Jones of Charles Schwab. That's coming up very shortly right here on Bloomberg.
Every era presents its own unique set of challenges and opportunities. Trade CME Group futures with Interactive Brokers at low cost and seize the moment. Start investing today at interactivebrokers.com.hk.
To stay competitive, the live
served me well.
Ankiti, where do you go from here? It's a huge market, it's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
wouldn't surprise me to see some extension of this fiscal stimulus sooner rather than later, because in this resurgence, we have millions of people who are making ends meet based on the extension of this fiscal stimulus.
This pandemic, I think we're not just going to snap right back to the previous economy. And I think that's unrealistic.
Fed officials urging policymakers for additional fiscal stimulus with virus cases continuing to pile up across the United States. The latest wave hitting the second most populous state hardest, with caseloads topping 1 million in Texas and hospitalizations hitting record levels across the country. For more, let's bring in Bloomberg's international economics and policy correspondent, Bloomberg's Michael McKee. Mike, the numbers are just not pretty at all.
And if you're saying, as most Fed officials are, that the virus is the economy at this point, you don't want to look at the chart that we're going to pull up here. Another version of what you were just showing, the idea that we are seeing record numbers of cases. Texas has had 1 million total. We're getting 1 million for the month, and we're only 10 days into November. More than 100,000 cases for 6 straight days. Hospitalizations, as you mentioned, at a record almost 62,000 patients. That's higher than the April 15th high when New York was the epicenter of the disease. So it has Fed officials speaking out. They've done about as much as they can do, and they all want additional fiscal help. A whole host of them yesterday, starting with Robert Kaplan in an interview here on Bloomberg Television, Eric Rosengren, Randall Quarles, Esther George, Loretta Mester, Mary Daly, and Pat Harker, as we just showed you, all saying the Fed needs help out there and Congress should do something. Eric Rosengren perhaps put it best and in a very succinct way, saying, without effective public health policy, the virus will remain the major source of economic problems. You heard Robert Kaplan say 2 bad quarters ahead. The problem is, up on Capitol Hill, they're making no progress. Right now, it looks like the Speaker of the House, Nancy Pelosi, isn't ready to back down on her demand for more than $2 trillion in stimulus. And this is what Mitch McConnell, the Senate Majority Leader, had to say yesterday. It seems to me that snag that hung us up for months is still there. He wants targeted and smaller relief. So for right now, the Fed is crying out for help, and nobody's answering.
Michael McKee, great work as always. And this is the issue we've been grappling with on this programme for the last couple of days. The 2 different time frames we have to work through here. In the long term, on the horizon, in the medium term, next year, that's where this market is living right now. The hope that a vaccine materialises. Some encouraging news this week. We're going in the right direction. In the here and now, through to year end, we've got to work through a different issue. Society has to work through the next 3 months. That's the world we're living in. This market is trading in the back end of 2021. Kathy Jones at Charles Schwab discussing the pandemic's impact on Treasury yields, writing the following. A vaccine is a game changer for the bond market. We have raised the upside of our forecast for 10-year yields for the first half of 21 from 1% to 1.6%. We assume the Fed won't alter its easy monetary policy stance until at least 2022. If they pivot to tapering early, then it would alter the outlook. Kathy, I'm pleased to say, joins us now. Kathy, wonderful to get you back with us on the programme. Just walk me through that target upgrade for the yield, at least, on the 10-year.
Sure, and it really is on the back of the vaccine news. We've seen the yield curve actually steepening all along here as the economic data have come in somewhat stronger than anticipated, while the short end continues to be anchored by expectations that the Fed stays on hold till about 2023. But we think the long end can make a bigger move if we really do have a vaccine in sight for the second half of the year. We had previously been factoring in maybe the second half of 2022, 2023 to have fully up and running. But all of the evidence now is suggesting we may get it sooner rather than later. So we had to up our Treasury yield target for 2021 on the basis of the idea that we'll probably get a vaccine, or we should be able to get a vaccine from what the experts are telling us, and that opens up economic activity in sectors where it's been depressed for quite some time.
Kathy, a couple of years ago, if I'd asked this question, I would have sounded nuts. Maybe some people still think I'm crazy, but 1.6 on a 10-year, can this economy, can this market, can risk appetite handle 1.6% on a US 10-year?
I think it can if it's associated with stronger real economic growth. If it's not all just inflation expectations or a shift in expectations, say, about what the Fed might do. But if it's a steeper curve because we're getting better real growth, then I think 1.6 is certainly not out of the question in terms of the market handling it.
So the risk right now is where people thought safety was a number of months ago. In the equity market, that's big tech. In the bond market, it takes you to treasuries. You're looking for a move from around about 1 from where we are right now out to 1.6 in the first half of 21. Can we sit on credit just for a moment? People thought IG was safe, that the triple B, double B space, double Bs particularly in the high yield segment of the fixed income market, that was safe. That was a hot spot. That was a sweet spot of the bond market. Kathy, is that follow the Fed strategy still okay?
Yeah, I think it's still okay. They don't look to be abandoning it. We've liked the fallen angels along with, most everybody in the credit markets because we thought that Fed backstop was enough to keep valuations pretty secure there. And I think it's still okay. We saw credit spreads really come in a lot over the last couple of days when this news came out. So they're back to, relatively low levels, and the absolute yields are quite low. But I think credit can maintain it, again, if it's off the back of real growth and not associated with, some other factor in the market. Would I call it a safe haven? No. I don't think there's any substitute for treasuries as a safe haven. But if the story is we get better growth with a vaccine in the second half of next year, then I think credit hangs in there.
What is the haven into year end? Kathy, I ask this because it's pretty clear the trajectory we're on right now. We could see a difficult few months in the United States, in Europe as well. Next year, I get it. The hopes and dreams of 2021, I'm with you. We've all got that structural bias, that psychological bias to want it. Talked to Guy Johnson about that yesterday repeatedly. Kathy, can you tell me where the safety is into year end in this market?
If you really just want safety and liquidity, you have to be in short treasuries. I don't see. I know there's a lot of other. Else. Yeah, there's a lot of talk about other places to be, and they may outperform. But if push comes to shove and we get another liquidity squeeze or some sort of outside event that's really scary, you're probably going to want to just be in short treasuries. And they don't yield anything. The return's not going to be great, but they hold their value, and they're probably liquid because the Fed will make sure liquidity is there.
Kathy, a brilliant strategist and a wonderful piano player as well. Great to catch up. Kathy Jones of Charles Schwab there on this fixed income market. Let's get you more price action. Equities advance, the Nasdaq outperforms with a sector price action. Here's Abigail.
John, on an absolute basis, we do have a risk-on sector composition for the S&P 500. If we go into the Bloomberg terminal and take a look at the IMAP, most sectors are higher, so that's clearly risk-on. However, when we lift the lid just a little bit more, per 2020, the top sectors are this year's defense, tech, discretionary, and communication services, all those tech, momentum, and internet names. On the other hand, on bottom are what had been this week's winners and probably still are actually on a 3-day basis. But the financials, industrials, and materials, those cyclical sectors, are lagging on the day. But I want to highlight something that we were talking about earlier, energy right now. This is extraordinary. This is just based on 3 trading days. Energy is the top sector on the week, up about 17.5%, heading, John, to its best week ever, going all the way back to 1989. This is the degree of the bullishness, the optimism that was sparked by Pfizer's vaccine possibility announced earlier this week. And as you know, oil is having a monster week, too, up about 15%. Its best week since May, John.
This market's having a monster week. Abigail, thank you for everything over the last hour. Brilliant work, as always. Coming up on this programme, the market-moving events you need to be watching. That'll be next in our trading diary from London and New York this morning. Good morning. This is Bloomberg. 25 minutes into the session, here's the price action, up 0.6% on the S&P. The underperformance in big tech Monday, Tuesday, replaced by outperformance on the Nasdaq today, up by 1.5% in the early part of the session. Here's the day ahead, the trading diary. President Donald Trump participating in a Veterans Day ceremony from Arlington National Cemetery at 11 a.m. Eastern Time. President-elect Joe Biden planning to meet with his transition team later in the day. US CPI coming up on Thursday morning. Plus, you are going to hear from a lot of people in the next couple of days in the central banking world, including Fed Chair Jay Powell from the ECB Forum. And finally, on Friday, we get US PPI and University of Michigan consumer sentiment numbers to close out the week. That's the week ahead. From me to you all, for our audience worldwide, 26 minutes in, the equity rally continues with a different flavour to it. And I should say, with a final word on this Veterans Day, if you have served, if you are serving, from us all, thank you.
Q2, the hospital admissions here in the United States, down 13%. Emergency room visits at the hospitals, down 33%. And elective surgeries, down 70%. And we think all that will recover to its baseline trend, which is growth, and will recover within 1 year of today to 100% recovery. So Marathon is very focused on what's going on in healthcare. And we just put a $125 million commitment where we funded a company called Acquisitive and bought the royalty of this Parkinson's FDA-approved drug. Marathon purchased the royalty called Kenobi and is receiving a fixed percentage of global sales. Our partner is a great company called Synovian, great CEO, strong balance sheet, and great ability to distribute this pharmaceutical, this drug on the marketplace. So we're very happy with that. And we have a medical advisory board, leading scientists. Shout out to my Dr. Evan Bedell here at Marathon, who's doing an amazing job.
Absolutely. So, Bruce, are you going to provide rescue financing to places like hospitals and so on? Is that also part of what you're looking at? And on the airlines, do you see yourself providing some rescue financing to some of them?
It's rescue financing. We've already done that with a couple airlines outside the United States, and we'll do that with more. And it's everything from waiting for the bankruptcy and providing a DIP loan to securing up against, their aircraft or their gates or their royalties programs in terms of points. And there's all kinds of opportunities, including in security form, ETCs and double ETCs. And so how we play that is, I think, company by company, depending upon their assets, we're avoiding anything in aircraft that are wide bodies, focused on narrow bodies, and focused on midlife aircraft as opposed to end-of-life aircraft. At this point in time, we think that's the best point of inflection for value and what we're trying to accomplish.
And in healthcare, is it hospital groups, distributors, suppliers, supply chains?
Everything. I mean, think about the services that happen around an airport. We mentioned Hertz, but you think about any concession.
No, I mean healthcare, Bruce.
Oh, back to healthcare. So, we love the healthcare sector, and it's something we'll continue to commit capital to. And when you think about everything from the hospital corps to the insurers to the pharmacy benefit managers to elective care, devices, and pharmaceuticals, the sweet spot for us has been funding companies' growth and buying royalties in order to do so in a senior secured basis, as well as some elective surgeries and some of the essential care around hospitals, because we've been able to buy that debt at 60 to 70 cents a dollar, which we believe are strong companies that have just had a temporary setback, but is a par plus recovery.
Bruce, we have to leave it there. We are out of time, but thank you so much for all of that fantastic information there from Bruce Richards, Marathon Asset Management Chairman, CEO, and of course, co-founder. From New York, this is Bloomberg.
We don't have a sort of fixed order of use of tools, and I think that's appropriate. It would always be dependent upon the state of the world and the state of the economy that we found ourselves in.
This is Bloomberg Markets. I'm Vonnie Quinn. Time now for a stock of the hour. You think big tech names in the US are falling out of favor with investors? Well, there's a wholesale repricing happening with China's Alibaba. Scarlett Fu has details. Scarlett.
Yeah, that's right. Alibaba has had a rough November. First, of course, you had Beijing unexpectedly cancel the IPO of its Ant affiliate. Then the government made clear that it's cracking down on the internet sector overall by publishing new antitrust regulations to govern the biggest homegrown players. And you can see that line down there. But Alibaba shares that plunged 11% in the first 2 days of this week. That's the repricing taking place. Now, the bleeding has stopped for now after Alibaba posted $75 billion in sales during Singles Day, which is its equivalent of Prime Day. That's almost double the tally from last year. Singles Day, much more important this year after revenue last quarter grew 30%, the slowest pace ever for a September quarter. Singles Day, of course, Vonnie, also a barometer for overall consumer spending in China as the country recovers from the pandemic.
Scarlett, indeed. And of course, what did we see? Something like $75 billion plus US dollars spent on Singles Day?
Yeah, $75 billion plus spent on Singles Day. It's a pretty banner number here for the Chinese e-commerce giant. I also want to talk about what's going on in US big tech as well, because there's a clash of storylines with, of course, big tech doing so well this year, but then coming under pressure now because of the shift into cyclicals, which raises a lot of questions. If big tech stalls out, what happens to the broader stock market? David Costin over at Goldman Sachs says if the big five names are flat next year, then the S&P would climb 9%. If things are better and the big five names gain 5%, the S&P 500 could be in a position to rise 16%.
Amazing. Scarlett, thank you very much. That is Scarlett Fu there. Coming up, more on today's market moves. This is Bloomberg.
Welcome to Open Trading.
The big concern is climate change. We can see the global warming accelerating at the moment, and the goals that we must hit are so ambitious. It's 1.5 degrees by 2050, being climate neutral in terms of emissions by 2050. That's a huge challenge. We have to reduce emissions by 50%, 2030, 2040 again. It's very, very ambitious, and mobility plays such a crucial role in there. One thing is to do it in developed countries. I think we're going to get there by 2030, but then the rest of the world, and that's just as important. If you look at developing countries, emerging countries, that's where probably the biggest challenge we are going to face, to also deploy EVs there and make mobility greener in those countries. I know it's possible to move mobility forward fast enough to be able to do its part in this fundamental threat that we're facing.
They have been here for quite a while. They have obtained the SVF license back in 2016. They've also been granted a license for the virtual bank. They will continue to play an important role in Hong Kong.
We explore the trends, investments, and competition of the European ETF industry. Join us on Bloomberg ETF IQ Europe.
I'm Mark Crumpton with Bloomberg's First Word News. President Trump has won the state of Alaska. That gives him 3 more electoral votes, pushing his total to 217. Joe Biden was declared the winner of the presidential election after flipping Pennsylvania, Michigan, and Wisconsin. Mr. Trump won those states in 2016. Mr. Biden has 290 electoral votes. Congratulations have flooded in from across the world for Mr. Biden, but one world leader who has stayed silent is Russian President Vladimir Putin. The Kremlin says President Putin won't comment on the U.S. election until all legal challenges are resolved. A senior Russian diplomat says Moscow was put off by an experience in 2016 when the Russian ambassador to the United States was criticized for reaching out to the incoming Trump administration. Iran continues to increase its stockpile of low-enriched uranium far beyond the limits set in that landmark 2015 nuclear deal with world powers. That's according to the latest report from the watchdog International Atomic Energy Agency. Iran has repeatedly violated the nuclear pact since the U.S. withdrew from the agreement in 2018. A warning today from New York City's mayor, Bill de Blasio, says the city has one last chance to stop a second wave of the coronavirus. On Twitter today, Mayor de Blasio wrote, quote, "We can do it, but we have to act now." New York City's 7-day average of people testing positive for COVID-19 is approaching the 3% public health safety threshold that would force a citywide shutdown of in-class instruction in public schools. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg.
Live from Toronto, I'm Amanda Lang. Welcome to Bloomberg Markets.
And from Bloomberg World Headquarters in New York, I'm Vonnie Quinn. We're now joined by both our Bloomberg and our BNN Bloomberg audiences. Here are the top stories we're following from around the world. Tech stocks lead gains after Tuesday's rout. We'll discuss the latest on the markets with John Stoltzfus, Oppenheimer Chief Investment Strategist. Then, thoughts from TIAA CEO Roger Ferguson. Potential choice, in fact, for the Treasury Department under President Biden. We'll hear about inequality, race and politics. And corporate America stockpiling cash. As virus cases surge in the US, some of the most embattled names in corporate America are racing to raise easier money ahead of an uncertain winter. We'll discuss. Amanda.
And Vonnie, we are seeing a bit of a rally today, a move back into some of the names where you might have seen a bit of profit taking. Some market watchers suggest techs are doing very well today. The biggest names, those that led this market higher, are leading once again today. We are seeing a bit of a mixed picture out there, so it's not one of those days when everything is moving higher. We do have decliners. Materials and energy stand out in that group. Rate sensitives continue to do well. You can see in Toronto, the market is also moving higher. We're watching, of course, that 10-year yield, and particularly watching it as it approaches 1%. We have seen a bounce off the bottom. Now, the 10-year, of course, along with some equity investors looking ahead to that vaccine, a big pop on the news that the vaccine from Pfizer may be here sooner and be more effective than had been expected. So a big move in terms of economic outlook, now being tempered elsewhere, but still that yield is pushing up to points where you might start to see it act as a bit of a catalyst for a rotation. John Stoltzfus is with us, Chief Investment Strategist at Oppenheimer Asset Management. John, great to have you with us. And that's really where I wanted to start. I mean, we know equities are forward-looking, and so depending on how far into the future they look, they can feel quite good. But they could still be tripped up on the way from here to there. So what are you watching in terms of these markets, and what might act as a drag effect?
Well, on a day-to-day, Amanda, what we're watching is this process of rotation that's been taking place and rebalancing, but it goes on a day-to-day basis. One day value leads, the next day growth leads. It would seem that we are, even as we edge higher, there's still some kind of a sideways motion here as the market really awaits for that vote on those Senate elections that are carried forward in Georgia, the runoffs on January 5th. I also think the market is probably considering December 8th, which I believe is the last day that the Trump administration can contest the election. So I think there's a little bit of nervousness, but overall, what we're looking at, the market is looking ahead, likely an economic recovery on back of some point that we will arrive at when one of these vaccines is able to stem the spread of the virus. And I think we got closer to it. We're certainly not the only ones that think so.
John, though, I mean, what about the idea that a lot of the uncertainties are now priced out? Are you saying that there is more room to run if indeed, you know, something else happens in January with the Georgia runoffs?
I would have to say, Bonnie, if the Republicans do not maintain their control of the Senate, we don't think the market will digest that easily. Ultimately, the market, like businesses like water, and will find a point of least resistance to move forward. But near term, it could have a problem with that. I think the market, the underlying thematic here, or one of the underlying thematics outside the COVID story, is the one that the Republicans are likely to maintain their control of the Senate. And in that, the feeling is you have checks and balances on Capitol Hill with an opportunity for hard-won negotiation as a hope. And we think that's very possible going forward based on some changes that we've all seen occur in the last week or so.
Do you worry at all? I mean, well, let me put it this way too, John. Does this feel like a healthy market to you? And I know we can have a conversation about relative valuation and, you know, where there are still places where things look fairly valued. I'm watching these markets and seeing double-digit percentage moves in big stocks, and that doesn't feel like a really healthy, it feels like a trading market to me rather than an investing market. But what's your take on what you're seeing?
You know, Amanda, I think it's a combination of two things. It shows that there's different levels within the market. Part of it's traders, part of it's investors, and you've got to figure that on the down days when people seem to throw out tech as if we'll never use a chip again or we'll never download anything from the clouds again. On those days, you've got to figure the investors, if they're smart, are likely adding to it as long as it falls within their parameters of risk and volatility. And then on the other end, you've got to figure the traders that are having a ball on the day-to-day changes that they see. Ultimately, the secular trends are very solid here. It's technology and globalization, both of which are reiterated at this point as far as we can see. And value has an opportunity with a broadening appetite